Good morning again, and welcome to day 2 of REDeFiNE Tomorrow 2025. I am Tanwa Apontip, your MC for the day. If you joined us yesterday, you know we explored a wide range of topics that are shaping the future of blockchain and finance. Today, we continue with equally exciting conversations from on-chain data, decentralized AI, next-gen apps, and more. Let's get started.
Hello. Thanks, everyone. Again, thank you for joining. Obviously, REDeFiNE Tomorrow 2025. Our panel, our fireside chat today is Making Markets, the Art of Crypto Liquidity. My name is John Lagman. I work for Bloomberg. I'm the APAC Crypto and FX Workflow Specialist and Strategy Lead, very long term. I have the joy of being able to talk with Johan Turpin. Ironically, I was saying earlier, I think it was 2022 was the last time we were on a panel. And I think 4 months later was November, and we know what happened then. But Johan, I mean, anyone in markets should know Wintermute and should know you, but maybe just for those who may be, just curious and joining this chat, could you, give a kind of brief introduction about yourself and Wintermute?
So about Wintermute itself first. So we started in 2017. Sadly, not really at the time of the ICO wave, but more generally like in the winter of 2018 as such, between the time we set up the company and then we really started fundraising. We've grown to be essentially the largest spot crypto market maker in the world, so spot crypto trading firm as such. So we do 10 to 15% of the volumes globally. Trade about 450 tokens, trade up to about $36 billion every day, and have grown over time to just cover more and more institutional products. So we're quite present in DeFi, CeFi, OTC as such. Broadly based, or basically born in London. We've met in Singapore actually, so we set up an office in 2021 in Singapore, and now finally a week ago, two weeks ago, basically have our first New York office. While having had some presence in the US for some time, but then we can discuss that in more detail later. But essentially now more 3 centers as such. Even if it's very much a representation office at this stage, there's no trading per se happening in the US. And I said for Wintermute, I mean, so I'm one of 3 co-founders originally. I'm the one who's got the foggy title of co-founder as opposed to my co-founder and CEO Evgeny. So I tend to be the ninja co-founder. Basically, I'm the one who built more the trading side and the ecosystem side, I should say, and then the BD side of the business and the venture side of the business, and and trying to look at the next frontier as such with Evgeny, and very much helping and guiding the Asia growth nowadays. So in Korea at this stage, spend a lot of time in Japan. So it's more Northeast Asia at this stage, but obviously, Thailand is a big center of interest as well. And then just seeing how we interact with smaller Southeast Asian markets as well. But essentially, I'm a former trader and a fourth time entrepreneur with Wintermute, mostly in fintech trading related ventures, and sometimes more on the venture side. So still investment related, but venture studio side as well. For the last 15 years now, and planning to continue for some time. So that's it for me.
Okay, great. So as you said, you co-founded Wintermute in 2017. So you've definitely been through quite a few crypto cycles and stuff. I mean, maybe looking back on your early days, was very largely retail driven. And as you said, you're seeing more institutional, the landscape becoming more institutional, or, how's your kind of approach to how Wintermute approaches market making changed? Or if it has, or maybe it has not.
It has. So I would say 2 things. We we were generally building and started in crypto with the view that the market would become more institutional. So part of my pitch in seed one in 2018 was very much when BlackRock has like 1% of their AUM in crypto with golden. The total crypto market cap, I think, was about $300 billion at the time. It was about a tenth of where it is now. It is interesting to see that it not only took like one extra cycle, but basically 2 cycles to really go and get this sort of names, and getting Larry Fink to do some of the evangelization to talk about crypto as well, as much as we do. It's changed a lot over the years. So I think I'll hint on some of the points we're going to touch on later, but I would say we've been very much with the view of being builders first. So we had a view of doing DeFi from late 2018, early 2019. So it was very much on screen and on chain first, and this is where trading was happening. From the late 2019, we saw first few OTC blocks or so, which were more essentially helping some exchanges to address some large customers' blocks. That was one of the hint of like it was more VIP whales or so, as we call them in crypto space, and more large not necessarily institutions at that stage. We saw Brevin Howard, Paul Tudor Jones, and so on, starting to write those letters and being a bit more vocal about them, about their interest in crypto, like June of 2020, as far as I remember, for Paul Tudor Jones' letter. And then essentially, I think Brevin announced the crypto funds and so on, and it's more institutionally driven crypto funds in late 2020, when Bitcoin was around, sort of moved from like 10 to about $16,000 or so. And at that stage, we had so if you think of our volumes in 2021, which was a fairly busy year for us, it was 90% on screen as such, so very much on exchange, centralized exchange, 5% on chain, 5% OTC. And you compare that with 2024, which is essentially 15, nearly 20, sometimes even 25% of the volumes in a given day are OTC. And then DeFi, to my despair, DeFi stays at 5%. There's been a bit like a user acquisition on the DeFi side, but still just stays around the same volume levels. And the rest is what we call CeFi, essentially, so centralized exchanges like Binance and Coinbase and others. So there's definitely like a big market into the business and how institutional trading has evolved as such, and I've really just entered the space. Mostly through blocks, mostly spot blocks. There's some interest and some growth on the derivative side. It's still more delta, what we call delta replication as such. It's much more CFDs that are really growing, as opposed to options yet. So the option market in crypto is still tiny. It's actually fairly institutional from the start on the option side. It's fairly well dedicated. There's a lot of traditional market making firms that actually do some crypto market making in options on screen at least, but essentially it's still a tiny market. So I would say OTC has grown, institutional OTC has been a big sign of institutionalization of the space.
I see. I'm curious. I mean, obviously you were talking about how the OTC volumes grew from, let's say, 5% of your overall mix to about 25%. So, if looking at your numbers for 2024, easily the growth was 313. And as you were saying, I guess derivatives or options have been, it's been very institutional. And from an options standpoint, I guess it's been small. Kind of curious, coming from TradFi, do you feel it's too small in comparison to where the option markets are in a lot of, say, the markets that you traded before?
Also, as a former option trader, I would really love it to. So it's for guidance, it's option volumes are essentially 1.5% of the total market, while in TradFi is 25, sometimes 30% of an overall market. So it's very, very small. There's a few reasons to explain why that is. I think institutional volumes are still a small part of the overall mix. So, options options are not for everyone. Like it's very much you need to you need to understand what you trade, and then yeah, I think that's one of the explanations. So it's not there's still a lot of retail volume happening in crypto. So that's what's part of the mix. I think it's also that most people would go for options in terms of for the purpose of very much hedging or speculation in terms of getting higher leverage. And then you already have, I mean, through perpetuals and futures, you already have a very high access to leverage in the crypto space. So I think this is one of the limiting factors that people wouldn't go for options to just go and try to get higher leverage. And then I think the education, the level of education piece is key. Now, I think it's just part of the problem. I think CME, like there's a few very legitimate traditional finance exchanges that have access, that a lot of TradFi funds and institutions have access to through their traditional market activities. They don't really have the volume is not really happening there. The volume is really happening more, on Deribit, and Deribit has had this whole path of like moving out of Holland, moving to Panama, moving to Dubai, and so on. So I'm curious to see how the Coinbase acquisition will actually just help legitimize the exchange enough to make sure that people can trade on exchange. So I think that hasn't helped institutionalization of the option space. We more and more options for this. So that's very much that's a real institutional adoption of options for sure. But it's very much it's bound by these bilateral agreements essentially, so that the growth is a bit bound there. I think to also just give even more context on potential things that limited the growth is, I think maybe there's just plenty of opportunities and volatility and the underlying assets. You already trade like 60, 80, 120% sometimes volatility assets. So I think maybe there's enough, or something that's high enough to be difficult to underwrite for risk officer like at a hedge fund or so. So and then the key that continues is a USD or like the general margining in crypto can be expensive for these sort of things. So I think it's also another limiting factor. But in general, I'm quite hopeful that the whole series of things that it's one of the things I work on quite often is just trying to get profit banks, for example, or family offices to get more acquainted with the space and trade some of the derivatives there. When you get to a point when there's enough level of education to get a private bank to trade structured products, for example, then you get a whole industry of things where you get someone trading a structured product, needs to be hedged at the bank level. The bank trader needs to hedge with vanilla product, and then it probably comes to people like us, and then we need to hedge ourselves. So basically, we end up trading through the open market as such, through any crypto derivatives exchanges. So you kind of need this, and then often together you need a long enough duration and a high enough vol, and customers who really understand enough the products together. So I think this is really happening, but it takes a while, to be honest. Maybe by next the market,
Yes, hope so. I mean, I think ironically in 2022 we were talking about hopefully the options market would grow then, and I think at the time, remember, there's these DeFi option vaults and all that stuff. So, but I do agree with you. I mean, education is always key, right? And stuff. So, but one thing you obviously you mentioned about how your background options trade and all that. Obviously, also I know you have a strong background in HFT from like Optiver, and if I recall, some of your co-founders also, maybe other firms, maybe IMC. I apologize.
No. 3 co-founders are all from Optiver.
Optiver. Okay. Okay.
He's also and our first CTO also was correct. Tell me.
Okay. Well, I mean, was it like when you first started in 2017? I mean, for those who also, let's say, maybe TradFi now and looking to transition, what have been like Obviously, 8 years in crypto is like a long time, but maybe looking at originally when you transitioned from that kind of background to crypto market making, were there certain kind of lessons you learned, and if possible, are they still something that people will learn now, or obviously the market has evolved, or maybe it hasn't, since the size of, at least for options market, hasn't.
So I think you need to think of crypto as nearly two different markets. There's a DeFi aspect to it. There's an on-chain aspect to it. That's very, very different from TradFi. Where we generally have smart contract developers hires that are very different from the sort of the quant dev traders that we have on the CFI side. They are different hires. We have a few employees who've switched sides over the years, but it's more the exception than the rule. So that's one aspect of it, while like the DeFi side of it, the handling on chain, handling transfers, handling different chains. That's actually very, very different from TradFi. There are aspects that are, as the space evolves, essentially the space is becoming more and more technologically sort of friendly and interfacing with TradFi more and more, because if you think of 2017, and if you think of like things like stablecoins that came up just because people didn't have access to, you couldn't really swap BTC for fiat so easily, so people came up with stablecoins because they wanted because the banks were not open over the weekend, or because essentially they just wanted to implicitly be short Bitcoin, for example. So some of the innovation happened because there was no interfacing between essentially crypto and TradFi. Some of the things that we offer to some FX platforms nowadays, like CFDs, is purely like, it's very much a TradFi product. That's not new as such, but it's only really grown very recently. There are things that are very different from TradFi that you have to really keep in mind in crypto. That's really led to how we build a business. And so if you think of, we discussed my role a bit earlier, but my first title was head of trading, but it wasn't really head of trading that was needed. It was much more of a head of ecosystem and just plugging and connecting with exchanges and plugging with capital. Because still today, there's only a few similarly prime brokers out there, but there's no real there's no fluid access to the crypto market, essentially. So exchanges are custodians themselves, so it makes things a bit different, but essentially you cannot have like a PB that you just connect to and then suddenly they give you a direct market access, and they give you financing, or they source inventory for you. It doesn't exist. So we had to aggregate very much the capital ourselves, and we had to aggregate, and then that's why hence the interest in us, and the fact that we build a whole business development arm to the business, essentially, is that you had to source inventory from foundations directly, essentially. So you just have to go to people and borrow from them if you generally want to trade market neutral. Of course, if you want to buy inventory and so on, you can take that at risk, but it means there's a few issues around scalability, and then why do you find again that capital to go and buy these tokens, and do you want that exposure? It's a different business, So I think there's all these aspects are very different from traditional finance. Now the on exchange, the CFI, what we call CFI, such centralized finance, the on exchange trading just looks more and more like TradFi very much, and some of the API offerings that we have are very much fixed. They're very much TradFi friendly. Like if you come from TradFi, you can integrate with our APIs very, very easily. So I think there's a whole part of the crypto space that's very much there to help TradFi interface with it. So yeah, so there's two big facets to it.
So one of the things you talked about in your introduction is obviously that I guess 2 weeks ago you opened your brand new office in New York. Talking about U.S., and maybe we can avoid talking about immigration and all that, but how does the regulatory landscape under the new administration, did that make it more favorable or less favorable for you when you approach the U.S. expansion? And are there specific opportunities that you see?
Yes, I'm absolutely not qualified to talk about immigration, even if I'm an immigrant myself in many countries in many ways. But stick to like the new presidency, let's say in the US, and if you stick to what is done to crypto and as such, and I think it's been big, yeah, breath of fresh air, to be honest, for us especially. So we had made a very conscious decision of not having an office in the US for many years, and um, we found that the previous administrations or the previous chairmen of the SEC were just pretty unfriendly. So I'm very very happy to see the change. Um, I think you need some regulation to a degree. I think it's a bit of like you want to drive on the road, but you're just happy that there's the signing, that you're happy that there's barriers, safe, there's happy that there's stop signs sometimes. But you cannot drive a car if there's only stop signs everywhere. So it's a bit of like finding the balance is always the art, and is part of the game really. We have actually announced it recently, but we've hired I don't like necessarily the term lobbyist, but we've hired someone to represent us and actually interact with the crypto task force. My co-founder and my CEO were actually traveling pretty often to DC and so on in the last few months to talk to the crypto task force, and we've been very, very happily surprised and like how receptive they are. And I think there's a perception that like a lot of governments or a lot of regulators just understand crypto, but then actually, I think there's still a lot of research to be done, and I think a lot of the groups and across many countries, to be honest, it's not necessarily US in particular, but I think it's tricky on. I think we just want to make sure that DeFi is not misunderstood, essentially, so I think it's just very useful to be part of the dialogue. Before that, we had made a very conscious decision of being mostly London-based as such, and so between London and Singapore, and very much separating the business, so spot in London and derivatives in Singapore. And then just we also had made very conscious decisions and limiting our own business model to make sure that we could trade as much as we wanted across assets, which means that we only face institutions, and then we only trade our own capital. So if you do this, you very much reduce the regulatory risk as such in a very big way. And then we're quite looking forward to do a lot more in the US. I think it's going to be, especially from New York, it will be a very, TradFi. I don't know if we'll trade TradFi products even to a degree from there. That's for much longer term, but I think we'll definitely face a lot of TradFi institutions that want to get into crypto from there. We have other aspects of the business where we can have synergies with the US in general, where we see we have a venture arm and there's a lot of talent in the US. And then we do not manage anyone else's money, but we do borrow. As I mentioned, we aggregate the capital ourselves. There's no prime broker. So the leverage we get it from family offices, we get it from hedge funds and so on. So having more presence in the US is just very useful, because whenever you borrow, whenever you raise capital in general, it's a trust, it's very much trust-based relationship. So you just want to be able to meet people and build that trust.
Understood. So, one of the things I remember, again, sorry not to bring back 2022, that we had talked about, I think on a panel and stuff, was, obviously you had brought up, your view that sometimes in the markets or certain exchanges, there might be a bit of like market manipulation or whatnot. I mean, being such a large market maker yourselves, I mean, how do you guys kind of make sure, if your market concentration is quite large on, I won't name any exchanges, how do you guys kind of address that to avoid maybe the same kind of issues?
In terms of the FAD that we sometimes often have to address, and I think there's many facets to it. I think so. From 2018 at least, we put some articles out there essentially denouncing market manipulation as such. We think it's not only very bad practices, but I think I personally think that it leads to also bad things, even bad outcomes as a business in general. It's not only like even if it was legal, we wouldn't do it because it just leads to essentially false standards. So like imagine, you know, John, suddenly tomorrow you are the head of Wintermute and you have a practice where somehow there's somehow employees are market manipulating somehow. And then
Yep.
you know, if it leads to false standards, like how you can even trust them for the daily job? You know, and then you
Yeah.
see that the consequence, you see that sort of the poor culture, poor standard, poor culture. You see that in some of our, I don't call them competitors, I call them wannabe competitors because I don't consider we play the same game. And then
Mm.
the tendency in people who do crime per se, or who you know, basically just have a they would want you to think that they're the same person, or they're the same sort of entity, same sort of they're in the same business because they want to normalize, you know, crime essentially, and we really don't want that. We very much consciously make an effort to actually make money the right way. We basically, you know, make, you know, less than a basis point per trade as such, and then and we build infrastructure to do that. We don't need to do crime to make money as such. I think sometimes the question is like how much effort, how much time do you want to spend? Because people heard market manipulation and they heard market maker, and then the only name that they can name is Wintermute, and then sometimes they put the two together and they build a narrative around it. That's
Mm.
you know, there's sometimes we just have to choose our battles, and then it's more about who do we care, you know, may actually think that way, and then it's just like we address it immediately if we do care about them. And then if it's just noise on the internet, I mean, you can find anything, anything to that's happened, that's never happened, you know, on the internet anyway. So we continue to be, you know, quite adamant on that, and just really pushing for the best practices in the space. And it's also, I found it a very good filter as well for foundations or for people we did not want to do business with. And then if you're very clear about how you do business, then you actually tend to push the bad actors away as well. So I like to do that. Like to be quite clear about these things.
Understood. So, you know, moving on to, let's say, ETFs. I mean, obviously that's been a game changer, you know, for institutional adoption. You know, how do you feel the introduction of the spot Bitcoin and Ethereum ETFs have kind of changed, you know, changed your business as a market maker? And you know, what kind of impact do you kind of expect from Sol and Ripple ETF approvals?
So it's less of a first degree change than more of a second degree change. I think it's really helped the space to just be more democratized as such, and more institutionalized. I think it's helped change the mind of I think it's maybe the US presidency that's helped like some banks and so on to really just you also talk to a lot of banks, and I'm sure you've seen the change of perception. It's a few lunches and dinners last year, pre-Trump election, and it was pretty clear that some people would change their stance if he was elected on change their stance on crypto from negative to positive. And it's a bit of it's only for now, it's only a secondary effect in a way that we broadly as a firm, apart from the venture side of the business, we market neutral. So prices go up and down. It's helpful when prices go to new highs because there's headlines, there's a wealth effect. So actually our customers, you know, the people we face, they benefit from it. Ultimately, we made money from volumes, not really from things going up or down. So it's more of a secondary effect for us. There's also an aspect of I would say it's helped institutionalization. I would say it's helping some people who really not even trading crypto yet to actually have to think about tokenization to a degree, and at least understand the tech. And if you think of the perspective of you know, a full well, tokenization of the space and tokenization of even equities, for example. So if you think of like, oh, the stock market is going to be tokenized tomorrow, you just really need to understand that. Even if you don't want to trade crypto, you have to think of the tech, and you have to think of how you're going to approach this. And actually, for some institutions like, you know, banks and others, just the fact, it's not even talking about DeFi and integrating on chain. It's just the fact that it's a 24/7 market can actually be quite a difficult thing for them to just do structurally, and how they they build their infrastructure as such. So these things have to really be thought out. But yeah, again, as a business, it's more of a secondary effect. The last piece of it, I would say, is that ETFs per se, they've been a lot of the flow that we've seen first half of 2024 was very much so a third of that, the $15 billion or so that came in early 2024. I think 5 billion of that was essentially people, just hedge funds, just rebalancing spot BTC versus ETF BTC because they could get better margining. So some of that, didn't necessarily have like a lot of price impact per se. So it's more just capital, optimization per se for them. And I think like the whole democratization of the space through the ETFs is very much coming through very much how does it get fully distributed to our parents or to grandparents and so on, in terms of like they can actually, in most countries they can actually get access to the ETF, but will they get their private banker, their financial advisor to actually promote this to them? And I don't think that's really happened much actually even in the US. So there's a whole dimension of like people can now they have access to the product, but then are they actually being educated about the product? That's not necessarily happening yet. Yeah, it's more of a secondary effect, I would say.
Curious, because we were talking about options earlier, and maybe I could say earlier that recently, let's say recently, and I can't say the client, I was at a TradFi client, and he was talking about how they were going into crypto options, but he was like, yeah, but we're not going to, obviously we're going to not going to touch the exchanges. They were actually doing quite a bit on IBIT. Do you actually think maybe from an options standpoint, I mean, given that some players, and this would be a very TradFi type place, they were actually saying that they're getting a lot of interest just on the ETF options, and obviously from a regulatory standpoint, it's a lot easier for them and stuff than touching Deribit or whatnot. Yeah.
Yeah, I think it's part of a thesis on how institutionalization happens, is that we end up interfacing between spot and then basically we provide essentially through CFDs. You have the same dynamic where you just end up providing a delta replication to institution essentially. So makes sense. I mean, it's less plug and play into it is plug and play on their side. It is easier in terms of getting like prime brokerage is actually not too friendly yet to the crypto underlyings. It's progressing, but it's not too friendly in terms of you get much higher leverage from trading, the same volatility options if it's just a standard, well understood equity than actually an IB option. I haven't checked recently, but I'm probably quite certain about it that you get much more leverage, implied leverage if you trade, traditional equities than IB options. I think it makes sense. I think it makes sense in terms of like just trying to go through the path of least resistance. Really, I think it's better understood by the risk officer. I think there's very much a framework there. So yeah, true. I mean, it's similar to like MSCR that somehow has more option trading volumes than actually the largest single equity options in Europe or so. And I think it's third, and so you basically end up with a derivative, like a treasury. It's a derivative of Bitcoin that itself has derivatives on it. So I think it's more about a mix of like passive least resistance, and then where you have more vol, more implied leverage in that case, just people just want to trade and they don't want to think too much about not only just transferring funds and so on, but then just how do they do it? They just basically want to focus on trading.
Yeah, makes sense. A couple times in our discussion, you've talked about your Wintermute Ventures and you kind of alluded to sort of your strategy and how it helps, but is it something you can maybe explain a little bit more about? How does it help complement your market making business, and what kind of sectors are you focused on for, I guess, second half of 2025 on the venture side?
So venture side, we started investing in 2020. It's very much it's not necessarily synergistic with the business because there's more Chinese walls than anything actually with the trading business. It is synergistics for the foundations that we invest in most of the time. So there's many so decentralized exchanges and whatnot, protocols that are more come to us because they will want us to invest, and they think it's, and in their right, there's more alignment long term as a company in general. There's more alignment if you have exposure to their project to help on the market making side. It helps to a degree to lower some KPIs that we would have to go and help a foundation or help or integrate with an exchange. It doesn't solve everything. It just doesn't mean because we simply invested that we'll do everything for the project as such. We already raised time and money as such. We so far over the last 5 years we've invested we have an exposure, I would say, to about a couple of $100 million towards about 137, 140 or so projects. It used to be purely infrastructure driven, very, very trading related. It was very much what I like to call the Ashton Kutcher syndrome as such. So Ashton Kutcher helped Twitter grow quite a lot through his name essentially, and then he was like he didn't have any shares, and then he went to invest in Airbnb and Uber, I think. So in some ways, without the aspect of fame and notoriety on our side, we helped early exchanges, crypto exchanges to really grow, but we didn't necessarily have any shares in it. So it's very much this aspect of or if we help a company or a group really, really grow, we should have some extra delta. That's one aspect. There's one aspect that's purely we just believe in the space and we think it is very very much new finance as such. So we just want to be long the space. In terms of sectors that we focus on, we have done a bit more sort of crypto adjacent to AI nowadays. More still, I think we're always more comfortable with infrastructure. So we don't really do gaming per se. We don't really do IP related things. We understand more infra tech, analytics and so on better. I think it's more about teams we like to invest in are I would say it's more about the alignment. So we do token investments, but we prefer equity plus token warrant essentially. And I think there's no apart from us not really doing IP related things and doing very little in gaming. We pretty much would invest in any Web3 subsector. So very good question for like the rest of the second half of 2025. I don't think there's really specific sector focus. We look at a lot of AI related projects, but then there's this focus per se. I think it's much more about we invest mostly, and it's more about the team, I would say.
Are the AI related projects in the digital asset blockchain space, or some totally different, like traditional industry kind of stuff?
No, they are in Web3. So they're very much in Web3, and they're very much about trying to rethink about how you're computing. So it could be edge computing related, or it could be how access to data is allocated or so. There may be some ZK elements, there may be some so it could be it could be even trading, AI trading or data trading related. But it's very much still in Web3.
Yeah. Do you see a lot of people pitching like AI, some kind of algo using AI, so to speak, or something?
Many people pitch it, but very, very few actually. I mean, algo as in algo trading.
Yeah, with some AI component looking for some kind of.
Is like financial data is very much the heart
Okay.
of, well, some data to work with because it's very noisy. So you have some RNN that do some work, but then yeah, it's just that I'm a big critic of this. Even if I can see and I did a lot of AI due diligence nearly 10 years ago for various Web2 startups, and I would debunk 99% of them. Just simply on the basis of the data sets and so on. It's harder to do now because actually you can get so much through LLMs and whatnot and so on. So there's so much free AI tools out there that it's actually harder to debunk people who pretend to build like AI and so on, and do to know if they actually do it. It's yeah, I think ultimately it's more about just finding the right teams really. But in the financial space, it's quite difficult to do. I mean, I don't know what you start to call AI, just if it's just an optimization tool, or if it's just you call it AI as such. But yeah, there's little that's actually there out there, or I'm not aware of it just because people make enough money and they don't need to raise funds. I think there's only this Goldilocks zone where people make high returns, but actually don't need to raise money or need to raise money from and interact with us. So it's a good question. I think it will happen. It will happen, and it will help people like us as Wintermute because the AI agents or the algos that run will be admittedly should be very price sensitive to execute, and then they would come to people like us who do their best to offer the best prices and such, on chain or off chain.
Okay, so maybe since we're almost at time, finally, what should our audience know about Wintermute's upcoming initiatives, any kind of partnerships or investment opportunities? And let's say someone who's listening, sees a potential for collaboration, how could interested kind of parties connect with you and your team?
There's quite a few. I would say come through the website, interact with us on Twitter as such. There's a few of us as co-founders or so who have a tick. We have a few employees with a tick as well. Just make sure you're talking to us. That's very key. Especially on the foundation side or the crypto side, there's a few people who pretend to deal with us, who pretend to very much to scam people. So just make sure that you're actually talking to us in the first place. And then there's many dimensions where we can collaborate. So we do hire quite a lot nowadays across US, Europe, and Asia. General collaboration where so being in Korea now, so we always look at new markets as such. We don't have investment opportunities per se. We can co-invest on the VC side. We do borrow directly from I was saying from family offices and from institutions in general. We borrow especially USD as such or stable coins. Beyond that, like collaborations on the trading side it tends to be more akin to hire and equity hire as such. Yeah, any other partnerships, just reach out. And the things that we were not able to find time to do it ourselves, we've incubated. So we've incubated a few. An index company called GMCI, for example. We've incubated Bebop. We've incubated Wildcat, for example. So a lending borrowing platform. So things that we can very, very closely partner with, and then we would build if we were not building Wintermute. We've incubated so far. So it's worth having a dialogue there in general, even if it can be quite an open door dialogue.
Okay, well, thanks, Johan. I think we're at time. Good to finally chat again after all these years, and hopefully maybe I'll see you down in Singapore soon and stuff, catch a coffee. And thank you again, and thank you to the audience for staying with us through the fireside chat. And yeah, thanks.
Thank you. Thanks, John. I'm sure cross path. Thank you.
Well, very good afternoon, everybody. Welcome to REDeFiNE Tomorrow 2025 again. And welcome to this fireside chat about navigating the crypto derivatives market and strategies for volatility. My name is CJ. I'm going to be your moderator for today. I'm the managing director and head of sales at GSR Markets. We're a global market maker. I look after APAC and EMEA regions. I'm based out of Singapore. And with me, I have a distinguished guest, Eugene Kwok, who's the CEO of QCP.
No, I'm not the CEO.
Oh, really? Well, run with it. I
Yeah,
think we can work with it.
I'm the business manager to the CEO, but yes.
Okay, fantastic. Well, why don't you tell the audience a little bit about yourself, sir, before we go into the content for today?
Sure, sure. I'm from Singapore, where QCP is based, CJ's mentioned. I've been at the company for quite a while now. I've been at the company maybe like 6.5 years. So I've actually seen QCP grown from maybe like 10 plus people to now we have about over 140 people across multiple jurisdictions. So I think it's been a real journey for me seeing not only how the company has grown and how its focus has evolved, but also how the space has changed. And I think we're gonna dive a little bit more into that today. But as for QCP, what we do, we are Asia's leading digital asset partner. So we help investors all over the world with their investment strategies and decisions. So we do everything from simple on and off ramps to derivatives to structured products. And I think our strength is we help clients really tailor their strategies, our strategies for them. So yeah, that's QCP in a nutshell.
Fantastic, and appreciate the introduction, sir. So diving right into it, and I'm glad that you mentioned how long you've been there. Obviously, it does show us that you're one of the OGs in the space, especially out in Asia. Uh, Obviously, over this time, you've seen the crypto derivatives landscape evolve. And I think the evolution has been nothing sort of meteoric, so to speak. How would you compare that landscape on a fundamental level if we were looking at it from when you started at QCP versus what you see now in the markets?
Wow. Okay. So I think before we start, let's just let's define this derivative landscape, right? So with derivatives, we're basically talking about like delta one derivatives, like perps, like futures, and non-linear derivatives like options. So I think first of all, we're seeing a lot more participation across the board. Previously, when we first started, right, it was kind of cowboy town, right? We saw the space being dominated by crypto native traders, market makers. But now I think we're seeing a lot of broader engagement from traditional financial institutions, retail investors, even like systematic funds. And this has been driven by a few things. Firstly, I think there are a lot more regulated venues. You know, you have your CMEs, you know, even your UX, and even from an infrastructure standpoint, right? There are so many more exchanges offering sort of more robust APIs with block trading protocols. You see the growing availability of structured products, something which QCP, well, we specialize in. And if you're talking about the change, I think that the change is really a more liquid, transparent, multifaceted derivatives ecosystem where there is just so much more offering and accessibility.
Okay, fantastic. Well, so to speak, you mentioned about that convergence and that approach from traditional finance looking on in and getting a bit more involved in it. And obviously, this convergence, we've seen it as accelerating in the last couple of years. With regards to QCP, then, I mean, how do you approach this from a risk management and pricing differential from traditional derivative markets, and especially given the fact that crypto as an asset class is 24/7?
Uh, wow, I think we don't. We've so for example for QCP, right? We've always behaved like a regulated staff, you know. And right now we're on the road to get two licenses. So I think we've always tried to employ like sort of best in class risk management in our strategies. And if you come to our office, right, a high chance
Mm.
you see our head of risk, last person out the door of the office. I remember, you know, him looking a little bit younger before, but I mean, I agree with your convergence point very, very much. Back in the day, when we go to conferences, right, and I'm sure you've seen this too, we were able to tell who the crypto natives are, you know, straight away. But now it's hard. It's hard to tell, right? We've got bankers talking to us about metaverse, you know. On our side, we're talking about tokenization of assets, right? So I think from to answer your question, I think from a risk management standpoint, we don't really differ. We try and employ best in class, just like traditional assets. And maybe later on we can dive deeper into how exactly and what we look for, or maybe the certain idiosyncrasies or small slight differences, right? But generally we don't, you know, and yeah, even from a hiring perspective, I think we see the convergence a lot. But when QCP has grown now, before that it used to be just a bunch of crypto natives, right? But now we see diverse hires from all segments of traditional finance.
Fantastic. And what, in your mind, what do you think is driving this shift of traditional? And I'm not going to say that an outright mesh within our space, but what do you think is driving this institutional approach, adoption, and even visibility towards derivatives within the space?
Wow, many things. I think firstly, we just need to clarify that, well, the use of derivatives, right, is most definitely not a crypto specific thing, right?
Mhm.
I mean, I look at it from the angle that it's just a reflection of broader capital markets behavior. You know, it's just how people allocate, right?
Mhm.
And I think generally people use derivatives for the benefits they bring, right? I mean, yield, leverage, risk management, and we see it, right? Whether it's an equity desk trading S&P futures or a macro hedge fund managing duration risk, you know, like by interest rate swaps, the logic is the same. We use the most capital efficient instrument to express a view or to manage exposure. But maybe let's talk about the increase, right? You mentioned increase, like why has there been such an inflow? I
Yeah.
think we we spoke about how the market structure has matured. I mean, tools have become a lot more accessible. And I think as more institutions just kind of gain exposure, it's only natural that derivatives grow. Like, yeah, I don't know. To me, it's like it's just market logic catching up with infrastructure, you know, and derivatives are just simply the instruments of choice for sophisticated participation, right?
No, I fully agree with you. I think where there is an open field, people will naturally go there to look to build something. It's just how it works, right? And I think we are definitely seeing that in this space. The evolution has been manic, if anything. I think it's been helped along by the ETFs for sure, as well as the funds looking at this space, the likes of your asset managers like BlackRock of the world. I think it makes a big difference, right? When you direct investor interest, naturally everything tends to evolve. But yes, I fully agree with you. So switching gears a little bit here, right? And back to what you were mentioning earlier on, and I would love to dive slightly more into this, and definitely the floor is yours for this. You mentioned the way QCP adopts it is a best-in-class risk management approach, right? And I think that's crucial. And my background is actually derivatives. I used to be a multi-asset structure on the trading floor. So derivatives is my bread and butter. So I appreciate your comment and your approach that risk is everything in terms of how you look at it and the nuances there. Could you elaborate a bit on how QCP looks at it and the measures that you have in place as well?
Okay, I'll try. I'll try my best. I don't know if I can get too detailed, but I'm gonna try.
No worries.
So I think that a lot of the traditional finance risk management techniques and methodologies, right? They do apply in the crypto space with a few like minor tweaks, obviously. But generally speaking, I mean, for example, industry standard, right, for VaR, right, as sort of like a risk management metric is very pertinent to digital assets. But I think that the extreme volatility in crypto is not a phenomenon that is completely alien to TradFi markets, right? I mean, we think about like jumpy prices around earnings and dividend announcements, or even near-end shocks with commodities, right? But in crypto, I guess it's just even more violent, you know. So it does have implications with regards to our risk vigilance and monitoring. So I think for us, what we do, just to get into a little bit more detail, we employ a lot of like real-time surveillance. We do a lot of horizon scanning and monitoring. We automate a lot of our alerts and triggers. We accommodate sort of like limit structures and risk frameworks to sort of better handle the volatility. I think you just got to be ready for jumps, right?
Mm.
And for us, we try to be as data-driven as possible as a firm. So I think that in managing this risk, right, our infrastructure, our tools, the people, the mindset, we all have to be in sync, you know. And I think leadership has been great in sort of promoting sort of a risk culture like throughout the firm.
Fantastic. No, I appreciate it, and I think it's very, very important. risk is the backbone of everything when it comes to a trading shop. And I think the way you guys have managed to deploy it with your leadership, I think has been crucial for the length of time that QCP has actually been around in the market, especially in Singapore. Uh, so leading on to that concept of differences and more specifically to the topic at hand, which is really about volatility and the strategies looked at within the space right now. How would you, if you were to pick a point, compare the volatility and the nature of the volatility now compared to, let's say, 4 or 5 years ago within the space?
4 or 5 years ago. I don't know. I mean,
I'm
we
giving
we
you I'm giving you
we
1 year to settle into QCP because you were there for 6 years. So I assume that 1 year worth of settling it, then you would have had a viewpoint then compared to now.
sure. Okay, well, let's talk about it from the beginning, right? If we look at 2017 maybe to 2020, right?
Yep.
Uh, we saw that open interest spikes were really often driven by directional retail speculation, right? We all always, when we were there, you could tell the space was always been over leveraged. It's always very reactive. We saw a lot of like
Mhm.
crowd reaction from Twitter, from Reddit, and usually with like significant leverage, right? Think about it. This was during the BitMEX days, 100x, and there was little sort of institutional balance. And but I think this time the composition is notably definitely more institutional, as you've raised, right? We're more hedged, and in many cases, we see so many institutions a lot more delta neutral. I think we sort of see more sophisticated flows, right? Funds running basis trades. A lot of our clients also ask for those kind of trades where it's really risk managed, right? We That's like ours. I mean, we do a lot of accumulators. We do a lot of principal protected strategies. Miners looking to lock in prices, long-term holders sort of using options to enhance yield. So I think that, well, I'm trying to think of an eloquent way to put it because you're asking me of the change from now and then, right? I think
Yeah.
while open interest is high, I think quality of the positioning is more mature. It's more vol selling, more risk dispersion, just more two-way flow. And as much as this doesn't eliminate downside risk, it does seem that this cycle has really much deeper institutional roots and it's less like reflexive compared to previous ones.
Absolutely fantastic. And in full agreement, similar to yourself, I've been at GSF for about 5 years, so I was on the tail end of that shift. We've noticed the exact same thing, so I love it. It looks like we're looking at the same things out in the Southeast Asia, which is great, isn't it? Uh,
Ah,
Interesting enough, you did mention one point, and it's something I want to touch on because I fully agree with you. Leverage in this space has sometimes gotten completely out of hand, right? We've seen it by the washouts, we've seen it by the liquidations that occur. We used to call it in traditional finance fat finger syndrome as well sometimes, where just something happens, you just can't believe what the wick looks like on the charts when you look at the underlyings. Would you say right now, and what is your viewpoint when you look at leverage within the space? Would you say we have a much better handle on it right now, or would you say it's still something that we need to learn a bit more about within crypto derivatives?
I think it's both, right? As much as we touched that, there's a lot more venues and a lot more access to these more risk managed strategies. But I think that from a retail perspective, there's still quite a lot of education that needs to be done, right? Um, but I think as institutional flow does that, I only think it will improve. But if we think about what could help them educate themselves, right? Sometimes it's difficult. These structures are sometimes complex, and we find that as QCP, our job is to really help the client navigate through these complex spaces, right?
Mhm.
So when we describe strategies, we really try to sort of educate in the process.
Mm.
Sometimes the space does that for you. I don't know. Do you remember 2 years, 3 years ago, there was the trend of DOVs, DeFi option vaults? Were
Yes,
you?
correct. I mean, there are a bunch of them, right? A bunch of them out of Singapore as well. Now they're running their own perp dexes, but yeah, there was.
Yeah. So I'm trying to link it back. I'm trying to link it back to your question, right? So when you think
Yeah.
about EOVs, right? I mean, we look at them now. They're kind of dead right now, right? Um, but they did affect the derivative landscape in a way, in terms of education, in my opinion.
Mhm.
Because you see, when DOVs like Ribbon and all they first launched, they gave crazy, very high attractive yields, right? 10 to 50%. And they did this by sort of automating strategies like simple vanilla covered calls, right? Or puts.
Mhm.
And then when capital kind of flowed in, the strategies became crowded and there was like lower premiums. But actually, what they did was they helped with education because, in a way, because they simplified the UI. People sort of saw the DeFi structure of vaults, just adding capital to vaults. And what happened was, oh, I get 20% yield. They didn't have to look at the complex order book. But I believe that through that process, people were more educated, at least in terms of vanillas. Like what is actually happening? Oh, when after the contract ends, it expires worthless, so I get the premium, and it's like simple terms just because it encouraged them to participate, right? And for us, I think that's kind of what we try and do for our clients, right? We simplify, we tailor really the positions and explain it to you. So I think to answer your question, it's really both. There's so much more education to be done. Um, but I think that the way that the market and the way that crypto innovates, sometimes it just doesn't wait, right? It just
No.
goes, like now that trend is over, it's dead,
Yeah. No, I fully agree. It's an interesting one, and let's look at it because you did bring up DOVs. DOVs were very interesting because they filled a niche in the market that we took a feather out of the cap of traditional finance and said, look, within this space, how can we do something very similar, right? My question to
Yeah.
you then, and this is going to be more of an opinion than anything, in your mind over the last 5 years, what has probably been the greatest innovation we have seen when it comes to crypto derivatives? Or not even the last 5 years, just within the crypto markets as a whole. And the reason why I'm asking this is because a large part of what we see in a space, and you mentioned it earlier, which I fully agree with, we're not reinventing the wheel. We're trying to take what is there and how do you apply it as an underlying asset class? And eventually, is there a world where we see forward vol, etc.? Maybe, right? But in your mind, crypto derivatives themselves have had an evolutionary phase. What would you say is the product that stands out and says, well, this is crazy. Like we wouldn't have seen this in traditional finance.
Wow, I don't know. There's so many things that if we look at it from a pure innovation standpoint,
Mm.
I don't think we've seen real much. Like you rightly mentioned, we're not reinventing the wheel. We're just taking these strategies, right? I mean, we look at the most popular strategy that has been going on, right? A lot of people doing basis trades, cash and carry. That has been going on, We're not
Mm.
reinventing the wheel, but I think it's more access. Because before, a few years ago, when you are a Bitcoin holder, you hold Bitcoin, right? In your wallet. It's not so easy to just generate good yield, you know. And so, but now, if anyone is out there doing this, please talk to us. We have many ways to help you do that. So I think now it's a lot of access, right? It's opportunities, access. There's a lot of these strategies that were before, but now they're available. So I think, yeah, a lot of it's more accessible, and you can think of it from an infrastructure standpoint too. The market is just more efficient in that way. There are more sort of counterparties that will be able to do that with you.
Fantastic. Well, you also mentioned earlier on, which I loved, that in your mind, the direction that we're going to see derivatives go and something that at QCP you pride yourselves on is actually the world of structured products. Structured products in themselves, in a nutshell, is never the easiest thing to do, right? Be it the mechanics of how it works, the operational assessment. How do you see structured products evolving? Are we going to marry and follow traditional finance, or is this going to be something that's going to remain more or less completely bilateral, dare I say it, on an OTC basis?
I think so. I think structured products are only going to grow, right? And we're going to see people do cross-asset stuff as well, right? I mean, people who use structured products are kind of more sophisticated. So, but I understand when people say that because in the past, like access was always hard. But if you boil it down, right, all structured products are just, it's like a financial recipe. We're just taking bits to craft the dish that you want. So if you think about it, if I want to hold Bitcoin for a long time, I want to pass Bitcoin down to my son, what do, right? There are a few structured products can do that, and it's if you take time to learn about them, they're not really rocket science if you understand them from you don't have to know exactly what's happening underneath the hood, right? But when you boil it down, the goals are the same. I want to hold Bitcoin, I want to accumulate Bitcoin. Okay, let's look at an accumulator, right? I'm just buying Bitcoin at a discount. If this happens on this date, if Bitcoin price is here, this is what happens.
Mm.
So I think structured products are gonna definitely definitely grow, but it's not, I don't think it's specific to just crypto. I think people are just going to use it as an instrument when they trade and when they to manage their positions.
I mean, you also mentioned, so I love it. You brought the concept of cross assets. And cross assets is, if you think about it, this is the promised land of what crypto derivatives can ultimately become. And the reason why is if you price a correlation correctly, you have an asset class where its volatility is multiples out of every other asset class around. My question then becomes, and your viewpoint on this, where when we start breaching into other more traditional finance-based assets, for lack of a better term, we're also have to be very mindful from a regulatory standpoint. How do you think that's going to evolve?
Wow, it's tough, right? Because I mean, I hope that there's going to be a lot more regulatory sort of clarity. Um, yeah, we see the difference, right? From sort of in Asian countries and Western countries. You know, Asian countries a lot more fragmented, right? But I hope there's a lot more regulatory clarity and tokenization, like in the space in general. Um, I think people are still figuring it out. We are lucky in terms of us being in Singapore. I think we've got good clarity over here. I just hope that everything can just sort of come more together as a space.
I love it. Well, no, I agree with you, and I think that's what we're hoping toward, right? We're seeing a lot more governments become not regulatory savvy, but regulatory open, and I think that's where we're going to take the direction going forwards. And I love the fact that we're aligned on that. So more to QCP and understanding how your outlook is on this space, and obviously being around the leadership team for so long, it gives you a very intrinsic understanding of what excites you within the organization. If you were to right now put on that QCP business hat looking forwards and where you're going to go from here in terms of that derivatives market. What about the derivatives market in 2025, 2026, the foreseeable future excites you?
Wow, what excites us? I think for us at QCP right now, our vision is that Bitcoin is going to be on every balance sheet, every portfolio, every treasury. I think in the last year, we've seen the Bitcoin narrative come across really strongly. We've seen more sovereign wealth funds get exposure. We see more governments talk about Bitcoin. So I think that's going to be a huge narrative for us as a firm, right? We look at Bitcoin in a way that it changes the way a lot of businesses kind of even look at things like credit, you know. So I think we're going to see a lot more adoption when it comes to that. And for us, obviously, we think that structured products is the way to go, right? Especially for more sophisticated investors. I think that's a huge one. I don't know. Do you buy into the strong Bitcoin narrative? I mean, we've all seen it, right?
I think Bitcoin stands for something within this space, right? I think Bitcoin has been that ray of light for evolution. When you see how perpetual is developed, when you see how ETFs has come about, right? It was always the leader in that space. I'm in full agreement. I actually see it as an asset where sovereign wealth funds can look at it and say, yeah, I'm comfortable putting this with me. I'm comfortable holding that. And I think there was an article the other day I was speaking about the number of Bitcoin treasuries in the space, which is absolutely, it's ballooning multifold, right? So I do see a lot of value there. And interesting, I want your viewpoint on this one as well, because you did mention Bitcoin. And I think that's something that between us, but both from trading shops, we look at it like, yep, Bitcoin, that's the gold standard. That's easy, right? That's if you were to akin it to the days of sales and trading, that's like being able to write options on euro dollar or dollar yen. It's there. We know it's there. The market is there for that. Do you foresee or do you envision exponential growth within altcoin options as well?
I I think that you've touched on a good point, right? Because most options right now they're just concentrated, right, on Bitcoin and ETH. We do see some venues that are making options altcoin options kind of more accessible. I feel like who knows, right? But if I were to, I mean, I don't like to speculate, but we see that, I mean, obviously it's the next logical step, right? Um, we see a lot more demand in yield for Solana but right now, I don't know. Are they priced well? Are they priced efficiently? I think it's more participation and institutional participation increases. For sure. I think altcoin options will see a growth in that too. I think it's just logical to me.
Fantastic. And you did mention prior that within QCP and within the long story history you have within Asia, you mentioned that logic of sovereign wealth funds, corporates, FIs looking at this space, especially as an organization which has deep roots within the APAC region. How do you see regional differences, be it within Asia itself and Asia versus the rest of the world?
Wow, regional differences. Okay, I think that there are a couple of ways we can look at this question, right? I think from a trading standpoint, we see if you look at time zone and flow dynamics, we definitely see a difference. If you're trading actively, I mean, for Asia, more active, right? During late US night, early EU hours. There's more sort of strong sort of retail and prop desk presence, perp altcoin options. They're traded more aggressively here. You know, I don't know if you agree, but this one flows could be, I don't know, tend to be a little bit more speculative. I don't know, short dated option rotations. If we look at the West, right, I think it's a lot of institutional flow. There's a lot of emphasis in sort of macro linked positioning,
Mhm.
um, with ETFs and things like that. But from another perspective, I mean, let's look at it from also regulatory environment, right? I mean, we briefly talked about it just now, how in the East it's just more fragmented. In the West, there's a lot more regulatory focus, right? With SEC, CFTC, they drive sort of the narrative and the usage of regulated platforms, around the world. But I mean, the East and the West, we're always going to have our differences, right? And for a lot of times, we depends on the narrative, and hence we take lead from each other, right? I mean, a lot of us in Asia, sometimes we as crypto is tied so much more to macro. I mean, the West is going to have a lot of influence in that, right? For sort of stablecoin adoption, regulatory stuff. Maybe it's the other way around. I don't know. But I feel like it's very hard to predict it because it's just so complex.
Mhm. Fantastic. And we touched upon it very lightly, where QCP's approach to risk management, the market risk manager being the last guy out the door. I love that, right? And that is very associative of how do you defend. And obviously at QCP, you have been through multiple market cycles. Do you think that there's anything different in terms of the robustness of the current market? Would it be able to withstand more than what we saw historically? Or do you think it's going to be a situation where once bitten, twice shy, and we're just going to keep going in circles like this?
Uh, I I I feel like I'm gonna agree with you that I'm discussed, So I do want to believe that it's gonna be a lot more robust, right? Simply because um right now the cycle, we've mentioned it a few times, is just very institutional, very insti heavy. Um and I think but the way that they participate is really more in structured vehicles, right? ETFs, and I think their capital is also more patient. Um And also with volatility being sort of more aligned with traditional markets, right? We right now we look at rate expectations, we look at CPI prints. If you guys you're not subscribed to our market color, please do. We give all these color out all the time. So institutions hedge like crypto alongside other risk assets. So I do believe that it's going to be more robust, for
I
sure.
love it. I love it. Well, don't worry, sir. You're almost at the end of it with me right now. I'm not going to put you on the spot that much. I am actually going to end off with a question where I think you will enjoy the most. What upcoming initiatives, partnerships, developments should our audience know about from QCP? And also, do let the audience know how they can connect with your team to learn more about the solutions that you provide.
Sure. I think for us, what I'd like people to know, right, is that for a long time in the past, people always saw us as either like, oh, they know us as the options guys, and they think of us as like a prop shop, right? But we're completely not. I think we are at the core of the company. We are very, very sort of client focused. We are a client first company. So I think s- I'd like people to know that, yeah, we can actually help people with multiple solutions, right? Everything from very simple to more sophisticated stuff. And And for us, we really pride ourselves with having high touch service and really understanding your needs and also catering whatever tenor, whatever strike barriers. Like if you want more complexity, we can do it. And yeah, I think for a lot of people, I don't know if you know that about us, and I think for us, that's something that we've been really focusing on. To reach us, it's very, very, I think we're a QCP group on all social channels, qcpgroup.com, email sales@qcp.capital. We're pretty easy to find. And yeah, looking forward to having more conversations with you guys on the side about these things.
Fantastic. Well, there you have it, ladies and gentlemen. I hope it's been a very informative discussion, finding about where this market has come from, where we are now, and actually where we think this is going to go. With that, thank you very much for your attention. And thank you very much, Eugene.
Thanks, CJ. Thanks, everyone.
Hi, everyone. Hello. Thank you for joining us, and hello again to Gabby.
It's good to see you,
I guess
Nicole.
we are just a couple of kilometers away from others, but then we are talking to Bangkok as well as our audience from all over the world tuning in. So very happy to see you as well.
Yeah, it's great to be
So,
here again.
right. So how busy are you these days? I mean, what has been keeping you busy?
Oh,
Is that
extremely busy. I think we're going to see a renaissance in Web3 gaming soon. And yeah, I'm basically working harder than I was in 2021.
Oh, okay. Yeah, I hope that that's positive news because actually, I guess, of course, there's a lot of doubt about maybe whether we're going to have the next cycle of Web3 gaming. Is it possible to maybe shed some light into what you are cooking at this point with the Renaissance?
Sure. So ever since last year, we've been working on what we call our casual degen games that we've been working on within YGG. We've seen a lot of games in the past few years, different kinds of games, some of them big, some of them small, expensive. And what we thought was that a lot of the games were actually, we thought, building for the wrong audience. So we started building our own games with the thesis of a casual degen audience. And these casual degens are basically people who want to have fun, speculate, make money in Web3. People are maybe trading meme coins, NFTs, maybe they're trading. What they're not are really hardcore gamers. They want casual gameplay that has some speculative elements. And that's what we delivered with Lowland. The game is less than 3 weeks old. And yeah, the results we've gotten are astounding. And I think it's proven our thesis that the casual degen Web3 persona is the correct one to build games for.
Oh, okay. I think that's definitely very exciting for us, to look forward to. So the session that we have today is actually, there are three main keywords to it. So we have play to earn, we have communities, and we have the future of work. So I hope that 45 minutes is sufficient for us to crack all of these topics. And then basically we're going to go with that narrative as well, just to maybe chat with you a bit about play to earn and maybe what's the next narrative. Then
Sure.
we're going to move on to Web3 communities and then the future of work and DAOs, how we would be able to, maybe foster more meaningful and impactful communities in the future. So now maybe just to take a step back and, just want to have a chat with you about what brought you here. Like, what was the journey like for you before when you started with, XC and then now YGG? Could you
Yeah.
just walk us through that journey?
So my journey was as a game developer. I've been a game developer for over 20 years now, starting originally out of the Philippines. I had an independent mobile game studio starting 2014, and we were struggling to get noticed among the sea of all of the different games and apps that were in the app stores then. And we were looking for what would be the next platform shift that could be disrupting gaming. And in 2017, I heard about Ethereum and more specifically smart contracts. And I thought this was very interesting because with smart contracts, you can basically you can program money into economies like games, which has not really been done before. And then while going down the smart contract rabbit hole, CryptoKitties came out. This is December 2017, and basically brought down Ethereum. And that's when I discovered NFTs, and that really excited me further. And yeah, I thought then that NFTs was going to be the future of gaming. So actually, I've been in the intersection of crypto and gaming since then.
Oh, in like that would be like way long
8
back,
years
I
now.
would say 8 years. Yeah.
Yeah.
I mean, just a side question. Let's say, do you think that these traditional platforms are actually, making any moves towards, let's say, competing with some of the emerging platforms with gaming? Do you think that they would be able to catch up with getting more, I think, young and also the emerging gaming audience?
I'm not sure that catching up is the right word. I think that behavior will shift per generation. So, for example, the older generations are more into console. The younger generations are very much into like open world building games like Roblox and Minecraft. And now there are games on Minecraft. There's like a farm building game inside of Roblox, actually, that would be one of the largest games by daily active users, like tens of millions if it were broken out separately as a game. So I think games that have inherent economies in them with crypto will also be a kind of separate kind of category that maybe regular gamers hate right now. But as these economies become more and more common, they will just find and have their hold of a new type of user base. So I'm not really trying to give the crypto-based game to current gamers, or what I would say we call like Web 2.5 is doing. We're trying to find the natural new audience of games that are receptive to these crypto games and then give them products that they want.
Okay, so you have touched on a very, I think, important aspect, which is about behavior of the users and the gamers. And I believe that you have been very vocal about shifting from, let's say, play to earn to 3D play and other narratives. Could you elaborate a little bit more on the reasons why, you are advocating for that change in narrative?
Yeah, so if you look at games, there are games where mostly you can play for free, and then games you have to pay to purchase some content or some assets. And then there is play to earn, which is you're playing a game and essentially you're getting ownership in assets. I think there is actually a kind of balance for how you use all three. At the end of the day, you're balancing a digital economy. And when in a digital economy, people have to pay money in so that there has to be value out. So the reason that play to earn worked 4 or 5 years ago was that people were paying to breed axes because these axes were then used to earn more tokens. So the question is always about sustainability. How can you find like token models or gameplay models that are sustainable? And I think, yeah, there are some games, including our own, that are a lot closer to finding that out.
Okay. Do you think that, let's say the audience or the what you call emerging gamers, right? Like the new ones or the natural kind of gamers. I mean, do you think that anyone can be your target kind of gamers in the future, or where can you find them?
Well, right now we are targeting Web3 native users, which obviously is a smaller segment, much smaller segment than like all gamers. But I do think that Web3 native users will grow very quickly, especially with the rise of stablecoin as payments. I think we're actually going to see a lot more like normal user-facing products that are using stablecoins, and this will also give rise to the use of crypto-powered applications.
Okay. So how bullish are you with, let's say, the size of the I would say Web3 gamers kind of market, let's say in 3 to 5 years? And do you think that we have already got what it takes to get to that level or get to that size?
Yeah. I mean, as long as you can see stablecoin adoption rise, especially with like Web2 platforms, like for example, if Stripe is using stablecoins, if Visa is using stablecoins, then this actually allows you to power a lot of crypto native applications by users that do not consider themselves crypto native. And there's a lot of reasons why you would use stablecoin versus a credit card. You're not paying the 3% fee to either Visa or MasterCard. You're not getting any chargebacks. You're getting capital that you can use immediately that's not held hostage in an app store. So actually, stablecoins are really good UX, and I think they will also power the growth of crypto-powered applications, including games.
Okay, so I think definitely, I think towards that mass adoption, it's not just, I think the effort from the Web3 players, right? So we also need to have some more of these like ramping partners and also more traditional players to come in and support us with this vision. So now also like maybe getting a little bit maybe back to the history of why you are in this industry. So you mentioned that I think it started with the frustration with the gaming platform. So you decided to build another
That's right.
platform, which is more accessible to everybody. And now, I've got the news that you have also decided to build another game on your own.
That's right.
So that would be like, maybe is that like a journey back to
It
your
is.
heritage? And
Yeah.
why is it happening? Just share with us.
Yeah, very good question. So when we had our initial success with YGG in 2021, onboarding communities to game like Axie Infinity, I thought my game development days were over. And then, of course, we were buying assets in different games. We were reviewing a lot of different games. And it wasn't until like we thought there was a mismatch between the games that were being made and the target market that is actually there that we decided to create our own game. So a lot of that is informed by our experience in just dealing with literally hundreds of games in Web3.
Okay. So I mean, so I think back in the day, maybe it started with the frustration with the gaming platforms. And right now, let's assume that that challenge might have partially been resolved. What do you think that might be, what do you think that you would need to actually kind of develop this product further and maybe to resolve some of the frustration that you had before?
Yeah, so now we have a game that has excellent early traction, which we think we can really scale. We're building on top of a new blockchain that has an app store format, which is an abstract chain, which actually abstracts away a lot of the kind of difficulties of using the blockchain. So it's a very good user experience. And between the games that we have and I think like the easy like wallet process of abstract, I think it's ready to scale to a lot more users than we could previously reach.
Do you think that kind of journey or that kind of experience is accessible to everybody, or is it just to a certain number of gamers?
No, I think it could be accessible to everyone for sure.
Okay. What about game developers? Do you think that they have already got what it takes to actually like build like a game for the mass at this point?
Yeah, I think the hardest part isn't actually the money. It's knowing what type of game to build for your target audience. I think that even the game that we made it in less than a year, and it was far less expensive than most of the games that we invested in.
Okay.
And so yeah, like I think knowing what target market you want to work with is actually the most critical part of the product building.
Okay. Okay. So talking about target audience again, you mentioned about casual degens as your target audience. So who can be defined as casual degens? And I mean, does that mean that it's only applicable to certain kind of audience? Like, for example, am I considered a casual degen, or like how would we be able to approach like, more people?
Okay, I have a question. Do you like to trade NFTs or meme coins?
At some point, yes.
Okay, and do you like playing casual games like maybe a Candy Crush or something like that?
The second, yes, yeah.
Okay, so what if you combine those two, where you are playing games that are very easy to play, that have some elements of fun and speculation in them? Is that something that you'd like?
Yeah, I should say yes, right?
This is the part where you say yes.
Okay. All right. Okay. So it means that basically it's going to be like combining both the fun of the games as well as some, I think, excitement with speculation, right? Which I
Yep,
think is also the main drive of a lot of crypto users.
that's
Yeah.
correct. So we're not going for the hardcore gamers. We're really going for the casual degen as our audience, and yeah, I think we've really hit on something here.
Okay. Now that you mentioned, I think that this might be like something that maybe what we call like grandmas or like housewives can actually play as well, during their free time. And basically, they can also be accounted as your maybe target audience.
Yeah, that's
That's
right.
correct.
Before I actually got into crypto, I was making casual games, hidden object games for housewives and grandmas. So this is actually really full circle for me.
Mm. Okay, yeah. So very much looking forward to it. So I think it has been like, the first part was just about your journey with gaming, Web3 gaming, what is shaping the narrative, and obviously we are very much looking forward to your game and what you mentioned as Web3 gaming renaissance. Now, moving on to the second topic, which is also one of my favorites, is about building communities. And more importantly, how we can build sustainable communities through market cycles. Which I think is not the top of mind thing for a lot of builders when it comes to maybe their market. So I think maybe the very first question that I want to ask you is that, is there any sort of thesis for you when you build a community, especially with YGG, and has it changed, let's say, in the past 3 years? If you can just share with us.
So the thesis has always been consistent. We build our communities that come together because they like to do activities together. We don't build communities because of like a certain price of an asset. Obviously, people still want to make money. We don't hide from that fact, but that is not the primary reason while they're around. The reason we build strong communities through thick and thin was that we don't focus on the price of the assets, and we focus on things that people can do together to have fun socially, teach each other, onboard, educate, and that's what's enabled us to really come through in across multiple cycles now.
Do you see that so let's say, are people still coping with that? Are people still following that narrative when it's bear market? I mean, is there any change in sort of the narrative of communities getting together?
I don't think the narrative has changed. It's more like during bear markets, it's harder to keep communities together. The people who are not as committed will leave, and the people who are really dedicated will stay. And I think that's kind of always been the case.
And that's a very good point that you mentioned about the learning values to the community. And I believe that you also ran a community initiative called Guild Advancement Program as well, which
That's
was
right.
a smashing success. I think you got like over like 400,000 something people.
Yep.
So I mean, like, what is the secret sauce for you to actually balance this sort of educational programs with earnings, so that you will be able to keep the community members coming back for more?
Yeah, we structure it with quests where people have to do certain things that allow them to earn tokens. So there might be, creating some content or learning some information. And this means that while your community is doing this because they ultimately want to earn the tokens, right? They want to earn ownership of the network. You're also giving them some valuable skills along the way. So it's not just the money that matters. It's actually like what skills you're gaining while you get there.
Does it mean the token is not necessary to build up a community?
Oh, I think it's much harder to build a community without a token because at the end of the day, the token is still a great kind of incentive alignment tool. But of course, it also depends on how powerful the token is.
So, I mean, let's say with how would you be able to define like a more community-oriented tokenomics and maybe just a general tokenomics, or let's say a very good one and a bad one,
Well,
tokenomics?
Uh, Just to give you personal example, at YGG, 45% of the token supply has been reserved for community. So that's almost half of the entire token supply. And we still have a really high amount of that remaining. We still have around 40% of that remaining, which means that we still have a lot of tokens with which we can incentivize our community behavior for a long time to come. A lot of projects maybe cut or burn their tokens so that they can reduce supply during the bear market so that it would raise their market cap. We haven't done so, and I think when we're faced with a better market, then YGG is much better positioned to capture community value because we haven't skimped on our community supply.
Okay. So other than those, let's say learning points about tokenomics and maybe how you would be able to engage the gamers, is there anything that you think from your experience with YGG can be replicable to, let's say, smaller kind of or new game developers?
Well, if you're a new game developer, I think authenticity is what matters the most. You want to build with your community and you want to be authentic with them, and that's really where it starts, right?
Okay, authenticity, which I think is what everybody needs to start their product or their inception idea inception with, right? So
That's
yeah,
right.
you mentioned like I think for communities and especially also the gaming community, I think there's a very interesting topic on the actual interoperability. So we have talked about it. People have always mentioned that this is a must. This is something that should happen, like different games and so on. But then, do you think that actually right now, I mean, what is the real kind of demand for that cross game interoperability to make it happen? Like, is that a real demand behind it? And I mean, do we really need it as game developers?
Interoperability is a second order effect. If the products are good in the first place, then interoperability makes them better. I don't think it's the primary thing people need to solve for. I think people still need to solve for a very good product that users want. And then once you have that product, then interoperability actually drives a lot of cool interactions that allow you to mix with other products, with other communities that end up making your own product stronger.
Okay. And do you think like technically it's viable to do that right now, like with all of these like asset transfer and especially I mean I think there's a narrative on like on-chain transfer as well. Do you
Yeah.
really think that that's
Yeah, I
that's
think the technical part is not hard. It's actually just making interoperable assets that people want is the hard part.
yeah. How can we come up with some interoperable assets that people want other than developing a very good game?
I mean, like for example, with our game, it's very skinnable. We have pudgy penguins in our game, and we're looking for other IP from other games, other communities that we want to integrate in it. So that's already kind of an easy part for integration. And you can say that our game kind of launched with interoperability in mind from day one because we launched in partnership with the pudgy penguins community.
So what about other type of games who want to interoperate with your games, LOL Land or YGG? I mean, is there any sort of requirement or metrics that you're looking for in these kind of games?
We're looking for very strong, passionate communities that we would want to mix with. I think like DGen IP communities, I think are something that we're looking for. Yeah.
Okay. Is there any specific country or like market that you think might be like more might be potential partners to you at this point? Is it still mostly Philippines
No
or?
specific country. Like anywhere in the world is fine. Actually, the number one source of players in Lowland is coming from the USA. That surprises people because they always think that the players from like YGG's game are always from the Philippines. But yeah, our number one source of gamers right now is actually the US.
Okay. So, I mean, has there been any sort of attempt for you to approach the US consumers, or what is some of the lessons learned for you to be able to actually make it global? I think from day one with LOL Land.
Yeah, good question. I think with our work with Pudgy Penguins and on Abstract Chain, with the work that we've done with different content creators from around the world, that has allowed us to capture what is a very international user base.
Okay, sounds great. And I think that there would be some lessons learned and takeaways for some of the audience as well here if they want to partner with you for their games. So thank you for sharing all of the insider information and tips on building the communities. Yeah, I would love to maybe move on to I think our next topic, which is about, how it's going to look like with decentralized work and DAOs now that, as you mentioned, the communities are also very decentralized. And also, of course, with the team and the startups, they are also becoming very global right now. So I think with DAO, I mean, well, maybe starting with the controversial question first. I mean, do you think that the DAO is still a good narrative to build on these days with gaming communities in specific, and also with other communities in general?
I think DAOs have mostly failed. I can't think of a lot of really good instances. Maybe MakerDAO is a good one, but yeah, it's been a tragedy of the commons for the most part. It's like
So,
it's like homeowners association with tokens.
okay, do you think that that's something that we can fix or not yet?
It's definitely fixable. I don't think that the DAO might be the best structure for it. Definitely, you want decentralized participation. Decentralized decision making often leads to paralysis. And if you can see this with how governing structures or governments are made up. Typically, it works if there is a small but very highly empowered team that can make decisions for the group as a whole. But then the community has the power to install or maybe remove these people. I mean, that's how democracy works, right?
Okay, so to you, what would be what would the decentralized democracy work, let's say, in the future?
So definitely having a core leadership that is able to make day-to-day decisions without having to consult with the entire holder body. I think that is extremely important. And then having a review process where the entire body or the entire community has some macro goals that they want to achieve, and then these leaders can be judged by, and then maybe a process, election, whatever, in which we can decide whether these people are doing their jobs or not. I think that process, there's no governing process that is perfect, but I think that largely works.
So what do you think that's going to work with YGG? Let's say, just to be able to cope with this, let's say, decentralized governance or model in the future?
Yeah, so for example, with YGG, participation is decentralized in the sense that there are hundreds of guilds that work with us, participate in different initiatives, join us as a community, but the guilds themselves do not tell us what to do. They do not tell us what products to work on. That is still decided by the founders and the core team. And the fact that YGG still has all of its founders intact after 5 years of operation, I think is a very rare thing in the industry.
Okay. So maybe can you tell us about one of the, let's say, so I've heard about some of these initiatives that you are also launching or you have launched with YGG. I think one of them is called Metaversity.
That's
and
right.
Other initiatives as well. Is there any kind of initiative that you feel very proud of and that you want to share with everyone, just so that it would maybe basically be replicable to other enthusiasts?
Yeah, Metaversity is our technology educational program in the Philippines, not just Web3, but AI skills as well, so that community members can upskill themselves and be able to find meaningful work, a lot of them within the Web3 projects that we work with, and with some AI tasks as well. We don't want people to be like airdrop hunting or yield farming full time. We want to give them skills that actually allow them to have a job and steady income. And yeah, so we find those different skills and then we train up our community members via Metaversity, and we don't charge for this. This is free for our community members.
So you mentioned a very interesting topic, which I think is about career prospect, right? So I think before with the smashing success of XC, there has been like there are people who actually taking this playing XC as a sort of career, which they can thrive in the future. So do you think that basically with Web3 gamer, this is going to be like a serious sort of career path that you think they can consider in the future?
There's a viable career in professional esports. In fact, YDG has our esports team where we do have full-time professional players. However, this is not a lot of people. These are basically the elite gamers of the elite, and only a few people are able to make money basically playing games competitively full-time. I wouldn't recommend it for everyone.
Okay, right. We will not take this as career advice for what we are discussing today.
Unless you're very, very, very good.
You have to be very authentic and definitely very passionate about this for sure. Yeah, because definitely, I mean, like with Web3, what I find very compelling is that there are a lot of these educational initiatives as well, which definitely would help to educate people on how to get into Web3 and obviously on how to earn like a job in Web3 industry. So I think what we are looking for is that basically this is not going to be like a overnight industry. It's gonna be something that people can dedicate their profession and their expertise towards. So I think that moving on with that kind of topic, we also want to see how, let's say when we zoom in Southeast Asia, because this is where we are both coming from. I think, well, basically with Web3 work, how do you feel that, do you feel comfortable with using Southeast Asia as a sort of testing bed for these new models of Web3 work for you? And, or would you rather be more comfortable, like maybe going global, from day one?
Southeast Asia has always been very important for us. We have significant footprint within like Philippines, of course, within Vietnam as well. We have very strong communities in Malaysia. The kind of center of the money for most of crypto is within Singapore. So Southeast Asia is an incredible nerve center for it. However, making your product and marketing your product has to be global. You cannot be confined to your own region. So that's the biggest lesson we've learned.
And I mean, like from what I see, although I mean we have claimed a lot, like with a lot of games also claim that themselves that they are global, but I think that there are not that many, I think AAA, especially Web3 games that are coming out of Southeast Asia. I mean, do you think that that's still the situation right now, or is there any way that we can see it change in the future?
Well, if you see some of the most successful games in the last few years, a bunch of them have come from Vietnam. So there is, I think, incredible talent in Southeast Asia. Now it's just a matter of, are we able to match the skills with the types of games that we want to make with what the market wants to consume? So I think that is more of the question rather than can we do it. The answer is definitely yes, we can do it.
Okay, sounds wonderful. So we are also like moving on to some of the topics about, you mentioned AI, which I think is definitely one of the key disruptive technologies at this point with blockchain in general and other technologies. Have you seen any kind of major difference, between like AI games or AI sort of driven games versus the games before?
We haven't seen a lot of really broad-based application of AI in a lot of games right now yet. Having said that, I'm already seeing a lot of games under development that have very heavy use of AI all across the stack. Some of them more on the production side, a lot of prototyping, process improvement, creating prototype artwork. Of course, there are games that try to innovate with AI on the gameplay front. These have been more experimental, and I think there's no like clear-cut success yet, but I do expect to see one in the next couple of years.
So does it mean that AI is not like a like must-have skill for like the emerging Web3 gamers or developers?
I think AI is a must-have skill for anyone in the world right now. I think that if you're not learning how to harness AI in whatever skill that you're doing, you're being left behind.
So, I mean, like, let's say with AI adoption, I mean, we have seen a lot of these, I think, like also gamification sort of experience, to actually teach people on how to implement AI and use AI in their work. I mean, would that be something that you would consider? And do you think that this is going to be something that people can also like, think of different business models in the future?
Yeah, definitely. We're already seeing a lot of ways in which traditional processes are being disrupted with AI, and with the end result being a lot cheaper and a lot faster. Yeah, we're going to see a lot of disruption across the board for that.
All right. Okay, so now we have pretty much covered the topic of play to earn, moving on to free to play, the communities, and the future of work. Maybe I want to touch upon a bit about the topic about traditional kind of industries, because basically I think we are also talking about the convergence of Web2 and Web3 and how we would be able to drive more mainstream adoption. So I mean, in your work with YGG and also with your new game, how is have you started like to interact or engage with the traditional kind of players, and how is their perception so far, and how is their reaction so far?
So with the games that we're doing, we don't really engage with like a traditional player base. We really engage more with a Web3 casual degen audience. So yeah, those are the types of gamers that we interact with.
So let's say for the existing sort of Web2 games, and then who are looking into entering Web3, I mean, what would be your advice to them? Is there any way that would help them to, have an easier sort of journey of entering Web3?
I think they need to take the time to really understand what Web3 users want. People think that just coming into Web3 with superior experience in game development is going to make them successful in Web3, and the last few years have proven that that is not the case at all.
Right. So, I mean, yeah, we also mentioned about like, let's say if it's adoption by force or it's adoption by motivation, because it's not going to be like, it's not going to work for everybody. I think at this point, even though we really want to see everybody in the Web3 space. So I think we would definitely want to have some of the, some of the takeaways and some of the learning points that we would like to get from you, for the audience. So maybe now, maybe starting with a topic from play to earn and some of these narrative first. And so let's say for a new game developer who are looking to join the space, what do you think? I mean, other than authenticity, as you mentioned, should they kind of follow the narrative or the trending narrative right now, or should they just stick to what they want to build and test out the market, and kind of just hustle all along the way? What do you think is going to work?
Good question. I think narratives are good for tactics, but your product has to have something enduring that will work no matter what the narrative is. At YGG, we don't build for what the current narrative is, and we never have. We want to make sure that we have a fundamental truth of why our product needs to exist. However, when it comes to marketing, when it comes to community, then that's when we tap on narrative so that we can see how we can best present it to the user base.
And let's say like right now versus 3 years ago, when I think like we want to learn from your experience of growing your Twitter base to like 40 times right now. I think that's definitely the something that is not like universal. We cannot see it everywhere. I mean, but is there? Do you think that right now it's similarly visible to do that? Or is there any other sort of lessons learned or secret sauce that you can share with everyone to grow their social presence?
Yeah, definitely. I mean, I tweet often. I talk about the things that I know about and that people find interesting, and then every once in a while, a much larger account retweets me, and that's how your user base goes. It's a little bit random. You don't know when it'll happen. A lot of people start by replying to like very famous people like Elon Musk, hoping that they get retweeted. I would not start with Elon Musk. I'd probably start with people that are at the top of the field that you want to be in. Maybe it's NFTs, maybe it's meme coins, maybe it's gaming. And once they engage with you, then your account gains more visibility. That's what happened to me because I was tweeting a lot about NFTs and gaming when it wasn't popular. And when it started becoming popular, that's when I started gaining more followers.
So you should kind of dig deeper to find some of these potential trending topics and
That's right.
actually like build your presence even before that, right?
That's right.
So once you get to that sort of, let's say, status, is it hard to actually maintain that? to maintain the social presence?
You kind of have to keep active, or else you kind of lose it. So as long as you're maintaining active, you can maintain it.
So, for instance, I think with a lot of the games right now, of course, they're trying very hard with a lot of the engagement with the audience, and
right.
I mean there are some sort of let's say debates that basically the engagement schemes for Web3 games is not that massive anyway. So, what would you say to those people?
Yeah, find something that that can resonate with the market. I mean, for us, we haven't had a problem actually finding a user base for our game, even though the narrative for Web3 games is currently very negative, and it's because we've kind of hit the fundamental truth of matching a product with what the core users that we're targeting want.
Right. So again, it's going to go back to the let's say the product market fit of the
Correct.
game, if I'm not mistaken.
Correct.
So basically, it's going to be easier to build up from that narrative. So moving on to maybe imagining that you're not sticking to community builders, which is like me and other people who want to learn from you, like with from the experience of YGG. So how do you see? So we want to combine this question with the topic about future work and the toolings and so on later. So I think as always, I mean, for me, when I run a community, it's always very hard to actually engage the audience on a daily basis. And it's actually like a tough job. And basically you have to keep engaging people so that they can engage back. And that's always kind of this vicious cycle. Basically, have you seen any sort of models that's working? I mean, without much incentive for communities to actually be able to sustain, for the long run?
Yeah. So apart from just a pure social model, I think there has to be a product layer with what you're doing, that people are doing together. Even think about communities that are very active in sports. It's a sport that gets them together. People that are very active in playing games, which is part of what our community does. It's hard to be a pure social community product layer on top of it. And also, it's also very difficult, and I don't recommend monetizing via your community directly. But having that product layer actually allows you to monetize better, because then you're monetizing the product, you're not monetizing your community.
And I think there's some very interesting points that you mentioned, where you mentioned that we need to have like a governance team which is not impacted by, let's say, the decision from the community. I mean,
That's right.
How would that play out in the governance sort of structure, let's say, of a community? Have you tried to deploy any sort of new governance, or do you think that that's still like a problem to be solved in the future?
We haven't really actively done that yet. I think that if we're in a more stable place with how we act with our community, and we can give them kind of guardrails on where they can actually add more benefit by having governance, then we'll do so.
All right. So, maybe some of the last questions will be maybe more about you. So we want to know you better, and also maybe want to have some takeaways from you to the audience. What is your most favorite role if you are not like a game developer or a gamer?
Favorite role? I think I just like to hang out with my family.
Okay, so a family person. So let's say in a community, would you rather be like the one who's designing the community governance, or you want to be like a ambassador, or do you want to be like a treasury designer or something like that in the community role?
For better or for worse, I become basically the figurehead of the community. Yeah, so that's what I've been.
And do you think, what would it take to become the figurehead of the community? With that, I mean, like there must be a lot of conviction to it, but I mean, what motivates you to do that, or like to be the figurehead? Let's say at this point.
I really want to see our community members have a better life. Although it's a long game, it's not about people making money all the time, because that's never possible, and you can never promise that. But by showing authentic care, designing programs, and then giving people skills where they can actually do better for themselves, that's kind of what we want to do for our community members.
Have you started your succession planning yet?
No, we have not. I'm hoping that the community can figure that out for me.
Okay, so I mean, like right now, I mean, is there any sort of initiative or a scheme in the community so that they will be able to step up and maybe to like maybe nominate themselves for the figurehead position or something like that?
Well, there's a lot of leaders within our communities, definitely. So if you look at our guild leaders, our content creators, our educators, there's many different types of leaders, and I think that's what makes YGG work so well.
Right. So I think that we are coming very close to the end. Is there any kind of final wise words that you would like to share with the audience on top of everything else that we have discussed?
No, if you'd like to check out our game, just go to lol.land and tell us what you think.
So that will be your major announcements, I guess, after this session, right? Is there any other activity, I think this year or early next year, that you would like to launch as YGG?
Yeah, we're doing the YGG Play Summit in November in Manila, so please join us there.
Awesome. All right. Okay. Thank you so much. So we look forward to seeing a lot of people in our audience here at the YGG Play Summit in Manila this November. So that
Thank
would
you.
be like the final message from Gabby and me. All right. Thank you. And back to the organizing team.
Paul, how are you?
Hey, Kenzie, I'm doing well. How are you doing?
I'm doing well, man. Great to see you.
Yeah, great to see you
Excited.
too.
Yeah, totally. Excited to get this going, man. Let's let's powwow.
Let's do it.
Cool. Awesome. I'm super excited for, the new fund that you're working on, Fund 5. Congrats on getting that going.
Thank you.
So yeah, you're OG in the space for 11 years. Been with Pantera since 2014, so it's been, quite some time. My first question for you is, what are some most important lessons that you learned about deploying capital across these different market phases, different market cycles?
Yeah, it's a good question, and yeah, we've been doing this since 2013 when Dan made the 30,000 Bitcoin trade at $60, and then I got into this space in early 2014, really because I felt like Bitcoin was going to be a store of value, and Bitcoin and cryptocurrencies would help sort of facilitate cross-border payments and sort of enable banking for the unbanked. Me being Thai and from Thailand, Southeast Asia, felt like there was just a need for certain geographies to really sort of onboard onto crypto and get exposure to DeFi. And so, we started launching our venture funds in 2013 and 2014. And really, like, it just all comes down to the team, really is. I mean, that's the reason why we bet on Sentient really early on. It's really just, you, Sandeep, I mean, guys that we know that can operate, guys that we know that can execute, guys that we know that can do the business development, raising capital, navigate through market cycles, be around until the next cycle. I mean, I think it all just comes down to the team. Similar to actually one of the companies that just went public, Circle, right? I mean, talk about a cat with 9 lives. I mean, I actually bought my first Bitcoin on Circle, and the deal happened Series B right before I joined, like the month right before I joined, and I was like, man, this is an entrepreneur who's taken 2 companies public. That doesn't happen in a space that is still sort of nascent, and then he was part of the early internet. And so for him to decide that this is the time to get into crypto, and starting off with a brokerage in which I actually bought my first Bitcoin, to actually leaving the space and doing fintech, coming back on sort of the exchange side of things, then sort of launching Center, sort of a more of a decentralized stablecoin play, and then saying, hey, I'm going to go all in on stablecoins, USDC specifically, and build a whole business around that when there wasn't even quite sure what the business model would be. And then of course rates going up, becoming more of a sort of a treasury play, and now becoming like a platform for all of global payments. I mean, that's what I'm talking about, like getting in really early, backing these entrepreneurs and letting them figure out in a long period of time, what is going to be the eventual big vision, and be able to sort of take it to a large outcome. Obviously, this IPO is monumental, but it's still really early in terms of what they're doing. So I think there's a lot more growth to sort of have. And kind of coming back lastly to what you mentioned around our fundraise of $1 billion. And it is our 5th venture fund. And so the last 2 vintages, Fund 5 and Fund 4, we've structured it where it's not just investing into equity. It's not investing into Bitcoin and just liquids. It's not investing into things that are spin out tokens. It's all of the above. I mean, we're seeing this space, now, with public markets, seeing a lot of institutional demand, and this space is still early. They want to go with a trusted partner that can just figure out what strategies make sense over a longer period of time. And so as we think about this fund, we want to be able to shift across different strategies, knowing that, man, when the market's super hot like this, maybe you just want to do seed Series A's and you wait for the growth stage funds to come in and mark up all your deals. So that's our North Star, is really just like performance and returns. And so if we have the flexibility to go across different strategies depending on the cycle, that's the best way to invest. And so that's kind of our thinking around this next fund.
That's incredible, man. I did not know Circle was that early, by the way. You bought your first Bitcoin there.
Yeah.
Pretty incredible.
It's pretty insane. Yeah, we've done 22 unicorns. Circle's one of them, and I've led 17 of those unicorns. So it's been a fun journey to be able to like find those entrepreneurs that are passionate to sort of, be long term and sort of take these companies to large successes.
That's incredible. We noticed that lately there is this new liquidity now, and everybody's talking about it in the market, and that's in the public sector of these equity, crypto related equities, right? So for your new fund, how do you envision getting into those type of pre-IPO crypto companies?
Yeah, I'll just set the backdrop that like this did it, and for you and me, this administration is really just bringing a lot of tailwinds for greater participation from the institutional side of things. Just on a super high level, the fact that crypto companies like yourselves can now have banking, the fact that there's potentially sort of a greater crypto strategic reserve, to regulations within the US, both on the CFTC side and the SEC side, that hopefully will bring a greater foundation for regulations all across the world. But the fact that we've had a Genius Act that is providing clarity and comfort around stablecoins, who gets to be an issuer, what those stablecoins can sort of be in, and sorts of yield and things like that, to, of course, a market structure bill, hopefully, that will provide a lot more clarity on what's a security and what's not, and potentially provide fundamentals and business models around altcoins, where they're not just governance tokens, but you can really sort of have institutional investors come in and do a DCF and really sort of analyze these things and compare these things from less of a speculative nature. And so this is going to unlock a lot more sort of like normal retail activity, but also institutional activity into altcoins. But in the meantime, you know, until we're waiting for regulations and some of those killer use cases and sort of altcoins to just be able to have more clarity and sort of be fundamentally sort of in the hands of retail and institutions, the capital markets around public companies are starting to open up. I mean, one of our investments, Amber, you know, the fact that they saw an opportunity to be like the first APAC company, crypto APAC company, to say, hey, dude, like the US is where we need to be. And we've heard this from a lot of our portfolio companies wanting to hire a head of US on the policy, developer relations, and other sort of things. The US is now shifting to be the crypto capital of the world. And so we want to access the public markets. They were able to get listed on NASDAQ with their wealth management product. And, you know, we think that that's really going to open the markets for them to do a lot of interesting things and be able to build more of a brand and business over here in the US. And then, of course, you know, with Circle, you know, that's also providing just a lot more education and a lot more exposure for institutional investors. But, you know, along the way, I mean, MicroStrategy, I mean, what they've been able to do around educating folks around Bitcoin and providing access to Bitcoin for investors pre-ETF, and even with the ETF, then it's like, well, why are folks still going into MicroStrategy? And again, it's a lever that in terms of being able to have different instruments to be able to sort of build more and more Bitcoin per share, asset per share. That's kind of what we're looking at in terms of evaluating these types of structures. And they've been able to do a really good job of raising capital to buy more Bitcoin and provide, again, a different type of asset, but one that's still comfortable for institutions to kind of get access to a single asset. And so MicroStrategy continues to do what they do. And, you know, we believe that there is an opportunity for Bitcoin, for Ethereum, Solana, and especially ones that are sort of like larger cap and ones that, you know, are familiar to folks, especially if you build sort of the right structure and the right team around it. So Pantera has been the earliest in terms of seeding some of these, we call them digital asset treasury type companies. DFDV on the Solana side of things, we seeded the CEBT Cantor 21, and even more recently, the Ethereum one, Sharplink, led by the Consensus guys. But really, it's being able to provide a comfortable structure and being able to get leverage through the accumulation of the asset. And also the accumulation of asset could mean designing ways around staking and yield that just, you know, provide more assets into these structures so that people can, again, the KPI is, you know, assets over shares. So it's something that we don't see any fund being as early and maybe sort of providing as much capital in. So we're going to really sort of capitalize on this new trend. But again, we think that it's beneficial for the entire ecosystem to provide more access to these assets. And it's also an example of us just trying to think outside of the box, right? Like, you know, Kenzie, me and you talked about this, but like the public markets is for traditional finance is way bigger right now than the market that's looking to come into sort of traditional crypto assets. So, you know, to be able to access it right now in whatever sort of ways, I mean, that's what we're trying to do. We're just trying to find unique ways to get our LPs, you know, exposure.
Yeah, totally. You know, this is actually a really great thing that you just mentioned. There's a inflection point now. It seems like, you know, this, you know, liquidity is getting widened coming from the traditional market all of a sudden. And that, you know, introduces a new way of investing, right? And you also mentioned that this new fund, you wanted to have a all-in-one approach which offers flexibility. How do you envision your these buckets, right? Do you have some initial ideas on how you would deploy this capital? Like, for example, how much would be in tokens? How much would be in equity? How much would be in the digital asset treasury companies? What will be? What's your rough idea? Or maybe this is all. That's the whole reason for this to be flexible based.
Yeah, no, it's a question that a lot of folks ask us, and I'd say we want to give ourselves flexibility, but obviously when you go into structuring something, you have like high level parameters, and so I think for us, we put a bit into the liquid markets right away and sort of minority position, but a high majority of the fund is going to be in non-liquid strategies because a lot of folks, while they can they could get into things that are liquid, even though maybe not as the way that we get into it, but a lot of them are really looking for and feel comfortable around earlier stage investments, right? A lot of these institutions, they have a bucket for private equity and VC. So that is going to be a high majority of what we're doing. So that means like equity, early stage tokens, and we call them special opportunities, things where we, buy some secondaries, things that we go into like token treasury deals, or maybe even these digital asset treasuries, or maybe providing liquidity and things like that are just like a bit off normal than your traditional VC fund. And then I think at least half the fund is going to be focused on your earlier stage bets. And the earlier stage bets, we don't rule out any categories, and we don't do a lot of hardware. That's probably the only thing. But we are investing all the way from new blockchain infrastructure, and obviously like the on ramps, and supporting companies that will facilitate, that are sort of like token agnostic. Your brokerages, exchanges, your data providers, forensic, security, insurance, all that kind of stuff. That's kind of more regulated and more on the venture side. And then, I think what we're going to see in this next wave is really a lot of consumer companies. Kenzie, it's hard to compete against and create new consumer type products when you have to bootstrap by, going against some of the incumbents, right? But if you're able to issue tokenized shares that could be tied to some sort of form of economics, it's a great way to bring consumers and developers on board. So yeah, I mean, we're super excited that I think consumer, outside of what we've seen more in the bear market, kind of like developer infrastructure and things like that, really excited that consumer is going to come back. But the biggest trend right now, which two biggest trends, actually you're one of them, two biggest trends that I'm seeing right now is around AI and stablecoins. That's really where a lot of the conversations are at.
Gotcha. Yeah, for sure. And yeah, for sure. These are definitely the new exciting areas that are also getting a good amount of regulatory attentions. Now, what about the previous, these core infra and also RWA, DeFi, these buckets? What's your view on them for this new fund?
Yeah, we're really excited about DeFi. We're investors early on in Morpho and 1inch and Uniswap, etc. So we believe that DeFi is the infrastructure that is really going to provide the benefits for institutions to really want to come in I think initially it's going to be sort of probably DeFi in the back end, things that are crypto enabled. And you don't want some of these larger institutions dealing with the complexities of potentially onboarding directly with some of these protocols, but maybe Morpho powers Coinbase, which institutions interact with until they're comfortable going directly to these protocols, things like that. So we're excited about decentralized finance and how that sort of matures into more use cases where institutions, are kind of getting into, whether it's like, private credit to tokenized bonds, tokenized stocks, all this kind of stuff. And so, DeFi tokenization sort of go hand in hand. I mean, as we start thinking about USDC, and so we're early investors in Circle, early investors in Ondo, which is doing tokenized stocks, Figure Markets, which is at their yield-bearing stablecoin, YLDS, plus also mortgages on the blockchain, M0, which is infrastructure, allowing folks to launch their own tokenized USD. But as we start seeing more and more assets get tokenized, then it's gonna feed into DeFi in the back end, so that you can actually exchange all these assets in a 24/7 transparent, low fee way, and thus really provide the liquidity and operational benefits of the blockchain. So, we're really excited. I think going forward, I mean, how we're participating, we've already invested into a lot of DeFi projects. We'll continue to sort of look at new protocols that are providing interesting primitives on the back end, on the tokenization piece, while we've invested into some of the early guys helping to tokenize these assets. We'll probably see other types of assets being tokenized. Maybe it's real estate, maybe it's energy, things like that. And then we'll probably start investing more into the application layer, guys that are interfacing directly with users and businesses, because that's kind of where you can get more margin, right? Because if you're at the lowest level on the protocol level, sometimes your fees get compressed. But once you have that direct to consumer, direct to business relationship where you can continue to add more products and increase the average customer value, that's a very lucrative place to be in. So we're about to close a deal right now on the cross-border payment side, where they're helping to do, or they're already doing billions of cross-border payments using stablecoin backend. So yeah, we're gonna do a lot more of that.
Yeah, actually, adding on to what you said about these, a few stablecoin deals that you did before, like how big do you think the stablecoin, actual use case can go? And, what are some other, big unicorns that can come out of the stablecoin plays?
Yeah, I mean, I see it in a few different layers. I think there is, and until banks fully get into stablecoins, I think there's an area of really just providing the connectivity between institutions and stables, and that's what Bridge was doing, right? So I think there's that area right there that they got acquired for 1.2 billion. I think there's an area there where you can sort of focus as more and more assets get on chain. We're going to see a lot of on-chain liquidity that is needed for all of these assets, and then using stablecoins sort of in between as the sort of FX currency. So we do think that there's an on-chain component that will generate quite a bit of value in on-chain infrastructure. And then outside of that, I'd say on sort of the more direct to consumer or direct to business, there's going to be companies that will focus on really just being kind of like a new type of bank account that's run on stablecoins. where
Yep.
you can provide yield in a sort of global way, and then more easily be able to provide things like payments in a more seamless way. And on the consumer side, a lot of it is like, well, look, I mean, if I'm traveling to, and I know you guys travel to Dubai and India and all this kind of stuff. As a consumer, I mean, if I'm going and I'm traveling, when I move between one currency to another, gosh, I usually go to like the ATM in the jurisdiction. I pay these fees. I mean, what if I'm able to just like do it all on a bank account with like stables in the back end? So for traveling, I think that's a huge use case, or with remittances.
Yeah.
And then on the
Yep.
business side of things, a lot of these companies like SpaceX, these global companies, they have to pay their employees in these different jurisdictions. They have to, they do payments, and they have currencies that they just like leave in these local jurisdictions, and they have to sort of repatriate it. And then of course, just the business to business payments of business deals and transactions. And so I believe that there's going to be multi-billion-dollar businesses that are more global, but also multi-billion-dollar businesses that are more local, that focus on each of these different areas.
That's super cool. I know you went in pretty big into the Ton ecosystem. Are there ecosystem that's like that? Because Ton is like, a bunch of good stuff. They have so many users. They also have, a lot of different, use cases. Are there similar to Ton type of opportunities you're seeing right now, or potentially this is also like more similar type of deals happening for the new fund as well?
Yeah, we in terms of Ton specifically, I don't think there's another asset right now that's as compelling from both a scale of consumer user base mixed in with the fact that the entire early adopter base of crypto is all in that ecosystem, being able to sort of like innovate, try new products, DeFi, all that kind of stuff. So as they ramp up on the developer infrastructure to onboard more folks, I think there's just so much more potential. And it seems like one thing is almost guaranteed is Telegram use base is going to continue to grow, and the fact that they can open up in the US, I think, is just monumental, because that is the most valuable sort of demographic for crypto from sort of a wealth perspective. But in terms of if you're asking about like, are there other large blue chips that we can kind of go in there and really be hands-on and kingmake? I mean, I think our strategy is to be in a lot of these from the seed round and Series A, and then continue to double, triple down along the way. But there are some that we want to, whether it's a new fund or we just want to even just get more exposure, we'll go in there and say, hey, let's do a lockup, let's create another venture round, and let's figure out more ways to add value. And the way that we add value is things like this, right? Like we try to bring a lot of market awareness, and we bring our platform team really standing out in sort of 5 key areas: marketing, regulations, recruiting, research, tokenomics, and business development. So I think for us, like we're willing to sort of help kingmake in some of these other larger ecosystems. We're constantly evaluating the next batch.
Do you think as crypto OGs like you and me and a lot of our friends, a lot of us are believers of the cycles, right? 4-year cycle or whatever number of years. Do you think the cycle still is there? And I guess the follow-up question is, how do you, or will you time the market, in terms of investments wise, or are you just going to deploy it year over year at the same pace?
Yeah, I don't, we obviously have investment periods for our funds, and we want to fit within that investment period. But we've changed the deployment pace along the way. At the end of the day, we want to make sure that we can optimize return for our investors. So for instance, for Fund 4, I actually thought we would have deployed maybe a little bit quicker, but there's a couple of things that happen, FTX, Terra Luna, that may have extended the bear market. And, we wanted to make sure that, because we started the last fund in 2021, pretty high, right? So if you don't get a catch the rest of the bear market, and maybe as things start upticking, then you miss out on a little bit. So we wanted to, so we set to slow down a little bit, became very creative around new strategies, and then wanted to make sure we deployed well into this newer uptick of the next bull run. So again, that's what you're betting on for yourself as an LP, is that hey, these guys they've seen the cycles, they know what happens in terms of the types of entrepreneurs that come in terms of the valuations that happen throughout these cycles, in terms of where value accrues to liquids versus early stage versus not, and can pick when is the right time to both deploy and also stop deploying.
Very cool, very cool. The investment strategy in crypto has, changed a bit over time, right? So what do you feel now as for, you as an investor, how bullish are you on investing in crypto, and also compared to for example, AI, investing crypto versus investing in AI?
Yeah, I mean, I am super high conviction on crypto right now. I believe that the only thing left for crypto to really start hitting all-time highs and new milestones that are sort of huge step up from what we've ever seen is really on the regulatory side of things. And so we're going to get clarity fairly soon. Companies are going to operate feeling a lot more comfortably, and operating in the US, where I believe that there is the most talent for builders right now. And having, comfort that you can launch a token and figure out where it sort of sits, and being able to offer products like derivatives that have never been offered before, and really having more institutional buy-in and more enterprise buy-in. I think we're just going to see a wave that we've just never seen before to unlock global access to this space, starting in the US, both for retail and institutions. And then on the AI piece, AI and crypto are going to go together. I mean, AI doesn't succeed in a big way, I don't think, without crypto really helping to enable and optimize what we can do on the AI side, starting with Sentient. I mean, that's the first place you have to go to. We also invested into Sahara too. Both are kind of tackling in different ways, but the data, the models, the agents, I mean, it could be shortcutted and enhanced using crypto, blockchain, and transparency. And, I think you can invest into AI through crypto right now. And, if you're focusing on AI, it's really crowded. You know what I mean? You want to go where the puck's going, not where the puck's already been. And where the puck's going is crypto.
Yeah, yep. Cool, awesome, man. This is it's great. It's good to see that you are, super enthusiastic about the future of crypto. Awesome. Yeah, great having you today.
All right, thank you so much, Kenzie. And yeah, excited to really see where this goes. Both Pantera and Sentient are going to be part of the solution for folks to really sort of understand the space. So yeah, thank you so much to SCB and also Bloomberg and everybody else who's part of this.
Awesome. Thank you all.
Thanks.
All righty.
think that means we can start our conversation now.
Yeah, let's do it.
Great. So, welcome everybody to this panel. My name is William Robinson. I'll be managing and asking questions today while Yuan and Hasib answer them to the best of their abilities. I've promised not to put them on the spot, but we'll see what I can get out of them. And we'll start with introductions just to make things, I think, clear who's talking and why. I'll start with myself. I've been at Alliance for the past 4 years. I'm currently the director there. We're an accelerator for Web3 startups. Before that, I was a forensic crypto auditor. And before that, I finished a PhD in game design. And I help teams fundraise from VCs at places like Dragonfly and Blockchain Capital. That's me. So Hasib, why don't you introduce yourself?
Yes, so I'm Hasib. I'm a managing partner at Dragonfly. We're a global crypto venture fund, been investing in the space since 2018. And we back startups all the way from seed stage to Series A, Series B, and beyond.
And Yuan?
Hey everyone, I'm Yuan. I'm a partner at Blockchain Capital. I've been with the team for about 4 years. Blockchain Capital is one of the first venture funds in the world dedicated to investing in crypto and companies leveraging blockchain technology. And we invest from the seed stage to Series A, Series B, and Series C and beyond.
Fantastic. All right, first question's for you. So you became one of Blockchain Capital's youngest partners at 25. You bet your entire life on crypto. I want to know what gave you that conviction and what brought you into this market to invest across all of these cycles.
Well, it's funny you asked that question because it was actually, about four years ago, it was actually Hasib who gave me the advice and pushed me to drop out and commit full time to investing in crypto. I'm meant to be spending all my time in crypto.
That's true.
And Steve, I don't know if you remember, but at the time I was still, yeah, I was still in school. I was studying computer science and philosophy at the University of Pennsylvania. But I was spending pretty much all my free time in crypto, like nights and weekends. I'd be reading white papers, messing around on chain, spending a ton of hours in Discord and just asking questions, learning. And to be honest, crypto was my passion. It was what I was passionate about, spending all my time there. And school was kind of a hindrance, right? And I think speaking to Hasib, gave me kind of the advice. He basically pushed me and convinced me that I could really accelerate my career by going all in on crypto, right? I was already so excited about it. Why was I wasting my time in school? And I think that little bit of a perspective shift after talking to Hasib, it took a week or two for it to sink in, but after going back to classes, after spending the summer basically working full time at Blockchain Capital as an intern, I realized that he was right. I was kind of wasting my time. And so I decided to basically drop out of school and go all in on crypto, right? And I think it was one of the best decisions I've ever made. I wouldn't be where I am today in my career in crypto had I not taken Hasib's advice. So I'm forever grateful for that. And I think, wouldn't be where I am.
What was the thing that this is special?
I think it was two things, right? For me, one, I think the main thing was growing up in Hong Kong. And kind of as I was a teenager, I saw the political situation in Hong Kong radically change, just slowly every year. Hong Kong, throughout the late 20th century was one of the fastest growing economies in Asia. And I think one of the large reasons for that was because of the British common law system, right? If you're a business, you're doing business with China, you're setting up to invest or conduct business with other entities in Asia, you could trust Hong Kong's legal system and all the infrastructure that was there to basically fall back on, right? It was something you're familiar with, especially business in the West. And so everyone was coming to Hong Kong, and that kind of drove Hong Kong's economic growth, right? But I think as China sort of started encroaching on a lot of the rights and freedoms of Hong Kong, I kind of saw what these institutions that I personally believe to be very strong, they just slowly got eroded, right, bit by bit. And these institutions were not as strong as I thought they were. And so when I initially discovered crypto, I think back in 2017, during the ICO era, especially Ethereum, I saw, hey, it's this technology where you're basically building institutions that, are in some sense similar to a court of law. They basically help adjudicate disputes between different people autonomously using code, math, cryptography, economics. And so this seemed like a much better institution to build, the businesses of the future, the protocols of the future, the internet of the future, right? And so I think sort of that experience and kind of discovering crypto, it just kind of that was what red pilled me and caused me to, I guess, in school spend all my time on it.
Thanks. All right, I'm going to use two wild segues to get to my next question. You talked about going all in. Haseeb, former poker player. In order to play poker, you must be very good at human psychology. And now you can tell me how you think the cycles of greed and euphoria have been affecting your investment strategy over the past four cycles that you've been in. Are we in despair? What's going on next?
Well, so crypto, it's interesting because it's the most cyclical industry I've ever seen in my entire life. I'm sure there've been, back when I first came into the space full time in 2017, I remember a lot of people looking at what was happening during the ICO bubble and comparing it to previous bubbles in the past. So everyone used to compare it to the dot-com bubble. And then if you really had a sense of history, you were even comparing it to what happened at the advent of railroads, what happened at the advent of the automobile, what happened at the advent of the canal mania even farther back, and railroad mania even further back than that. And so there's a lot of historical precedent for when a new technology galvanizes people, gets their imaginations going, and also incites some kind of financial mania. And crypto, the thing about it that's so weird and so unique is that it's not just once that it's done that. It's done that again and again and again. Now, almost always, whenever there's this kind of financial mania around some concept, it's a sign of two things. One, that people are really excited and they're getting ahead of their skis. But second, that the underlying technology is actually really, really important. Almost always when there's a financial mania, what you can see is that the thing that they're excited about, whether it's the automobile, whether it's the railroad, whether it's the internet, it's a huge generation-shifting technology. It almost never happens that a financial mania happens around something that just doesn't matter at all. You saw the same thing happen with renewable energy in the green energy mania that happened just a couple of decades ago. But crypto is unique because I've never heard of this happening multiple times for the same technology. And it's a sign that there's something also unique about crypto itself, is that unlike any of these other financial manias, it is the substrate itself for its own speculation. That is the thing about it that's so new and so weird. It was a little bit true of the internet. They're like, okay, you could trade internet stocks on E-Trade, but crypto kind of jacks that up to 11. So because of that, it's really important as a crypto investor to always be able to be optimistic about the technology, understand where the technology is going, have some lived experience like Johan was describing, of just using these products yourself and living in the future the way that everybody who's in crypto has to have that ability to really understand what we're doing today. More and more people are going to be doing 5 years from now, 10 years from now. In the same way, early users of the internet, on some level, they were drawing the line out a little too quickly about how quickly the world was going to get online, but they were wrong. They were wrong in how quickly it would happen, but they were right that it would eventually happen. And it was true. The same thing that all the early internet adopters were doing, 10 years later, everybody in the world was doing. I think that's going to be true for crypto as well. We're already starting to see it in the amount of users that are coming on chain, the amount of TVL you see on chain, the amount of stablecoin adoption you're seeing around the world. All of those numbers are telling you that what we were all doing 5 years ago, the rest of the world is coming onto. It's just taking a little bit longer than it did for us to come on chain. But it will eventually happen. So as an investor, what does that mean for you? It means that, one, you have to be patient. You have to understand that it takes longer than you think. The standard mantra in Silicon Valley is that people tend to overestimate what can happen in 2 years, but underestimate what can happen in 10 years. And in crypto, that's overwhelmingly what my takeaway has been, is that when I first got into the space in 2017, everybody thought it was going to take 2 years. Everybody thought overnight, the whole world is going to come on chain, crypto is going to eat everything, all assets are going to get tokenized, blah, blah, blah. And if you look back what happened in 2019, 2020, it was that, that did not happen that fast. But here we are, almost 10 years later, and you're seeing it happen now. And I think this is again one of the stories of crypto, is that you can't be too greedy, you can't be too impatient. You have to give the technology time, not just for the technology itself to become more robust, not just for users to gain trust, but also for the regulatory story, which again, crypto has been around for almost 20 years now that crypto has existed. And, it was 2008 that Bitcoin initially launched. In 3 years, Bitcoin is going to be 20 years old. And yet we still have not had a single law passed in the US about crypto, which is bizarre for a technology that's this old at this point. And so what all that tells us is going to take more time for this industry to bake. Now, you ask the question right now, is this greed or is this fear that we see in the market? Again, it's an interesting moment because it's a combination of both of those things. You see enormous amounts of greed. We just saw Circle do their IPO earlier this week. And Circle, absolutely blockbuster IPO. Right now it's trading at an insane multiple in public markets. And that's now galvanizing a lot of activity happening on chain as well around the excitement around stablecoins. So I think you're seeing, and the same thing, look at the Coinbase multiple. Coinbase multiple is very high. All that is telling you that the public markets have a lot of demand. Bitcoin is near an all-time high. A lot of assets are doing extremely well. At the same time, a lot of other things are well below their all-time highs, right? So you see, Ethereum and Solana are both, about half of their all-time highs, and significantly below where they were just earlier this year. So you're seeing different things happening in different parts of the market. And I think what you'll continue to see is that the crypto market increasingly is not going to move as one entity. I think what you will see going forward is that the market is going to be, there's going to be a lot more dispersion among different assets that behave very differently from each other. And so what happens in the meme coin market versus what happens in the alts versus what happens in Bitcoin versus what happens in public markets, you might see the four of those really differentiate into their own organisms that move very differently because they're different buyers and different liquidity dynamics in each of these different markets.
So I have a unique perspective on one of the markets, which is venture, because we have about 50 teams come out of Alliance a year looking to fundraise. And despite Bitcoin being quite high and these Circle IPOs doing so well, teams are having a harder time raising than they used to. And it's certainly not because we have worse ones. We have more and more teams applying to Alliance every cohort and a narrower margin to get in. So the sense here is that instead of term sheets being signed within, 2 weeks, they're now getting signed at the 2-month range. And we're getting this sense that VCs are running out of the capital they used to have. My best guess is that they just raised a lot during the zero interest rate phenomena days from LPs, and that their returns have been poor. So not only have VCs done badly because prices as a whole have gone down, but in addition, LPs have less money than they used to. And so we're seeing a trickle-down effect. But I was wondering if you could validate that from your perspectives or invalidate that. Certainly the time to diligence is longer than it used to be anyway. So I wanted your perspective on that from the founders out there who may be thinking about raising or fundraising and expect something more reasonable in 2025 than they would have gotten in 2022, for instance.
Yuan, you want to take a stab at that?
Yeah, I think, Will, you bring up a great point, right? Like, I think there's been a lot of dispersion across the venture market. Like, I think whether it's early stage or later stage, I think especially at the later stage, it's even harder. I think the seed stage, it's still harder than, say, 3-4 years ago, right? I think you're absolutely right that a lot of funds, have underperformed and are struggling to raise their next fund, which I think, the effect is much more pronounced at the later stage, especially with generalists and some of the growth stage funds like Tiger, who are in the market back in the ZERP era, leaving. I think it's also happening at the seed stage. But I think from what I'm seeing, even at the seed stage, yes, diligence timelines are taking longer. But I think for the best teams, they're still able to raise, right? And I think also for a lot of the best teams, there's still, in my opinion, a lack of discipline. I think for the absolute best teams, there's still plenty of seed funds out there who are very interested in backing them. And that often leads to valuations kind of going up and climbing. And then I think at the later stage, one of the reasons it's harder, not only is there, less capital than before, but I think because of this effect where you have this herd of seed capital funds, right? Seed funds trying to go after the few best teams, that pushes valuations up and means that the milestones those teams need to hit to raise their next round of funding are just much more difficult to hit, right? And so I think, like you see it at the seed stage, but it gets even worse as you go to later and later stages where it's just much harder than before to raise money. And Steve, I don't know,
Yeah.
you guys are seeing the same thing.
How much less capital do you think there is? Like, what's your gut like percentage?
That's hard to gauge. I would say probably 60 to 70% less capital would be my guess. It's hard to say because there's a few really big funds that kind of skew the average for the entire industry. And once those funds turn over and they go raise their next vintage, and their next vintages are almost certainly going to be smaller than their ZERP vintages, that's like the big reset for the industry from the top. I'd say it's what you're describing is true, and I think this is true not just in crypto. This is true everywhere. This is true. You talk to YC, you go talk to people who are in AI. Even a couple of years ago, the AI deals were getting funded much more easily than they are now. We're talking about the mega raises, people raising $500 million, $1 billion. Those are still happening, especially because of a lot of sovereign money coming into the AI world. But if you look at the early stage, it's a similar story, is that it used to be really easy for a couple kids coming out of Stanford or Berkeley with a half-baked idea in AI to go raise $5 million. That's not happening anymore. And so this phenomenon is universal. And what happened in ZERP is never coming back, right? That is unless we get some kind of financial crisis or something and interest rates actually drop to zero again, we are not going back to that world. That world was a financial anomaly. It was a world where money was so cheap and money was so in search of risk that it was basically almost trivial for anybody with any half-baked idea to find a way to put money to work, no matter what the track record or the provenness of a particular financial opportunity was. That's what ZERP meant. We're not in a ZERP world anymore. We're in a world now where a lot of institutional LPs have a really, really strong counterfactual to their investment, which is to just hold safe financial assets like bonds and treasuries. So that financial discipline is affecting everybody in the world. So crypto startups are not unique in that regard. And in a way, I think you should be looking at what's here as the new normal, right? Because the crypto market is actually, in objective terms, is not doing bad. You've seen a huge rebound in crypto asset prices relative to where they were at the beginning of last year. Obviously, things have gone up and down, and there's been some financial instability and macro instability that we've seen over the last year. And as I mentioned, we've seen even with something like Solana, it's down like half from peak to trough, even just this year alone. So there's definitely some movement, and that's going to be affecting how valuations flow through to seed rounds and Series A's and Series B's. But this idea that, it used to be that seed rounds would get done in like a week or a week and a half, and you'd have 5 different people bidding on and getting in a bidding war over the average seed deal. I don't think that's coming back ever. It is a phenomenon, as Yuan Tan mentioned, for very hot deals and for the very best founders. But the median deal being as aggressively picked over and moving as fast as it used to, I think that's the new normal, and founders should expect that to be the way that seed rounds work going forward.
Thanks. Yuan, I want to talk about your tokenized fund structure. So BCAP is semi-unique in the space in that it has a token, and you can buy it to get exposure to your fund. Now, when I joined crypto, that sounded like a regulatory nightmare, virtually impossible to do. Surely there must be some strict limitations to what actually is going on there with this fund and what you can and cannot do with it. But I was wondering if you could just walk us through the mechanics and what you might have learned putting a fund on chain.
Sure, yeah. I think I'll start with kind of the story of how that fund came to be, and then I'll talk about some of the goals and then the mechanics. But back in 2017, during the ICO era, Boston Capital as a fund, we saw all these teams go out to raise these large ICOs. We were pretty skeptical, to be honest, of a lot of these ICOs. We didn't really participate in many of them. That we saw them as having weak fundamentals, and the valuations were just far too high relative to what we thought they deserved. But what was really interesting to us was the mechanism, that the ICOs were using, right? These teams could avoid going to venture capitalists, and they could raise from their communities, their users from around the world, right? Not just a small group of people with capital and access to the capital we're able to raise now. And to us, we viewed that as potentially very disruptive, right? To venture capital as a business, to us as a business. And so we thought that we wanted to stay ahead of that possibility. And if venture capital was going to be disrupted, we wanted to be, at kind of the forefront of that ourselves, experimenting. And so, for our third fund, we decided to, as a proof of concept, to try out this tokenized fund structure. When we raised it, it was meant to, we raised a pretty small fund. It was a $10 million fund. It was also, I think, one of the first, if not the first, tokenized funds and security tokens in the world. And the goal at the time was we were hoping that through this kind of mechanism, we would be able to improve, one, accessibility for investors who wanted access to venture as an asset class, but two, also improve liquidity, right? I think on the first goal, it was quite successful. We raised the fund in 18 minutes from investors, I think, spread around 75 countries around the world. We even have African LPs there, right, which I think is fairly uncommon for venture funds in general. But on the second fund, I think, Will, to your point, it was a lot more challenging, that being the liquidity part of it, right? We were hoping, hey, like by launching tokenized fund, LPs could trade it, maybe hopefully it'll trade at NAV or close to it, right? But I think it's proven to be much more of a challenge because of the regulatory uncertainty. I think Haseeb mentioned earlier, back in 2017, everyone thought, hey, like we're going to have laws, the institution is going to be here in 1 to 2 years, right? And here we are 6, 7, 8 years later, and we're finally, that's on the horizon, right? And so I think we've tried a few things over time to improve the liquidity side of the story. We moved the token to a layer 2 rather than being on mainnet to make it cheaper. But I think without additional regulatory clarity, it's very difficult for the infrastructure supporting trading of security tokens to improve. And so there's still a lot of paperwork, there's still a lot of mechanisms there that are just outdated that make it very hard to really fulfill the second goal that we were initially hoping to fulfill when we set out to raise our third fund.
Thanks, man. All right, I got one for both of you. At Alliance, we have every alum review every investor they ever get. And we've collected thousands of reviews of different VCs. And both of you have gotten very favorable reviews for the hands-on help you do with your founders. But it's not always clear what that means. And so I was going to ask each of you what you do to be value add so that your founders can tell other founders, hey, come take this guy's capital. He's going to move your chains. So yeah, are we talking whiteboards, intros, coaching sessions, therapy, something more esoteric? Let me know. How are you being a value positive contribution to your investments?
I'd say, yeah, in my case, it depends a lot on the founder. It depends a lot on the team. Is that it's not really a one size fits all. There's a lot of stuff that Dragonfly as a platform. We support all of our founders with respect to things like recruiting, regulatory, getting listed, figuring out your tokenomics if you're very, very early and you're kind of having all that stuff figured out yet. At a partner level, a lot of the time, you support on whatever it is people need. So if they need some help with BD, they need introductions, they need this, they need that. But a lot of times, like the most valuable stuff that I do at our portfolios is mostly around like solving the really big problems that they're facing. And the really big problems can be problems of strategy, like positioning, branding, not realizing that the way in which they're telling their story isn't really resonating with the world, and helping them to reposition their story. It can be a co-founder drama. Very often, one of the things that is actually most likely to kill startups is not failing to get product market fit or not having traction. It's just the team falling apart, and just the human drama that naturally occurs when you have people who are really butting heads and wanting to pull a startup into different directions. Sometimes it's marriage counseling, sometimes it's helping them through some kind of nasty lawsuit. It's really it really runs the gamut. And so the places where I found historically that like when founders tell me, oh my God, Haseeb, you really saved this company, it's almost never like, oh, I helped with the tokenomics or something. It's almost always like the real kind of human stuff that They call me in the middle of the night. There's some shit going down at a startup, and I'm there to help them out with it. We help with all the stuff, but the special touch that makes people really remember you is almost always the kind of the left field stuff that you really just need another human being to be there to help support you.
Yeah, I believe that. I've seen us have to break up co-founders, and that's like a really difficult and thorny task. And you only really trust your VC to do it, like as this third party who's like interested in the company's success more than anything.
That's right.
Okay, how about you? Are you on?
Yeah, no, I think both of you are hitting on a really great point here, right? Like, I think at the end of the day, if I think about like for the founders I've worked with who have kind of hit the next level, right? And in our conversations after that, when we have, drinks or a chat, sometimes they tell me some of the most valuable things that I've helped them with or we have helped them with. There's often things that they were not aware of themselves, right? That they did not see on the horizon. They did not view it as a problem. And I think the most valuable thing that, we do when we work with the founders that we back is offering them that kind of perspective, right? We've been around, for many, many cycles. We were founded in 2013. So we know where the bodies are buried. We know all the mistakes that you might make as a founder that you might not even be aware you're making, right? Whether, it's refining your narrative to one that makes it more digestible to people, whether it's having the hard conversations that, hey, like maybe you guys need to add a co-founder with this expertise, or, you guys are not the best fit for each other, or it's like, hey, like maybe you guys should think of pivoting. I know you really believe in this, but it's really clear that the timing of what you're building is wrong, right? Having those hard conversations with them and basically having the perspective of having just been in the industry and having seen so many startups fail and succeed over time. That perspective is really, really valuable, I think, when we work with founders. Of course, we help them with hiring. We do a lot in the regulatory front. We spend a ton of time in DC, so we know, what's going on, happening, what's likely to get put into the bills. We help with marketing and PR. We run infrastructure. We help them with introductions when they want to do BD with one of our other portfolio companies or someone else in the space. But I think at the end of the day, like, the most valuable thing is what Haseeb's describing as kind of that personal touch, right? It's that advice that's, not one size fits all. It's like the pattern matching that you develop from having been a venture investor for a number of years, just having seen companies succeed and fail and what works and what doesn't. And the insight that you gain from seeing all of that and basically tailoring that to the founder and what they're working on at this moment in time and at this moment of their company's trajectory.
Great. Okay, all three of us have offices in New York City. And I think that Soho is pretty clearly turning into a crypto sandhill road. I walk down the street like, oh, there's Paradigm. Oh, there's Multicoin. Oh, there's BCAT. I mean, not everybody exactly on the same street, but we're getting a sense that if you want to take building your startup seriously, moving from rural Switzerland to New York City could be a good step. And at the same time, a lot of the problems that crypto needs to solve right now can't be solved from New York City. They have to be solved with like QR code payments in Indonesia, or money exchange houses in Colombia. And I think that we're seeing a global problem needing to be solved while at the same time having a clear crypto capital hub form. And I was wondering how you guys advise your startups around the geography of where to build your company or how to think about crypto as having a location or not. I'll start with Haseeb.
I think it's really hard to say that in 2025 it matters all that much where you are domiciled. Yeah, except like the tax and other stuff, obviously that matters. But it used to be pre-COVID, roughly 60 to 70% of all of our investments were in the Bay Area. After COVID, everybody scattered. You saw the rise of New York City as a hub. That's also when you started to see, Miami and Puerto Rico and these sort of green shoots in different parts of the US. But even today, now that things have re-centralized, and you're absolutely right, New York City is the #1 city for crypto in the world. It's still something like probably 30% of our founders are in New York. It's not the majority by any means. The vast majority of our founders are somewhere else. And that somewhere else could be some are in the Bay Area, some are in, Austin, some are in London, some are in, Singapore, and some of them are just in random places that you wouldn't think that a crypto startup ought to be. Because the reality is that crypto is extremely online. It's very global. As long as you have access to talent, you have the ability to hire, it doesn't really matter where your people are. And I think especially this is going to become even more true with the rise of AI and the way in which it's going to enable smaller and smaller teams to be able to output the same amount of software. That is going to accelerate this trend, that you're going to see more and more of this. In a way, what matters is not where you are physically, but rather where you are culturally and intellectually. Right? It's really important that you are able to reach the people who are in New York. But you can reach them online, because all of you, I spend more time online than I do spend in any office. And the same thing I think is true of almost everybody in this industry. And so in a way, it used to not be the case that if you really wanted to pitch quote unquote Sand Hill Road, you actually had to go take a flight down to San Francisco and go drive down to Palo Alto and go meet everybody in person. That's what it used to mean to go to Sand Hill Road and raise from VCs. Today, that's really not true. There's a lot of founders who are able to raise capital from all the big New York VCs without flying to New York City. And I think that again is a mainstay that in a post-COVID world, we're not going back to that.
Wait, how many of your checks have gone into teams you've never met in person?
A number of them. I'd say, I don't know how to estimate. I'd say
but more than zero,
probably
which is crazy,
more
right?
than zero. Yeah, I'd say maybe like
Someone you've never
10%.
met in person is remarkable.
Yeah. I mean, it's not it's definitely rare. More often than not, we'll meet them in person. But I'd say something like probably 10% of founders we invest into, we haven't met in person. We meet them in person eventually, but we don't necessarily meet them in person in order to do the deal.
How are you, Yuan? What do you think about New York?
I mean, I think, I'll echo Steve's point, right? Like, I think we've also backed teams that we've never met in person. We might meet them in person at some point. Maybe we met them in person, a year ago at like a conference, right? Like, crypto is also unique, and you have these conferences that are pretty well attended precisely because the culture is so remote first. And I think at the end of the day, the things that matter most are, well, the reason why I think New York might be important is, yes, there's a bunch of VCs here, but because there's also a bunch of teams that have some presence here, you can get deals done here, right? So on the BD front, and I think especially if you're maybe selling into the more institutional space, being in New York, you have maybe more of an advantage than if you were an SF, right? But I think if you were, say, building in AI, crypto AI, being an SF is probably going to be much more advantageous to you than being in New York, because the quality of talent that you can hire who's worked in AI before, who specialized in that, they're going to be located in SF, right? But also we have teams, who are based in places like Africa, right? Because most of the customers are based there, right? They're working with stablecoin, payments, helping move, money in and out of Africa, and being local there matters much more to their business than actually having a presence in New York. But I think we invest globally. Oftentimes we met the team in person, but there's also instances where we haven't before we make an investment, but we'll always meet them eventually. And I think whether or not you're in New York, crypto is so online that you don't really need to be here even to raise. But I think for a lot of companies, if you have deals to be done, having some presence in New York makes sense. It doesn't necessarily even have to be the founders, right? You could have team members here, especially as you get larger. But I think really at the end of the day, what's most important is can you hire, and where are the people you're hiring? And also, so many crypto orgs are remote first, and they can access this global talent pool and have people located around the world, and they make it work, right? And so, I don't think being in New York is at the end of the day that important, even though all the VCs are here.
Great. So regulation is in flux is a polite way of saying crime is legal. No, I don't think crime is legal, but certainly that's the meme. And we're changing the way that you can operate in the United States and in other places due to recent political changes. And I think that's changing the risk appetite for founders. For a long time, we had founders who wouldn't even step foot in the United States because they were so scared. And also changing the kinds of projects people are open to building, though maybe not so much around privacy yet. But I'm wondering how this change in regulation has maybe changed your perspective on what's fundable or not fundable, or whether it's changed what you're excited to see people build or not, given that there's a new openness and a gray zone we're currently in that may close down into something different in a few months. Haseeb again.
I think, yeah, I'd say for most of the crypto VCs that you know and love, I don't think the present moment has really changed that much about their risk appetite with respect to investing into things that may be regulatorily more risky. Because the reality is that we've been funding regulatorily risky things the whole time. And the question is like, okay, why were we doing that before when there really was a sort of Damocles hanging over the industry? And I think the answer is that the crypto industry has always been kind of weirdly optimistic. It's true of founders, it's true of markets, it's true of the question of why is it that funding rates in crypto have almost always been positive, even in bear markets? And the answer is because everybody in crypto is just really optimistic. Everybody in crypto just thinks that things are going to work out. That somehow okay, the regulators are going to realize, even in a Gary Gensler world, that no, my idea is really being done for the love of the game, and I really do believe that this is good for the world. And that if I can just get in the room with Gary Gensler, he's going to understand. A lot of people just genuinely believe that, right? Like you might ask the question, before the election, before Donald Trump came into office, the rise of New York City as an epicenter of crypto already started. It wasn't like, okay, now that Trump's elected, everyone can go to New York and go be in this awesome city and go party. People were doing that in 23 under Biden, under Gary Gensler. Why were they going to the place where you have the bit license, you have all the regulators, you have all the financial might that could bear down on the industry in basically the US government's backyard? Why? I think because, again, people were just kind of weirdly optimistic that they were going to be fine. I think that story is a big part of the reason why there's so much continuity, is that we've continued investing into things that even the prior administration has said, this stuff is totally illegal, this stuff cannot happen, DeFi, even things like meme coins. These things were right in the crosshairs of regulators. We didn't know at the time that all this stuff got funded, that, come just, 6 months ago, there would have been a jubilee for the entire industry. Now that's true. It's maybe true in principle that you can bet on weirder stuff, but if you've been betting on weird stuff the whole time, for me at least, it means that nothing really changes. It just becomes a lot easier for these companies to operate and cheaper for them to get off the ground. But were there ideas that were unfundable 6 months ago that are fundable now? It's honestly difficult for me to really think of any.
That makes sense. How are you, Yuan?
I completely agree with Haseeb. I'll just add that I think the one thing that has changed as a result of the new administration, I don't want to say regulatory clarity because no bills have been passed yet, but this gray zone that's certainly much more optimistic than I think call it a year ago, is I think with this new regime that we're in, I think everyone can sense that institutions are a lot more excited, right? There's a bunch of people who maybe wouldn't have looked at crypto before who are now looking at crypto, whether they're fintechs, banks, financial institutions, or Web2 tech companies, right? And I think what that means is if you are building in crypto, I think from a thesis point of view, what we're more excited to back and work with, to Steve's point, there's no ideas that we would back now that we wouldn't have backed maybe a year ago. But I do think one thing that has changed is how we prioritize things. So I'll give you an example, right? I think because of this regulatory kind of call it sea change, this regime change, I think, and all these people entering into crypto and figuring out what they want to do, I think it makes having a very unique strategy to get distribution much more important, right? Especially with some of these people, right? Because you have this wave of people coming online, on chain, I think if you have a unique ability to basically go after them, or you have another unique insight that basically lets you go to market with a bunch of the people who are now coming on chain that maybe wouldn't have come on chain had, we not gotten this regime shift. I think that's now a much more valuable kind of insight to have as a founder. And so it means that we might be more excited to work with certain founders who view things a little differently or have a unique strategy or unique thought process with regards to some of these things than we would have a year ago had this not all happened. But I think in terms of ideas, fundamentally what they're actually building, to Steve's point, I don't think there's anything that we wouldn't have backed a year ago that we would back now just because Donald Trump came to office.
Got it. Okay. So I think the people at REDeFiNE wanted us to talk about long-term investors watching this, people trying to get some alpha out of this call, who are seeing this regulatory uncertainty, who are seeing these ups and downs and these booms and busts, which is the name of this panel. How do you give advice to someone, which I don't know why you would be placed to give this financial advice, but I'm going to ask you anyway. How do you give financial advice to people who want a dollar cost average and stay disciplined in volatile crypto markets?
Yuan, why don't you take that one?
I'll start by saying this is not financial advice, right? I'm not giving financial advice here. But in my personal opinion, right, like I think none of us have a crystal ball. We don't know what's going to happen with macro. We don't know what's going to happen with interest rates. We don't know what's going to happen with tariffs, right? There could be any number of things that happen that make it very difficult to basically predict where prices are going to go, right? And so what I've personally always done is I've tried to just invest in things I have conviction in, I've done research into, and I dollar cost average, right? And when I think things are maybe a little overheated, I might dollar cost average to sell. When I think things are, people are maybe too scared, I dollar cost average to buy, right? That's personally how I've always approached it, and just focusing on things that I've had long-term conviction in. But that's just how I've done it. It's my opinion. Definitely not financial advice. But yeah.
You gonna touch the radioactive
it's
football?
So did you touch what?
Are you ready to touch the radioactive football? Which is the question I've...
Yes. Yeah, hand it over. So I'll say, look, at the end of the day, we are VCs. We invest into private markets, and I think that's the place where we have the most alpha and the most insight. I think I'm pretty ready to admit I'm at the point now where I have no alpha in public markets, or at least not in terms of the majors, right? And I think if you asked me last year of, hey, what do you know that the market doesn't know? I said, okay, crypto's going to go up. Very clearly, this market is undervalued. People aren't paying enough attention to the fact that institutions are coming into the space. Stablecoins are going to continue to grow, and this is going to be one of the big financial stories of this decade. I think now the market gets that. I think that everybody in the world fucking gets that. There's no longer this informational arbitrage that I think I have from understanding the way in which market cycles have come and gone. I think now you've got BlackRock telling that same story. You've got Fidelity telling the same story. You've got PayPal, Stripe, all of them telling the same story. And you've got every financial institution in the world looking at how they're going to launch their own stablecoin. So the honest answer is that I think probably of any time that I can remember as an investor, I think right now I have the least alpha of any time that I recall in the recent past. I still think my ability and the reason why we do what we do is that we can identify and win investments into the best and most promising startups. That's where my alpha is in terms of what I do as a VC. But in terms of public markets, I genuinely have no idea at this point where the cycle is going to end or begin, what are going to be the roadblocks on the way. If you think about it in objective terms, macro is really not that different than what it was at the beginning of this year. And yet you see alts are down about half of where they were at the beginning of where the cycle started. Why is that? I don't know. I really have, at this point, very little ability to explain what's happening in the kind of the macro picture of what's happening in crypto cycles. And so as for what I do myself personally, and once again, not financial advice, is dollar cost average in and just hold the assets. That's kind of it. The more cute you get, the more you try to time markets, the more you try to be really clever and having some complicated thesis. I've been in the space long enough to have seen many, many investors describe to me their very complicated thesis about this thing's going to happen and that thing's going to happen and this part of the cycle and that part of the cycle. And in retrospect, the answer was always just buy some. And at any given year, you go back, the most complicated theses all lost to the really simple thing, which is just own some crypto. Just do that and you'll be fine.
That seems about right. But you say that the whole world is now in on it, right? They all know crypto is the future, but it feels like they've been in on it before. And then when the price went down, they're just like, jokes, we fired that marketing team. We've never been on crypto ever. It feels like that could be around the corner again, right? Prices tank 80%, and Stripe looks the other way and says, we were never pro crypto to begin with. You don't think that's going to come for us? You think we're past that moment where it's abandoning us?
I think there will absolutely come a time where crypto feels uncool and where crypto gets a bunch of egg on its face once again as an industry. There's no alpha. There's no way that an industry can actually go up 2, 3, 4, 5x and not have the ability to go down another 50, 60%, right? There's no market that works that way. The volatility comes two-sided. And that's part of the reason why crypto is so difficult and why there's still money to be made, is because there's still this ability to have enormous reputational ups and downs in affiliating yourself with crypto. That being said, there's a lot of doors that are one way. And I think we've walked through some of these one-way doors already, which is that the US government now has crypto on the balance sheet. We have more and more countries around the world putting crypto on the balance sheet. We know that it's happening in many of the sovereigns in the Middle East. We know that it's happening in countries in Asia. It's just recently that we heard that Pakistan is now putting crypto on the balance sheet. More and more countries, this will just keep happening. More and more financial institutions, the big banks. We now have the BTC ETF is the fastest growing ETF in history. First to hit 70 billion, I think about a third as long as it took the second best ETF in history to hit this milestone. So these numbers, they're not going to get undone. But is there going to be another big scandal? Is there going to be another big drawdown? 100% there is. And this is part of the reason why
it's big drawdown.
Here first. No, look, at the end of the day, that's the only reason why there can be alpha in holding crypto, is because, I used to ask myself this question is, at the end of the day, crypto is technology, it's software. Why is it the case that there's room for a Dragonfly, a blockchain capital? And why is this whole industry not just going to get subsumed by the Sequoias of the world, the benchmarks of the world, the Red Points of the world, the founders funds? Why is it that there's even a role for somebody like us? And if you think about it, that wasn't really true in AI. There's no AI native funds. There's no, for most of these technology trends, there's no chatbot native fund. There's no social media native fund. Overwhelmingly, these have been caught by all the big generalist technology funds, because this is technology, right? What exactly is so different about this that it requires a whole new set of investors? And I eventually realized what it was. The thing that gives us the right to exist and the right for this market to be actually dominated by crypto native specialists is because crypto will make you look stupid. Crypto will make you embarrassed. And the thing it is that we can stomach that the generalist investors cannot is the reputation damage. We've gone through years where crypto was the coolest thing in the world, and we get invited to all the parties, and we get all the Twitter followers and all the amplification, and it's we get invited to all the podcasts. And then you get another 2 years where you don't get invited to any parties, where all your friends are embarrassed to know you, where you're no longer considered to have a high prestige career, right? And if you're a generalist VC, you cannot handle that. You cannot handle your LPs thinking that, oh my God, what did I do giving you my money? That's so embarrassing. But we can. And that is the thing that gives us the right to exist. And it's the reason why we've compounded these edges into now becoming in Super Bowl, where now the generalist VCs actually can't win the best crypto native deals. That I don't think we're done with that. We will eventually be done with that, but we're not done with that yet. And that's why I think this symmetrical upside and downside in the volatility of crypto is going to continue to exist, at least for some time.
More embarrassment to come. I thought I had suffered.
Okay, it's not over till it's over.
Oh my gosh. I think I lost. I was in the academy. Every academic I work with, totally embarrassed that I exist as a crypto. All right. So, Yuan, as a representative of the crypto native generation, what would you tell TradFi professionals about building and preserving wealth across future crypto cycles to continue on our trend of advice for people? So if you talk to these generalists, or if you talk to these people outside of even VC, how do you think TradFi ought to think of and invest in crypto at this point?
Well, again, not financial advice, but I think what's maybe different now from even a few years ago is that I think I think it's a little easier for TradFi professionals to understand certain aspects of tokens that they might want to invest in, right? Like I think there's a much larger focus now from crypto projects to earn revenue, for that to be on chain, and for people to clearly be able to see, hey, how are they making money? And to basically attribute all of that on the transparent blockchain, right? And I think that's very unique. That means that every block you basically get an earnings report of a company or a protocol or an application, right? And I think for professionals, we're very used to valuing things based off fundamentals and cash flows and revenues. That's pretty easy to grok, right? I think a few years ago, that was very different. There was maybe, a handful, 2 or 3 protocols, projects that could claim that. Today, there's many, many more, right? And I think there's many, many more protocols and projects for whom that's become much more of a priority. And I think we're going to shift into this world very soon where I think it's going to be priority for everyone in crypto, right? And I think in that kind of a world, it's going to be a lot easier for people to understand crypto tokens and why some of them are valuable, why some of them are not valuable. Of course, I think you're still going to get, weird experiments. You're still going to get token mechanisms that are harder to grok and harder to reason about why it's valuable to someone who's not spending all of their time in crypto, right? But I think that is one shift that's happening that I think will make it a lot easier and a lot more accessible to people who are not crypto native to understand why some of these tokens are valuable, right? And so like that's one piece of it. Again, not financial advice, but I also think if you're not spending all your time in crypto, it's still a little hard to think about why some of these things might be valuable, right? Like, sure, you might see the revenue, you might see, them making tons of money every block, people flock to them. But I think a lot of these things, even the revenues are very, volatile. 1 month they might be printing money, and the next month they're not, right? And I think a lot of the use cases and what people are actually doing and why they're making money, they're also hard to understand unless you're spending all your time in crypto, right? And so I think there's also still definitely going to be edge from being crypto native and spending a lot of time using these applications yourself, figuring out how they work, why people are using them, what's popular, what's not, what is actually sustainable as a product that's always getting better. They're shipping fast compared to the other product that seems to be making money right now, but they're not innovating anymore, right? And they're not moving fast, they're not iterating, and they're being left behind by the market, right? I think you can't understand that without spending all your time in crypto. And even if you just look to the numbers, even if they're doing great this month, maybe next month, if you were spending all your time using the products, you would have already known, hey, these guys might be getting left behind and taken over by their competitor, who's right now not making as much money, but might make a lot more money in a few months' time, right? And so, I think one, it's easier to understand, but two, I also think unless you're spending all of your time in crypto, it's going to be pretty hard to basically, have alpha, right? And again, my advice would, again, not financial advice. It's not my advice. My personal opinion would be that because of that, I would probably still stick to majors, and the absolute most blue chip assets, and to stick to those rather than moving further down the long tail, even if the revenue numbers look really great.
Sure. Thanks. Okay. I wanted to change gears here and talk about what it is crypto is building. So for a really long time, it feels like there's been one dominant app in crypto, which is pick which coin is going to grow faster than the other coins for the cheapest price, right? I'm racing Bitcoin versus Ethereum, choosing what to mine. Coinbase comes out, now I don't need to mine it, but I'm still picking which coin's going to go up. NFT craze on OpenSea, I'm just picking which coin's going to go up. Friendtech, I'm picking which coin's going to go up. Pump Fund, which coin's going to go up. It's just a continuous casino on Mars, as some people call it, for a lot of people. Now, don't get me wrong, there are some stable coins out there and some payment rails that are revolutionizing finance, but it feels like the lion's share of attention and value being created is around this speculation, gamble-fi existence, what people call degen crypto. And it doesn't seem to be taking a smaller role as time goes on. It seems to be taking a bigger one. So I was wondering how you as VCs who fund these things square your fiduciary duty to your LPs to make the most value possible by investing in the biggest successes possible, and your duty to yourselves and the world to invest in things that actually make the world a better place. And maybe casinos on Mars do, and maybe that's your philosophy on the world. So I'm happy to hear what you think you're doing as a contribution for future generations in fostering and allocating capital in the right places.
So I would dispute that story. Oh, sorry. Go ahead, Johan.
Oh yeah, please do.
I'll just quickly start and say, yes, I think the use case of crypto thus far, well, one of them has been speculation, but I also would dispute that it's bad or negative, right? Like I think if you look at DeFi summer, that was almost entirely speculative. People were yield farming, crazy APYs, food coins. You look at them, why are these coins valuable? But if you look at stablecoin supply before DeFi summer, I think, the number of stablecoins that were in existence was maybe 5, 10 billion. What was that used for? It was for people to move money around across centralized exchanges quickly. Again, speculation. But what did DeFi summer do? I think post DeFi summer, stablecoin supply ballooned, right, to north of 100 billion, north of 150, closer to 200 now, right? Maybe even surpassing that. I think what did that enable? That allowed people around the world who actually, needed access to US dollars to save, to beat inflation, to basically protect their family's wealth, to raise their kids and have a life and basically build wealth in a location where maybe they can't trust institutions that currently exist. That enabled that, right? And that wouldn't have happened without the speculation driving, the number of stablecoins in existence up. And I think because as more and more people start adopting, stablecoins and some of these other use cases are less speculative, right? I think stablecoins fundamentally have very strong network effects. And I think as more and more people adopt them, the DeFi infrastructure that thus far has been powering speculation can also start powering things that are not speculative, right? And I think as you add more and more nodes to this network, it becomes more and more useful to anyone else who joins this network. And at some point, maybe people want to do business with these people in developing countries. Companies start moving money around, and then the other companies in the West want to do business with them. And then suddenly the world's on chain, and before you know it, everyone's adopted DeFi. And it's not just serving a speculative, degen gambling. It's also serving very real use cases that are certainly helping people around the world live better lives and to help their families out.
Got it. So the take is YieldFi is to finance as pornography was to VCR. It's this sort of lascivious, not necessarily evil, but kind of icky thing that everybody's doing to push a technology forward for the better, is how I'm hearing it. Haseeb, how about you? You said you were going to dispute the claim that, and I had a lot of them, so I want to hear which ones you want to dispute. If all, that's fine. Go ahead.
So it sounded like the thrust of your story was that, look, the main thing happening in crypto is gambling, speculation, and that is only accelerating as crypto has gotten more mature. And I think this is just not true. If you look at the top 5 assets in crypto, they are Bitcoin, then Ethereum, then XRP, then BNB, then Sol. I'd say of those 5 assets, only one of them is primarily this sort of casino type activity that's galvanizing almost all the activity on the chain, which is Solana. And if you keep going down the list, you see more and more. Next on the list is Tron. I'm sorry.
Sorry, did you list BNB? I thought I heard you say BNB.
I did. Yes. BNB.
Is that not part of the same ecosystem of just speculating for fun?
No. I mean, BNB has existed as top 5 basically for like 5 years now. And like the rise of meme coins on BNB chain really happened, I don't know, a few months ago. But BNB chain has not driven its valuation that much because of meme coin activity. BNB chain, if anything, it's primarily the ecosystem for Binance. It's it's an enormous ecosystem. There's a lot of TVL.
Binance exists for retail.
Your claim is that Binance is primarily about speculation, period. I mean, if you look at meme coins on Binance, right, or like Coinbase, right, if the claim is that, well, all these things do is speculation, then you're kind of assuming what you're setting out to prove, which is that the only reason why you would buy any of these assets is to speculate. I would claim that the reason why you're buying these assets is to invest. That's why people buy Bitcoin. That's why people buy Ethereum. That's why people buy Solana, right? You might buy a meme coin because you want to speculate. You might buy some long tail random, ICO that you've never heard of because you want to speculate because it might go up 500x or go to 0. But the casino, as you're describing, is like, at the end of the day, if BlackRock comes into the game and is tokenizing these things and putting them on into ETFs so that institutions can buy them, I think that's the point at which you have to admit it's no longer speculating, it's investing. Sure. And for these assets, right, like the kind of volatility they have is high, but it's not really that high relative to a stock in the S&P 500. Actually, they're very comparable. If you just look at what Tesla stock does on any given day, it's probably more volatile than ETH is. So long story short, if you look at what's happening on Binance or Coinbase, you look at what's clearly speculation, right? Meme coin trading. It's about 25-30% of trading volumes is in meme coins, even for a Coinbase or a Binance. The vast majority of what people are buying and selling is technology. It's much closer to investing into tech stocks than it is going to a casino and betting on the number 47 at the roulette wheel. So that's why I would say that this stuff is always there. it's never going to go away because it's human nature. But is that the main thing happening in crypto? I would say almost certainly not, right? Like Bitcoin dominance right now is at 65%. That means 65% of what's happening is just Bitcoin. Bitcoin alone, clearly no longer really a speculative asset. And to say that everything else, I would say it's probably on the order of 30% of what's happening outside of Bitcoin is speculation. In which case, the number that I would arrive at is much closer to 20% of what's happening in the overall market, or 15% is gambling speculation. The rest of it needs to be explained some other way and has much more to do with DeFi, with stable coins, with technology innovation than it has to do with, okay, this is just a casino in the sky.
Great. Well, thanks for that. We have to wrap up. Our time is done. Thank you so much for all your answers to all my questions. I had a great time chatting with you, and I hope the viewers had an interesting time listening to you as well.
Thanks, Will.
Thank you,
It was
Will.
great.
My pleasure.
Hello, everyone. I think we are live right now. So thank you all for being with us in this session. My name is Bam Bam or Tomonrat Chushat. I am the Pudgy Thailand lead of the Pudgy Penguins community. And with us, we have a very special guest today. I'm super excited for this session. Luca, it's always a pleasure to moderate for you. Please give us a quick intro.
Hey, super excited to be here with you, Bam. And I'm Luca Netz. I'm the CEO of Pudgy Penguins and Igloo. And excited to have this chat with you today.
Super excited for it. Well, I think we should get right into the session. It's going to be a long one. I have so many questions for you today, and I'm hoping that we'll get some good alpha from this session. So thank you for having us. Let's get started. How about we start off at the beginning, kind of where you started or initiated with the whole Pudgy Penguins project, right? I remember there was this one really iconic thing that you said, which was, if I wasn't able to close my eyes and picture Pudgy Penguins as $1 billion brand, I never would have purchased it. So that sentence has always stuck with me. And I just would love if you could walk us through kind of the initial vision that you had after seeing the IP and check in with like how it's evolved into today's reality.
Yeah, I think Pudgy Penguins was the only NFT project that I told my friends to buy, and it was really because as a collector, I saw the vision, I saw where this could go. I knew that these things were identities. I knew that Pudgy was the most universal identity in crypto, meaning a woman loves it, a man loves it, person in Asia or America or middle of the world, no matter your age or your demographic, everyone loves the Pudgy Penguin. And for that reason, I always believed in it. So I started off as a collector. I think I held like 15, 20 Pudgies, before I acquired it. And, unfortunately, the current founders at the time were not experienced enough to kind of drive this puck forward. At no fault to them, the project ended up kind of dwindling into irrelevancy. And rather than complaining and talking shit in the DMs, I decided to step up and put my money where my mouth is. And look, if I believe this is $1 billion thing, and if I believe in NFTs, then ultimately, I should show and show people what we've got. So I think that was kind of the early starts of the story. I think, where it's kind of transpired and evolved into today is a pretty interesting journey. I think we were kind of forced to building the brand as early as when we first bought it, I knew what we were going to do. I didn't know necessarily how we were going to get there, but we basically bought the project in down-only conditions, and it's been relatively that since we took it over, at least from an altcoin perspective. So I think when we bought it, we thought to ourselves, well, there's a lot of things that we can do, whatever, but then FTX blew up and then royalties went to zero. Then it became increasingly clear that we were going to have to build a real brand with real revenue that does real things in the real world. If not, we were going to look like a bunch of dorks and fools for buying this NFT project for the money that we bought it, and we would have failed. So ultimately, we really want to make pudgy penguins the face of penguins around the world. When you ask a friend or a family member, who's your favorite penguin? I want them to say Pengu. And on the other side of it, I think we are the best representative and mascot for crypto. And so what I mean by that is like when you actually look at crypto, yeah, when you look at crypto and you think about it, you know, Pudgy Penguins, the entire story kind of packaged into this blue penguin is ultimately, I think, one of the best stories that aligns with crypto ever, right? You have this huge, momentous NFT project that's featured in the New York Times. It's started by a bunch of 18-year-olds. They can't drive the puck forward. Community members step up and buy the project and take it over, and then become one of the brightest shining lights, in crypto across all organizations. And then this character resonates with everyone, man, woman, 50 or 5, and so like all encompassing, I think it just has all the ingredients to be this mascot, to be this face. And, as we continue to, make huge headlines and huge strides in the real world as we compete with Mickey Mouse and some of these other legacy incumbent IPs, I also want us to, represent crypto and stay crypto native and stay to our roots as much as possible. And so that's a little bit of a synopsis of, the last couple of years and how we got here.
Yeah, I absolutely love that. I mean, when you say you saw the potential in it becoming the face of crypto, it becoming like the mascot of penguins and stuff, I think it really reflects with, community members, holders, everyone wants to rep their penguins. Like I'm repping my penguin as a PFP. It feels like a family. It feels like a place where you can be. It's just good vibes. All the builders there are amazing. Community members there are amazing. And I feel like everything, like the puzzle pieces kind of just fit together perfectly. But of course, definitely not without the struggles. Pudgy Penguins, like you said, there's a bunch of lore behind it. It could become a novel, in my opinion. The project, it went from 0.03 to peaks right now. I think we were at 20 ETH floor price. What sort of key strategic decisions actually drove that kind of 100x value increase, beyond the normal NFT speculation that we've ever seen?
I think it's a couple fold. I think one, the community really believes that this is becoming the mascot of crypto.
Yeah.
I think on the other side of it, I think people really believe that this is maybe this generation's Mickey Mouse, maybe the internet's Mickey Mouse. I think people within crypto also understand that the Pudgy PFP is a tool, meaning if you have a Pudgy PFP or a little Pudgy PFP, there's a lot of opportunity that can be yielded from that. If you go into the right rooms, I know a lot of BD guys, business development guys in crypto that wear a Pudgy PFP, and they'll tell me they're like, dude, my rate of closing deals is up 50% because, we kind of lead with the Pudgy and the friendship, and then we kind of close some sort of business relationship together. And then I think it's kind of one of the last safe havens in terms of the cool kid crew, within crypto, and it's really easily identifiable in that respect. I kind of give an analogy quite often, but I think it's a good one. If you kind of look at crypto and crypto communities as a cafeteria, which table do you want to sit at? I think when you own a Pudgy Penguin and you PFP it, you're kind of sitting at the cool kids table, right? Because if you look at the people who PFP the Penguin, it's billionaires, it's founders of multi-billion-dollar companies, it's elite traders, it's family people, right? So you don't even need to be financially well off, but it's just good people who are about memes and laughs. And I kind of made a joke internally, but it feels like, there's a lot of drones and bots just in the world in general. And in crypto, I think that's even more prevalent because a lot of people are trying to get it out of, their financial hardship. I think crypto is a good vehicle for that. But when I meet Pudgy Penguins in real life, it's almost it's like the real people in crypto. They're real. They're not like the weird person that kind of you meet and you're like, oh my God, what did I get myself into? And so it's just this high concentration of, I think, good people that do good things. And, if you want to join the cool kids club in crypto, whether you're a man or a woman, right? Big key here is Bam, you're a part of the community, but we're one of the few communities that I think have a super high concentration of women. So it's just like this melting pot. It's kind of like New York City of crypto communities. We've got everything and everyone, and it's kind of the place to be if you kind of want to level up your crypto journey.
Yeah, I I really love that that comparison of like it being sort of like the New York City where you have everything because I've been to a couple like Pudgy Penguin events myself, and what you said is exactly true. I've been in many NFT projects, and Pudgy's has the most diverse crowd. You have Asians out there, like shout out to the Asian peeps who are pushing hard to grow Pudgy's in Asia right now. Cheryl, shout out Aaron, and a lot of amazing builders. And you also have a lot of women, which is something that I absolutely love because you always need that safe space to be able to go to, and I feel like Budgies is able to do that. Now, I'm just going to circle back to kind of like the original lore that you were talking about earlier, and I noticed that you mentioned the royalties as well. And I know there was a period of time where the royalties were kind of like what projects were using to sustain itself. Um, and you mentioned before that the royalties sort of provided like a safety net that sustained operations. So, how were you able to build a sustainable business model that could survive through the crypto market cycles, the royalties sort of, being cut off, and everything like that? What went through your mind during that situation?
Yeah, that was really hard because I was
Mm.
kind of banking on that to float the business. I mean, long story short, we didn't pay ourselves for that year. The first year we took it over, there was no salary burn from an executive team. And it wasn't until we started making money selling our own products did we
Mm.
decide to scale the team up. And that was probably one of the hardest parts because we had nothing. It looked like we were failing. Community was so cool. So most communities like bully you when the floor price goes down. Pudgy doesn't do that. So that was good. We didn't get bullied. Um, but it was hard. I mean, that royalties going to zero was a big needle move in a really meaningful way. And it wasn't truly zero. So there was a little couple dollars trickling in. It was 0.5%. Today, it's really zero. Today, Pudgy Penguins on makes 30 grand a month from royalties, like from a couple nice people wanting to actually pay the royalty because they pay homage.
Yeah.
And so yeah, it was tough. It was tough to say the least. Probably one of the hardest times. And then I tried to raise venture, and I was raising venture for 6 months. No one would fund. And then 1KX stepped up in a big way. And once we raised, we were in a good spot.
And that's a lot of stuff that even I, as a community member, didn't know what was going on behind the scenes, and it's really good that we get to talk about that in this session. All I can say is I think you guys pulled through it really well. Speaking from, I guess, personal experience, I see you guys working, I see the project growing and building and achieving all these amazing things. And I think you handled it as best as you could there, and you did it perfectly, flawlessly. Now let's get into some of the more, I guess, success cases about the Pudgies, along with kind of like the different business ventures that you guys have done in both Web2 and Web3, since the topic is digital. So I'll get into my first question on that part. Pudgy Penguins achieved over 13 million in retail sales across Walmart, Target, Walgreens, all these different stores out there. Can you break down your phygital playbook? How do you successfully bridge the actual Web3 IP into the traditional retail channels?
Yeah, it's interesting because I think it comes down to the IP, right? Like there's magic in Pudgy Penguins, no matter what you think your personal preference is. Trust me when I say there's magic in this penguin. The penguin does the heavy lifting, right? I think like the big thing for us, because Walmart told me no initially, right? Like the big thing for us was Web2 social proof. We do Web2 social media, I think at a clip that I think is one of the best in the world, Web2 or Web3. For people not familiar and the people listening, Pudgy Penguins across all our social accounts on social is north of 10 million followers, YouTube, Facebook, Instagram, the whole nine. And we've done that on basically relatively no spend. And we've really done that in only 2 years because the first year we grew 50,000 followers on Instagram, and that was our best because we didn't have any money. And so that was a huge part of it because you have to be able to move units and followers and impressions, do that. And then, obviously on the Pudgy side through Giphy and stickers and line and all that, we're getting 3 to 4 to 500 million views someday and impressions on the Pengu character. It is easily the most adopted crypto native IP of all time, meaning no crypto IP born out of crypto is more popular than Pudgy Penguins. And I think we were just able to make a compelling case there. And then obviously once we got into Walmart, we're on our fourth order at Walmart, meaning, yeah, that was my big worry was Walmart ordered 1 million units for that first quarter four run. And I was like, we're not big enough to sell 1 million units. Like, yeah, and the problem is like if we got into Walmart and we're out like 6 months later, it would have been a big problem. Because, it would have signaled failure. But I'm so happy and proud and thankful for the community and anyone in crypto who supported and bought those toys. Because to be on your fourth order in Walmart as a brand that's been around pretty much for 2 or 3 years, 2 real years, is monumentous. And now we're in 10,000 retailers across the world. GameStop, Target, Hot Topic, Five Below. We have, a bunch of different retailers in Asia, Smiths in the UK. So we've really succeeded there, but people don't even know, like, we have more than just the toys, right? We have the physical collectibles that are reselling on eBay for 2, 3, 4, 5x. That's exclusive partnerships with Network, which is like a huge, collectible, marketplace over in the US. And then we had Sasome, which is over in Asia, absolutely hit it out of the park. And then we have the machines. So the arcade machines, whether it's the digital arcade machine. So we have over 500 arcades out there in the world right now. In Dave & Buster's, Chuck E. Cheese, literally where people are going and playing and having fun. Pudgy Penguins is everywhere. And then we have these claw machines. So we didn't announce this. Maybe this is the alpha, but there's a huge claw machine company in the US called Amuse Games. They have like a couple hundred locations. Those will be rolling out shortly. It's the leader in claw machines in the US. We have a partnership with Basic Fun. So, Knott's Berry Farm, all the big amusement parks in the country have Pudgy Penguin plushies, that people can win when they're doing, making prizes. I mean, I don't think people really understand the gravity of how big this thing is, specifically in the West and honestly in the East. But the East, Bam Bam, credit to you, credit to the rest of the crew. In the East, we don't have as many big partnerships or initiatives, but the community is just as strong, if not stronger. So we're like a big global brand in the West, working on being that in the East, but we have an insanely large and vibrant and passionate community in Asia that I'm so thankful for because you guys just do so much over there simply for the love of the penguin. So our physical product strategy, and I think the important part in all this, because we're talking about Fidgetals, is, every toy that we sell is an NFT licensed from the NFT holder, right? They get a royalty in perpetuity paid. That is a really beautiful and frankly paradigm shifting initiative that like nobody in the world has ever done. Like think about the gravity of that and the case study of that to some extent, because most people, brush it off and it's like, okay, that's cool. But this is actually a kind of big deal when you think about like IP and brands. Like our early collectors, our NFT holders have a chance to license their NFT to the Igloo company. We then take your NFT and bring it to life in the form of a plushie. And every time one of those plushies sells, you get a royalty, right? Like that is a really beautiful relationship. And then, and only possible in this crypto phygital, world. And then it gets even better because every toy that we sell comes with a QR code. You scan that QR code, you redeem some NFTs. All of this is gasless. All of this is through an extracted wallet experience. And it really is just like a 0 to 1 amazing onboarding event, which by the way, we've onboarded hundreds of thousands of people through the toys doing this onto being on chain and redeeming their first ever NFTs. So it's a really beautiful story here because people will be like, oh, well, they're just selling toys. Well, yeah, well, it's just toys in the biggest retailers with the most distribution that is licensing IP from holders and also putting NFT and crypto rails into the hands of everyday people, right? Like it's not just toys, right? If it was just toys, like maybe I would understand, some of the haters, but it's really such a beautiful story in its totality. And we're really the only company to have ever really done this, right? Like no one's done this at scale, or even not at scale. No one, even a year later, a year and a half. I mean, it's almost been 2 years since we've been in Walmart. 2 years after we've been in Walmart, like still nobody's replicated this.
Yeah. Yeah, I feel like one of the, I guess, biggest achievements that I feel for the Pudgy Penguins would be the actual revolutionizing of how you guys managed to kind of like finish this loop of like Web3 to Web2. It's like you said, right? You're licensing out holder NFTs, like community member NFTs, making them into these toys, and then you're onboarding Web2 people without them even knowing it or them having to worry about it. Like my cousin, for example, she's like 11 years old. She's in the UK. She bought Pudgy Penguin toys from Smith's Toys because I told her like, hey, I really love this IP. Like, I'm working with them on building like an Asian community and all this, and you should check it out. It's in Smith's Toys now. And she bought a bunch, and then she's been playing like the game, and she's been accepting these like trades on Pudgy World, and she's absolutely loving it. And she doesn't even have to know or have to worry. Her parents don't even have to worry about NFTs being scary or anything, because literally it's just a cute penguin. And I feel like that's where you guys kind of like sort of, you finish the loop there. Like you're able to make sure that everyone involved is able to feel appreciated, enjoy, and just vibe and be happy. And I that's one of the things I think like you did really well on, in terms of just bringing this whole thing to life in the traditional market as well as in Web3. Now,
Appreciate it.
no, it's the truth. It's facts. Another notable achievement, your Jiffies. Your content, I just saw today, I think has reached 50 billion views on Jiffy now. And you said that previously, when you started off, you had 50K followers on Instagram. Now your follower numbers are increasing on a daily basis. There's new people talking about the Pudgies. There's new influencers playing with the plushies here. They're playing with the mascots. They're like seeing them around town, engaging with them in different ways. What's the secret to that? What's the secret to creating viral, mainstream, friendly content from a Web3 IP without actually losing the crypto native community?
Yeah, it's pretty interesting because this is really relevant, I think, to, what we recently did with Pengu, and like one of my theses around it, which was like meme coins today seem like pretty lackadaisical in their execution and what they do. And the GIFs really inspired me and convinced me that like Pengu needed to happen, because what are GIFs? GIFs are expressions, and Giphy is an expression engine. Tenor, stickers, whether it's line or cacao or Giphy or Tenor, right? Like GIFs are expressions, and those platforms are expression engines. And a majority of people use GIFs to make memes and to communicate something funny or to make something lighthearted out of maybe a serious conversation or even a funny conversation. And Elon Musk said the person who controls the memes controls the world. And Luca Netz says the person who controls the GIFs controls the meme, and the person who controls the memes controls the world. Because memes and GIFs are synonymous, they're the same thing. And so when I say and I tell people, look, we have 50 billion views on Giphy, and we're getting 300 to 400 million views a day on them, and they ask themselves, well, why does that matter? Well, it is the meme coin. It is the meme. It is the internet meme. I mean, because nothing, like, you can say your thing is a meme coin, but where's the meme? Where I don't see it. I don't see people memeing with it. I don't see people using it as a meme tool, right? Yeah. With Pudgy, it's unequivocal. I mean, this is the most highly impression meme in crypto, and it's a statistical fact. You might not agree with it because your bag, you don't have a bag, and you have a different bag, and so your bag bias, right? But remove that from the equation. The fact is simple. Pudgy Penguins Pengu, from a data perspective, from a statistical perspective, is the most highly impression meme in crypto by far, by a landslide. No one can statistically refute that, right? Yep. That is a fact. That is a data-driven fact, and don't even take my word for it. Just run the numbers. I've run the numbers 100 times, right? And
Yeah.
so like that Giphy is so important. But half of those GIFs are NFTs that we made out of people's it creates a sense of belonging. Like, what is a community without like a handshake? All cool kids have their little handshake. Like, our GIFs are our handshake. It's our way to communicate. It's our way to, signal to somebody else that this person is a bro or this person is like a friend. And it's just a really great aha moment, I think, for everyone in crypto to kind of engage with them.
Yeah, I mean, I feel like it's instinctive for people, you see the GIFs, sorry, I don't want to offend anyone here, on Twitter, you want to engage with it. Like, you want to reply with your own GIFs if you have them. Like, I have my favorite one, which is like the spinning spoon one that I requested a while back. I use it daily because I'm like, I'm a part of this, and then you can share it with your friends. And then everyone else is like, oh, let me share mine. And then you see Web2 people also using it, and they don't even know what's the background behind it. They just know it's a cute penguin and they enjoy it. And that is like so amazing to see, just like it slowly proliferating into everyone's lives without people even having to, force it, or without the team having to force it. It just comes naturally because we're in the age where people communicate with GIFs. We're in the age where people communicate with memes. So why not hit that market? I think you guys, like you said that perfectly, and I think you guys are doing amazing on that side. Now, another thing that I really, really want to ask you is, you've said before that people want upside for their fandom. So when it comes to this, how does that fundamentally change the entertainment IP business model compared to the more traditional licensing approaches?
Yeah, I think like the big change is like I take a little less money home into the company, right? Like, if you have community members who are sharing a piece of the pie, we make a little less money, but ultimately, like, I'm not worried. Like, I know, like, my whole thing to the community and my actions are a testament to this. Like, I just care about bringing value to the community. I know that if I make my community members rich, they'll reciprocate that value when the time comes, right? And so from my perspective, like, I don't really care too much about that. I think it honestly just tells a more compelling story. And if I'm a Star Wars collector or a Pokemon collector and I see this Pudgy Penguins thing, you might be collecting that other stuff because you have some sort of affinity towards it. But if you don't towards Pudgy, the business of being a collector in Pudgy versus being a collector somewhere else, it's a better business being a collector here. So if you treat collecting like a business, you should be collecting here because the value proposition of collecting here is exponentially better. And so that's probably like the big separation in my opinion.
Yeah, I mean, I can personally verify that as well, as someone who's Lil Pudgy has been licensed, has a GIF, has showed up at the events. It's all worth it. Like, that's it. That's all. Like, there's nothing else. Like, who would have thought buying one NFT could practically change your life? Like, you become a part of a core community, you get to go to these super cool events, meet with amazing builders out there, and you're actually becoming a part of like an industry that's growing or something revolutionary that's moving the needle of Web3 when it comes to actual business models, when it comes to actual like opportunities in the traditional market. Now, to celebrate that and what you guys have done, I know that the toy industry has also awarded you with the Toy Insider's Top Holiday Toy of 2023. That was a huge accomplishment, in my opinion. I was really excited when I saw that on the timeline. I want to know what lessons from traditional toy marketing have you used, because I know that previously you've always worked in kind of like the toy or children's entertainment kind of industry. So what sort of lessons did you use from traditional marketing to apply into Web3 brand building, and kind of like how is that reimagined, the business and everything behind Pudgies?
Yeah, it's an interesting question. I think there's a lot of parts we took. I mean, just like basic marketing and basic rollouts and having the right partners. Obviously, if I didn't have that, I had Gel Blaster, which was the company before Pudgy, was Walmart's best-selling toy for the year prior, right? So, a lot of that experience, like, they took a bet. I mean, let's just remind what happened. Like we were in a pallet in the front of the store. It was Star Wars, Barbie, and Pudgy Penguins. You know, like they don't do that for anyone. They don't do that. They don't do that. You have to be Star Wars, right? Like you have to have movies and TV shows and blockbuster games to do that. So they took a big chance on me, and I think that was probably like a big edge case. And then learnings, you know, to be frank, like probably there wasn't like any special secret sauce. It's just like a lot of like 20 different things. You know, we've learned like I think we're one of the best marketing teams in crypto, period. I think we're one of the best marketing teams in the world. Like I think in the entire world, I don't think you can find 50 groups who are better than us. And I'm just like taking the entire world, right? So I think from our perspective, like we know how to move product, we know how to get impressions, we know how to market. I think for us, you know, a lot of the learnings came from like previous relationships and things like that.
Yeah. Yeah, I think that's definitely a huge part of it, right? And one of the things I'd say that you guys do really well, or the Pudgy Penguins brand does really well as well, is finding, you know, the great partners who can help push the project, the products, and everything like that in the right direction. Hearing that Walmart took a chance on you guys and you're next to like all these huge IPs, that's a huge step for crypto. That's a huge win right there, you know? Now, because like you're handling all this, like there's like the toy licensing stuff, we have like a book deal, there's a YouTube series, you know, Instagram, a lot of these different, I guess, like business models and different products that you guys have been working on. How do you balance between serving the crypto holders or like, you know, making sure that they're like well taken care of or they're vibing and nothing's wrong there versus attracting mainstream audiences who may never touch Web3?
Yeah, I think like there's two real ways I look at it. Like the crypto audience is my core community. They're my early believers, they're my early adopters. My function towards them is to make them rich and to not take on the way. And so, you know, the key thing here is like the beauty about our success story, like the real, no one will look at it this way unless I say it. So I say it quite a bit because I think it's the most impressive part of the story is the fact that we've achieved all this success and we haven't taken a single dollar from community. Right? Like the elephant in the room is I could probably mint Pudgy dogs and make $100 million, right? Sure. But I would ruin the whole business. I would rinse my community and the whole thing would be screwed. But for most people wouldn't turn down the opportunity to make $100 million. I will because I believe in the 10, 15, 20-year vision of this. And I believe that we will make billions of dollars if we play the long game rather than playing the short game. And so I think the best part about this relationship, at least from the Web3 community side, is like we've done nothing but give to them. There's really no reason to be upset if you're a community member, right? Like I've given you no reason to be upset. I mean, you could be upset because the market's bad and things like that, but I can't control that. At the end of the day, I've done everything to make holders whole, and the return has been indicative of that. I mean, you know, holding a Pudgy Penguin NFT, if you look at the returns with the airdrops, I mean, we've outperformed stake ETH like 100 times over, right? So I tell people a lot of the times, like, look, if you have ETH and you're staking it, there's no point. You should just stake it in Pudgy Penguins, right? Yeah. And if you do the math on the returns of staking your ETH with Pudgy Penguins, year over year, the return is more than 5% in terms of ETH appreciation year over year. So just that alone is better performance. But people are underestimating the airdrops that Pudgy has gotten over the years. I mean, in 2024 or in 2023, going into 2024, Pudgy Penguin holders got like 20 to 25 grand in third-party airdrops. That alone, right? That paid for most of at the time that paid for everybody's Pudgy Penguin. And then the Pengu airdrop, and then the future airdrops that will come in the Igloo ecosystem. I want to start like investing from Igloo into like companies and then giving Pudgies those airdrops from those investments. Like the total yield of a Pudgy Penguin over the last, you know, couple of years has been hundreds of thousands of dollars, right? Off of a pretty nominal and fair cost basis. And like that's why we have such a passionate, fervent community. I mean, look, you might not like one thing that I do, or you might get upset at a community member or whatever, but like at the end of the day, you're not going to park your ETH anywhere better to make a return on capital. And then that's not even factoring in the social element of it and how much that can push your personal brand, how much it can grow your Twitter, how many friends or business deals you can procure, right? That is like, you can't even index that, right?
Yeah.
So from our perspective, it's just like, okay, make Web3 holders rich, provide value to them. They will always backstop us and support us when we need it. On the Web2 side, let's just create a brand that's self-sustaining, that is becoming the face of penguins around the world, and they will eventually catch on to the Web3 side and the wealth effect that the Web3 side is having, and they will decide to buy Pengu or a little Pudgy or a big Pudgy or a fishing rod, and they want to be a part of that journey and that success story. And that's kind of how I look at it. The Web3 side is like, if you want alignment on this train of, what I think is a train of success, then come and participate. If you just want to be a consumer and you love the brand and you just want some toys, then the Web2 brand lives in that capacity for you.
Yeah, that's, I think, a perfect sort of like explanation for both of the, like, I guess, the different sides to the Pudgy ecosystem, right? Finding what suits you and what you want to enjoy, but at the end of the day, the penguin is for everyone. There's a penguin for everyone, and there's like some sort of penguin product for everyone as well. We've talked a lot about penguins here, Luca, but there's another thing that you guys have been avidly building as well, which is abstract. So I was wondering if we could get into some abstract questions as well.
Yeah, of course.
Okay, let's go. So Abstract Chain launched in January. Correct me if I'm wrong, but I know that previously you have never launched a chain before. So there were some doubts, there were people who were like, what's going to happen with this chain? Like, why is this NFT project or this NFT company now working on a chain? So I just want to kind of like get your thoughts on that, like how you got to deciding to create Abstract, and also if there were any lessons that you learned about launching a consumer-focused blockchain, the infrastructure of it all.
Yeah, so I think from our perspective, like the same opportunity we saw in NFTs, basically, I knew when we bought Pudgy, we were going to come in, set the bar, and that we were going to be the biggest and the best, right? I don't do anything, I don't think that. And I think if you just look at the data and everything that you can possibly look at to visualize that, I think since I bought Pudgy, that fact remains true, right? Like there hasn't been a better NFT that you could have bought since I acquired Pudgy. And I see the same opportunity in blockchains, right? Like L2 specifically, we're not a robust technical team. We have no interest in building our own chain. So L2s obviously make that relatively easy. But the opportunity, I think, in blockchains is not on the tech stack. It's on the user interface and the experience, right? Blockchains are like LLMs. A blockchain's function is to get one transaction from point A to point B. An LLM's function is to answer your question with the best degree of certainty that the answer is right, right? Like, it doesn't matter if I'm using Claude or ChatGPT or if I'm using Solana or if I'm using, Ethereum or Sui, like it all does the same function. And if they don't, if you have an argument as to like, that's just not true, give it 12 months. I promise you, it'll all get competed away, right? Like, why is ChatGPT so let's apply this model to blockchains today. Why does ChatGPT is so much more valuable than Claude that basically answers the question the same, right?
Yeah.
Well, the answer is simple. ChatGPT has the interface. It has the app that everyone uses, and it has the brand that everyone knows, right? So blockchains is the same thing, right? If Sui and Solana do the same function, why does Solana have so much more momentum than Sui? They have the platforms, they have the brand, they have the interface, right? Well, they don't necessarily have the interface, but they have the third party interfaces at least. I'm trying to create the ChatGPT style interface, right, to the blockchain, right, which is this thing that people can go in and use, sign up easily, seamlessly, and kind of plug in. And I think that's the great innovation at Abstract. And so I encourage everyone listening, it's a really interesting experience for people who've never used it before. But go to portal.abs.xyz, sign up, fund an account with half an ETH, and actually see what that experience is like. And tell me how long it took you to do that. I think it's the best 0 to 1 in crypto, and I think it's the best consumer interface and portal in crypto. And the network effects of that are huge because, we have built-in distribution. If you're a builder, there's no better place to build than on Abstract because all I need to do is give you a spotlight and a badge, and you have instant PMF on your app instantly, like a snap of a finger, right? No other place in crypto does that actually functionally exist other than on Portal and Abstract.
Yeah. I mean, I will be honest here. When Abstract first launched, I was kind of like putting it off a little bit, like the whole sign up thing, because I was like, oh, this is going to be complicated. It's a chain. Like, I'm going to have to learn all the ropes and stuff. And then I actually got to it and I was like, well, I'm done. And that was one of the coolest parts, I think, that I experienced with Abstract. And I've just been using it every day, It's a fun place to go find new games. You can watch cool streamers just like talk about stuff, play different games, learn more, and just like it's really a place where you kind of just instinctively visit on a daily basis now. Like for those who use Abstract, they end up going back to it. Now, you brought up a really good part, Luca, about the whole sign up process. I know that one of the things that Abstract aims to do is to kind of like eliminate the Web3 complexity of the whole thing. You guys are using email-based wallet creation through the portal. And so for this part, you've mentioned before that you've mentioned losing 50% of users with every additional click. How do you truly solve the onboarding problem at scale?
I think it starts with a 0 to 1, and I think Portal is that product, right? So why haven't we hit scale? It's a very simple analogy that I think the audience will appreciate. But my analogy is, look, blockchains today, let's compare blockchains now and social medias, right?
Yeah.
Blockchains today are built like 4chan, right? Meaning if you know how to navigate 4chan, you put the pieces together, it can be super helpful. Right?
Yeah.
If you don't know how to navigate 4chan, you click the wrong thing, it can be super harmful. Right?
Yeah.
Blockchains today have that exact experience. I use Ethereum, I know how to navigate, I put the pieces together, MetaMask, Uniswap, great, I can figure it out. And it can be super beneficial. I click the wrong thing, the wrong link at the wrong place, all my money's gone. I hate crypto, I never want to come back again. If you take that same analogy, blockchains need to now evolve into being Instagram, right? Instagram, login, username, password. I can do everything that I can basically do on 4chan to some extent, right? But it's curated, it's clean, it's easy, it's scalable, right? I don't need to go to other apps to do things. I don't need to go and, to Google off of 4chan to fact check something. I don't need to I don't need to do any of that. Right? I just need to perform on the app and perform the functions that I need to perform. And that's the anecdote of where we see things going and ultimately how I think this entire thing is structured. So for me, that is the inspiration behind the Portal product is we're trying to make the Instagram style product for blockchains. And we believe Portal will be that.
Yeah, that's I think that's a good explanation to that question. And I feel like a lot of people have been waiting to hear about it. So thank you so much for that. And we're running out of time. So I think I may only have one last question for you before we, say our goodbyes and head off the session. But before I get to that last question, I just want to say it's been super fun. I wish we could go on for forever, I guess. I have so many questions for you. But if I had to pick my last question, it would be looking ahead into the next phase of your journey, of the company's journey, Abstract, Pudgy Penguins. What are some of the upcoming launches or initiatives or anything like that you feel the audience should know about, and how do they get involved? What's the first step to getting involved with the Pudgy Penguins ecosystem?
It's going to be an insane Q4. Historically, if you look at the data for Pudgy, every Q4 we rip. It's an awesome time to be a part of the community. So, if you're looking at this and you're on the fence, I'd probably get in now before the quarter 4 hype goes, because this community knows quarter 4 it runs, right? So, you just prepare yourself accordingly and you index that however you want to index that. But like, just look at the data. October, November, December, January, really, it's the best time to be a Pudgy Penguin holder. I think if you just want to get your beak wet, no pun intended, like go grab some Pengu and just experience what it's like to just be in the chats and whatever, and then maybe graduate and make your little Pudgy an identity. And if you can afford a big Pudgy, I always recommend that. And 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 yeah, the beauty with Pengu is there's now something for everyone, right? There's no barrier to entry to be a part of this story. There's no barrier to entry to be a part of this. If you want to just, get involved even just a little bit, you can take $1 and you can buy Pengu and you can see how it feels and feel that reaction. And I welcome everyone into the huddle, no matter who you are. So hopefully some people watching join us here.
Yeah, I'm super excited for that. We are hoping to build up this ecosystem in Thailand as well. So if you guys are here, you guys are listening from Thailand, jump into the Pengu ecosystem, get a token, like Lucas said, get a little Pudgy, a rod, anything, a big Pudgy. As long as you can sort of like find your way into the ecosystem, everyone's welcoming you with open arms. Well, it's been an amazing session, Luca. Thank you so much for joining us today. It's always a pleasure moderating you. Like I said, it's been really fun. And I think this is the end of our session. Thank you, everyone, for listening to the Bridging Web3 to the World, the Digital Playbook for Mass Adoption. It's been a pleasure, and thank you so much for having us.
Thank you, guys.
Thank you, everyone.
MGM. Welcome everyone to this session. I had the pleasure of moderating this session with Sebastian, which needs very little introduction. I'm Alan Lau, CBO of Animoca, and of course, Sebastian Bourget is co-founder of Sandbox, one of the most recognized project in the Web3 space. So a real pleasure, Sebastian. We have a lot of questions to get through today. Thank you for joining us. So I will get going. I think we'll start with a little bit of history. So, of course, you've been building a sandbox for over a decade, starting really as a mobile game with 40 million downloads before pivoting to blockchain. So, what were some of the key lessons learned from that original move from mobile to Web3, and what has been your journey?
Thank you, Alan, for the introduction. Hello, everyone. Glad to be here. Well, I think there's really a few essential takeaways that we took from like the actual mobile game of Sandbox. As you said, like it started in 2011. I guess the first takeaway, like the creator economy, is still like a very difficult economy in general for the creators. And even though like we had an amazing participation from various players around the world who were playing the mobile game and bringing all the content that contributed to that success, we were like very limited in like how we could reward the participation from such creators on the platforms back then. So on mobile, the App Store, the Google Play Store, there is actually no way to send any form of payment or value back to the users. And so as a user-generated content platform with over 70 million player-made creation, as a company, we were earning a lot of revenue from the player transaction on a game, and we couldn't send a portion back to the creator. So blockchain and NFT really came out as a large solution for us, like solving the problem of ownership, of like being able to not need any intermediary for like sending and transmitting money in the case of like cryptocurrency here, and even like having external marketplaces where users can buy and sell the creation online. So that's really have been really a real solution to a problem. The other takeaways is essentially as you're building a user-generated content platform, like you always have to start with like showcasing the possibility of that platform. So it's not because you provide the tools that the content will come through. And so before we even started to launch Sandbox, I remember we started to work with probably 100 pixel artists who generated 1,000 games and worlds that we showed already when we launched that mobile game originally. And so that particular effect had helped bootstrap the network effect and like really engage all the creators by showcasing them what's already possible to do in the platform. And that we applied as well in the learning from like building the new version of Sandbox with blockchain. And the third thing that we did, I think that really we learned through the ways as well, basically the approach that it's always more fun to create when you have like something you find cool. And with Sandbox, we experimented few brands collaboration back then on the mobile version, which were like Pac-Man, Shrek, Invincible, I think, and that's it, 3. And then we realized that when we had those brand collaboration, like we had like such an increase of participation from the creators who were like more inspired to do fun thing with their favorite characters. And so we applied it to the blockchain-based version. And today, like you know, Sandbox counts over 400 major brands partnerships. So we really doubled down on what worked well afterward.
That's right. So, very interesting journey. I mean, a lot of things in Web2 that were broken around ownership, payment, as you said, blockchain was really a solution. And of course, IP, as you said, I saw in your background, Jurassic World, right? So, these are the kind of IP that excite creators, right? And yeah, I guess, going on that, I mean, this year's theme, I understand that Sandbox is building through cycles. And you previously mentioned that season 4 is one of your strongest season yet, despite the bear market. So how do you maintain that growth momentum when crypto sentiment is at best flat?
Well, I think like one of the strengths of Sandbox is like we've been really demonstrating that any NFT that you could acquire as a user as like almost an immediate utility. And the platform was continuing to like update itself regularly with new product update for the creator, new season like the Alpha Season 4. Actually, we already launched Alpha Season 5 and wrapped it up already, and the Season 6 is coming along. So accelerating as well on the content and giving the sentiment of confidence to the community that like we're here at the project. It's not because you don't hear so much about the metaverse in the media that things are not happening. Like the metaverse is far from dead. Actually, with Season 4, with Season 5, we've proven that we were having as many active users as we had back in 2021 and 2022. And as people, like as we're building this habit of delivering regular product update, real utility for the avatar collection, the land, and all the other NFTs in Sandbox, like now like Jurassic World eggs, for example, for the dinosaurs, it really helped to build that trust level in the community. It helped to push Sandbox still as one of the most noticeable, recognizable, and loved brand in Web3. And probably it has a positive effect as well in like the other aspect of what makes Sandbox great, such as the Sand token, which is still a top 100 cryptocurrency according to CoinMarketCap and top 3 gaming coin, despite having maybe a little bit less activity. Also, this market cycle allows us like to focus on like the priority, like where are our strengths on the land, on the brand, on the sand, and on the creator. It's really where we double down our efforts, accelerating our product release, being less distracted by projects that might have less value and less actual long-term impact than during like those bullish times. And basically also improving the monetization by users. So focusing on like increasing the engagement time and the retention. And the proof is that during Season 5, we were able to increase by 4 times the average revenue per user, as well as double the engagement and playtime to over 1 hour 30 on average per user. And it also allows us to shift our focus toward like the metrics that actually matter. And we believe now like one of the key metrics for Web3 gaming should be the return on reward spend, rather than just like the number of users who have like taken some of the token from your participating and then cashing them out of the game. So typically the return on reward spend is measured as like for every 1 Sand token that the player receives, how much of that Sand token will actually be reinjected in the game economy in the form of like NFT purchase and so on. And like we've been able to increase that ratio, proving typically when in Season 5, when we distributed 1.1 million Sand in rewards, 900,000 Sand were actually spent in the game by the purchase of NFTs from the player, which proved like there is a way toward like building a profitable business model with Web3 gaming if we like spend the right time and we continue to focus on it.
Yeah, I think that return rate is very impressive. I mean, that really is an indication of loyalty, of engagement. People wants to come back. But as you said, I mean, it's really about building through the different cycle, keep on delivering and finding ways to engage with, creators and users, which, clearly from Season 4 and Season 5, it seems that you're doing from the metric of retention, as you said, that you have. Very impressive. I guess, one more question around gaming, right? I mean, it hasn't been the hottest sector because, people have put a lot of attention to memes and to AI. How do you view the relative underperformance of the entire gaming sector? And, does it tell you something about the maturity of Web3 gaming?
Well, I would say like, yes, like it's been probably challenging for many game studios who entered into Web3 gaming and like didn't pass through those difficult time. But at the same time, I'm rather optimistic because I try to put things in perspective, and like the failure rates of like Web3 games actually is not higher than the failure rate of Web2 games. Like as you probably know, like the gaming industry is one of the most competitive industry in the world. Like out of like the thousands of games that go out every day, maybe one title in a year will become a hit and become profitable. I think something around 95% of all games only will survive when they are launched on the App Store and actually be profitable enough to keep like being updated through the live ops cycle and so on. And all the rest, unfortunately, is like a dead pool of games from indies, to professional studio who didn't find a model. The second thing I keep in mind is like the gaming industry has become a master of copycatting. Like basically the success of the free-to-play business model is like we have one hit game and then we try to deconstruct that game and replicate everything about it with slight change in graphic, little twist in the gameplay. And all the top grossing gaming industry is based on those games which are like variation of like strategy game, match-3 game, simulation game, city builder games, and so on, with a little twist over time as like game designer improve progressively. And the thing is, like in Web3, we have not yet found the successful business model that everyone should replicate. We're still, I consider, in an early phase where there is a lot of experimentation. Interesting things are coming along, and sometimes one hit is sufficient to bring back a lot of attention and copy. But we've seen as well that like there is no unique model. So of course, experimentation, a lot of them are bound to fail. But the knowledge we acquired from these failures, in my opinion, will hopefully serve to build the next hit. And on the bright side, there's still like games that are performing extremely well in Web3 gaming, from Off the Grid that had over 12 million users and that now is going to launch in mainnet. MapleStory M, that a few weeks ago when it launched, it generated over $1.2 million if like transaction fees alone from players trading on the marketplace. Pixels as well is doing great, and like games like NFL Rivals or FIFA Rival by Mythical Game as well have proven that it's possible to do Web3 games that are successful and keep growing.
So it's quite interesting. So, there are still games breaking out in Web3 as well, maybe a little bit less mature than Web2, but, the dynamics, as you said, is quite similar. And, I think the good players are still breaking out. So I guess, another thing that, we've heard you talking about, in your other speeches is sometimes you said people's Web3 conviction is really tied to Bitcoin prices. So how do you separate building fundamentals from market cycle? And, what metrics do you think matters during the bear market, which, I think you've mentioned a few that you've started to measure, but it will be interesting to hear your take on it.
So, well, I think it's difficult on one side to embrace the idea of decentralization and giving the opportunity to people to finally, through ownership, have asset of value and make a revenue from it, and at the same time complain about it. So it's more like about finding the right balance around your users and understanding that your audience will be more diversified. You will have typically people who are here for the core gameplay that your game has to offer, and they will engage, spend time, hopefully make purchase, and that's the typical gamer audience that we are used to in the gaming industry. And then you have all those people who are participating into meta game, what I call like the meta game or the financial game, which is like how what they enjoy actually is to maximize the financial outcome they can get from the ownership of their assets. And sometimes like it's part of like being smart about it, understanding like who is your core audience and maximizing whether like you're launching assets that are in a way yield bearing, so like can provide like a certain predictable outcome into the revenue they will generate through the gameplay, or like how like their scarcity might impact their price, and work around like how do you create the demand. And you also sometimes optimize for mechanics that makes players swap their asset or transact with each other those NFTs on marketplace, as the gameplay isn't constantly only requiring the same items and already providing a play to win to like very few players. So it's a lot about design. It's a lot about like understanding your audiences. I feel like every new platform, any new device has as well brought its new form of entertainment, and generally speaking has been enlarging the audience of gaming. We've seen that with whenever like smartphone came in and console like Switch, 3DS, etc. Like it brought a lot of like more casual gamers. Today we have roughly 3.5 billion gamers around the world, which are very different from your typical console hardcore gamers. The latest example is Telegram Ton network. I think has brought a lot of attention and a lot of players, proving like that network effect in Web3 can work very efficiently, and onboarding a lot of people that you would not call traditional gamers, who are like farming coins and moving rapidly over different apps like Hamster Combat and a few others, just to name a few. However, I think that's always this exciting opportunity to keep converting those users, and like what will they do next of their token? How do you offer them something of value so that they don't want to cash it out immediately into another token or fiat? it's all about like what I was mentioning, measuring your return on reward spend and putting in place a design loop that makes that people like need to actually spend time and hopefully enjoy spending that time to get their reward. So in the case of Sandbox, we have this battle pass. People can play for free for a few hours, get probably 10-cent token, no requirement. But if they purchase the alpha pass, then the experience is largely improved and they can earn up to 200, 300 cents. And if they have certain premium NFTs, they unlock new quests into some of the branded experience that we had, like Jurassic World, Bruce Lee, British Museum, or Deepak Chopra, which allow them to earn more collectible NFTs and even more sand as well. And it works. So I guess like it's probably a great recipe to increase engagement and to prove that those users, if you have the right offer, value proposition in front of them, can convert as well.
And I think it sounds like it's also recognizing that there are different types of players that come play, right? There are people that came for the game, there are people that came to earn or, to trade and to invest, right? So recognizing them and, as you said on the Ton example, people may come through a different type of experience, right? Because they're part of the Ton ecosystem. But I think the key is really try to convert them and really, provide that engaging game experience for the players, right? So maybe switching gear a little bit to the creators. So you've touched on this briefly at the beginning, right? So I think Sandbox has solved the creator retention problem that was very common in Web2 mobile game with blockchain monetization. So can you say a little bit more about how digital ownership changes the creator economy compared to the traditional App Store Web2 models?
So like what digital ownership has enabled is like basically creators to have like new source of potential income, like not just like selling pack of virtual currencies and like in-app purchases, but also like to benefit from like selling those NFTs and sometimes as well introducing their own token or coin onto the game and using it as a way to drive loyalty, engagement, rewards, airdrops, claims, and so on. I found like a few exciting examples in Sandbox of how those creators have been leveraging collection of NFTs, creating like gated experiences, fully gated or partially gated, introducing sometimes like challenges, time-limited challenges with like leaderboards where like the ownership of certain NFTs or tiers of NFTs is required to enter a certain pool and you get access to various prices. So it's a way of like, you own a stake of my collection, which give you a chance to earn and participate and compete with other players of the community. That's been a great example. In the early days of NFTs, I guess until 2022, maybe 2023, royalties were still a thing in the NFT world. And that also contributed a lot to like the success of monetization for creators. Unfortunately, there's no more royalties that prove as well as how fast like things are changing in Web3 and how business models cannot be established as these things are now things of the past. But back then, when creators were earning royalties from the secondary sale generated on the trade of like their content and the creation, many of them were actually reinvesting those royalties back into the economy to support other creators. So that's really something we kind of lost, I feel like, both on like OpenSea, in digital art, and in the user-generated content economy. We still give royalties on the Sandbox marketplace, but I feel like other marketplace kind of lost that. But OpenSea V2 has launched a new model, Blur and Magic Eden have new model where like loyalty, I think now is like more rewarded with token as well. So there might be something coming back.
That's right.
And yet, I think we haven't explored every possible option for creators to be able to monetize on Sandbox. So we understand that some creators were not we're not able to turn a profitable revenue from the activity. And that has led to some constraints, some of them leaving the ecosystem. We will introduce new options this year, allowing them to like have the ability to monetize better their land. I think it's a top priority. Just to give some numbers, though, in 2024, we distributed over 14 million sand in rewards for the creator. And I think like the top 10 earn in aggregate over 1 million sand. So through the builder challenge, the game jam, etc., it's still very valuable prices. And the most engaged creators are still active here and building.
I think tied to, the royalty point. I mean, right now, I think Sandbox give back 95% of the revenue to the creators, which, I think is fantastic. But, I guess the question is this sustainable for Sandbox? And how does that impact your platform economics as you think about what you want to do going forward?
So I think like what makes something sustainable for Sandbox first is like a lot of the value that Sandbox is generating based on the white paper is coming from the Sand token itself, right? It's like that token, which is like $900 million FDV, more or less now. So it's been like really a factor that also helped to attract creators and attract other audiences to love the brand, become holder, and want to have a stake in the success from the creator economy without being builder or players themselves. And we will put more emphasis on that side. Now, it's all an economy at scale. Like, and it works. Why does it work on Roblox even when like creators only earn 30% of their creation? It's because Roblox has reached 100 million of users, probably 200 million monthly active now. Fortnite as well. Which like any experience that has more than 100,000 million users start to make the economics work, and the creator earns more than a couple of dollars, dozen of dollars, hundred of dollars, which for them turns it something like pocket money into potentially a hobby that becomes a full-time job. So we keep working on that. I think like the primitive are here, the blockchain offer the transparency and higher rewards, and progressively, I know it took time. It didn't happen overnight for Roblox to grow to that level. I think it took them 15 years. I hope Sandbox can prevail. Right now, we're still the number 3 largest virtual world platform, right behind Roblox and Fortnite. Brands believe in us, keep coming to Sandbox. Creators participate and engage. I think we reached 3,000 experiences live on the platform. So it's a matter as well of like staying focused and keep delivering until the big moment happens.
Yeah. I think building on that creator point, I mean, I think you touched briefly on it as well. What other trends do you see in creator behavior and content quality if you look, let's say over the past 2 years? What has really changed?
Well, we're starting to see 2 divergent trends, and that's quite interesting. So first of all, like Sandbox, like our main mission is to empower anyone to become a creator. So the way we've achieved that is like by launching this no-code game maker that became really the introduction point for many artists and first-time creators to make games and all sorts of experiences in the metaverse. People who have like no specific skills, technical background, not even like gaming or marketing background and so on. So first-time creators who learned their way through making games, and some of them became successful, earned really significant price in Sand, and are still here in our ecosystem today. And some of those creators like keep building game jam after game jam, builder challenge after builder challenge. And as we update the game maker with new possibilities, the version from 2019 or 21 versus today is so much different. Like it offers like a lot of new possibility for like multiplayer games, having your own rules, social gameplay, and different like abilities for the avatar, better graphic, better performance, and so on and so on. So opens a lot more possibility for the creator. Maybe makes it like the more depth, more possibility means maybe a higher barrier to entry again, but still much more accessible than Unity or Unreal typically for anyone who wants to make game. And on the other side, like we're exploring new trend with AI, specifically vibe coding. I think like Gen AI and vibe coding as probably like the next like stepping stone for introducing even more people to become creators. And it becomes as simple as prompting for people to be able to generate an asset in 3D or a whole world and scene and experience. We haven't launched anything yet related to that. We've been experimenting with private groups at the moment, but it's pretty fun. And the fun thing is like the quality of the game that are actually generated by AI are they are super low to be honest. Like it's not mind-blowing. It doesn't replace the human yet. But at the same time, it's not because like games are low quality that they are not fun and that they will not drive millions of users, by the way. So we don't want to be a filter to that and say, oh, this is too low quality, it should not go live. Like we should just embrace it, have like a lot of content and see what works. And why is that? Like if you play an average Roblox game, you don't even understand like how such an ugly game can actually be so successful at the
Not
same
looking for
time. And
beautiful
like I
graphics,
take
right?
like
Yeah.
flash game, casual game. So it's all about the fun and the core mechanic. And I think vibe coding really and AI really brings that back into like the peak focus, like the fun at the core.
Yeah, super interesting because sometimes people are not looking for that super high definition quality in the graphics, but it's the fun of the game,
They
right?
want like a snack bite experience, 2 minute fun. I can play, I can race. Like some of the most popular games are the most stupid as well. Like just get a character that falls some stairs and like a ragdoll explode. Angry Birds was a great example of that. Typically, Temple Run and all those casual gameplay have proven to bring on the largest audiences as well.
Yeah. So how do you make that trade-off and balance, right? Because you mentioned that, vibe coding, that's very simple. You mentioned Ton as well, also an ecosystem of hyper-casual games. The sandbox is pretty complicated compared to those, right? So do you feel you find the right balance so far with, adoption with a more sophisticated, gaming and metaverse experience?
The one thing you have to keep in mind, and probably I should have said that as well in the first question, is like with user-generated content, you will never lack of content. But you will also be so surprised by whatever like the creators will come. Like there is this infinite imagination, full of ideas, and then it's so surprising, and you never know what will work. So that's what I love about on the Sandbox platform as well. Is on one side we have like the brands, and we have those official collaboration working with either our own team or like vetted studio, part of our trusted partner program, where we do more polished game experience at online with the brand graphics, storytelling. The whole IP is very like we've proven that we can really deliver well on the lore and the IP, respectful of that. And on the other side, all the UGC side is offering like a quite diverse set of experience with various range of quality that like offer like more content for people to explore and to enjoy and find like what their favorite what's their preference actually.
So, it's really about once, I guess the whole ethos is decentralization as well, giving that option to creator and then, you get that richness back as well, right? I think we've talked briefly about memes and AI, and certainly another thing that's been very much, on trend is the fact that there are so many different blockchains, right? L1 and L2s and all that, right? So, for Sandbox, what solution do you see emerging for cross-chain interoperability in the next 12 months?
So you're absolutely right. Like now, there is blockchain are so commoditized, and like there is such I would say blockchain gaming has grown. It's bigger than ever, but it's also like so fragmented. So we have, I think we have something like 300 million active wallet in various blockchain game. But well, 4 years ago, you only had like Ethereum and Polygon. Today you have Avalanche, Immutable X, Ronin, and um, Ethereum, Polygon, Solana as well, and all those are and Telegram Open Network, and all those have their silos of users which don't communicate. So I believe there will be a future and actually an opportunity in like whoever will build like cross-chain interoperability for like the digital asset and the currencies and tokens, allowing like those audiences to flow across those different games and ecosystem and actually benefit more from the network effect that Web3 is supposed to bring.
Yeah. And I think that, I think in some way it's going to be application, games like Sandbox that bring all these users together across the different ecosystem, right? So maybe we get to the last section where we look forward a little bit, right? So, I think there's quite a lot of success with the recent season, and in fact, you've really stepped up in frequency. I mean, it used to be 5 fewer season, and now you do 4 seasonal events in a year. So, as you scale, how does that operational scaling up teaches you about sustainable growth in the Web3 platform space?
Yes, so we're aiming for 4. I think like we'll reach 3 this year, which is already a great step forward. Like we increased from once a year to 3, so that's more regular moment for the community to connect, to play, to earn reward, to share memories together, and like keep building that retention scheme as well. I think that's really important, and I prove as well like we improve the tools and the process behind to ship high quality content with top brands partnership on one side, top UGC content made by creator with a new version on the same time as well. For me, I think it's really something great and essential to have this combination. And ultimately, I believe that a way forward to even more decentralization will be that one day those season and content will be even self-organized by the community and the creators themselves, or the balance between like what we produce ourselves, which is roughly 50% of the content with brand and 50% UC will become like 95% UGC and maybe just 5% with top brands on our side.
And as you said, technology like AI is going to make it easier for creators to come up with even more UGC content, right?
Absolutely, and that profusion of content, like I was referring to 3,000 lands on the map that are published, but our map is 166, 464 in total. So what is there on those other lands? Well, if creators don't want to spend the time, and I understand why they would not, like maybe they are not gamers, they're not creators, they don't want to hire or find someone, they should still have the ability, I think, pushing a button to have something deployed on their land that's already a fully fun game generated and could potentially bring them some form of revenue. So that's what we have in mind when we also implement AI for all those landowners, which we have more than 27,000 on Sandbox, and keep delivering value to all the different pool of audience in our ecosystem.
That would be a very interesting future for both creators and users. We've talked briefly about Web2 games. There are still traditional gaming platforms like Steam that ban blockchain games. So we've seen this resistance from traditional gamers as well. Do you think this is going to change? How to bridge this divide and achieve mainstream adoption?
I think it's going to change because like we've seen like all the larger studios in the game industry actually not necessarily become shy on blockchain again, like Nexon with Maple Story M. We've seen Square Enix launching various titles. Ubisoft as well. They did various collaboration in Sandbox with the Rabbits or Captain Laserhawks. Come to us and few others, which are like also have a quite great reputation for making like successful Web2 games and bolster like large communities and audience of players, embrace progressively Web3 and introduce it in a way that is not it's not the blockchain for the blockchain and connect your wallet first to enter the game. Like they have been smarter in how they integrate it, and I think it will become quite natural. And like the more adopted the technology will be, the more invisible it will be at the end. People might not even know that underneath there is a blockchain powering the ownership of their asset, or that the fact that they're able to sell it to another user is actually an NFT underneath, and there is like a transaction on chain and so on. Like NFL Rivals, for example, is a great example of that. People are actually trading player cards, without calling it an NFT, without having to list it on OpenSea. It's all in the game and without knowing or owning crypto. And I think that's proven to be successful.
And I think, especially with companies like Stripe, buying companies and, building crypto rails into their services, as you said, people will be using crypto without even knowing it, right?
It does. I think Animoca brand did an interesting test as well. Like as Epic finally won this court lawsuit versus Apple. Like now they can release the store, they can have alternative way of payment, and Apple cannot refuse to have like token and crypto payment as well in games. And I think Animoca launched already with the Tower token and Crazy Defense Hero game the possibility to buy the asset outside with the token, and you saw like an increased conversion level and more engagement through people who actually spend with cryptocurrency versus the Apple. So we're getting there. The only thing like the unfair advantage that those platforms still have, like App Store, Epic Store, etc., is like they have collected our user data before. So they already own our identity, they own our credit card. So there is still a few less steps for anyone who wants to make an in-app purchase versus like paying in crypto or paying with credit card on Stripe and so on. But as like this become an habit, and everything becomes more commoditized, I hope like there will be some change and good progression for Web3.
I think with the broader adoption by institution as well, I think, crypto will become more commonplace, both invisible and more widely held, right? I guess another thing that I've really wanted to ask is some fun project that you seem to have set up recently. You've recently co-founded Artverse, a physical gallery in Paris that brings together digital and physical art. So how important is the physical and digital bridge in your mind for the future of virtual world?
I think it's always been essential, like to showcase like the metaverse is a place of culture where like people are not just going to play games, but are going to encounter like the favorite celebrities coming from entertainment, music, sport, fashion. So we have all those collaborations from Snoop Dogg to Gucci to Warner Music typically. And we were also very deeply involved into like the Web3 ecosystem, buying art from digital artists or buying some of like most popular NFT collection from PUBG Penguin to Bored Ape and so on. Like Sandbox is a large owner in every single one of those projects. And not just keeping it themselves, like keeping all those NFT for ourselves in a wallet, but putting them to use and to display into all those virtual worlds for people to enjoy, to be inspired, to discover. And that spirit actually led me to like, well, I can do it in the virtual world. I can do it physically in all the different office spaces that the Sandbox has. And then I started to run out of physical place. I said, okay, let's do it as well and support the creator with a dedicated art gallery, which we opened a year ago in Paris, the third arrondissement, the most cultural neighborhood with a lot of art gallery already. It's called Artverse, and it does become through this year, like I think one of the flagship plays for any Web3 event, Web3 community, AI community, and a lot of like digital artists and crypto artists like launching their new solo exhibition. Today, for example, we have the solo show of Jeff Davis, one of the first generative artists on Art Block, and has like a long history as well. And like this is a huge name for everyone who's like deep in this space, and like a great way to onboard as well because of the physical gallery. A lot of potential traditional art collector or curious people to discover what it is about. So also like serving as a way to educate people about like what the technology brings, while like still being very approachable and accessible.
That's great. I mean, it looks like you've got an exciting program running there. I still haven't had a chance to visit. I'll make sure that I go see it next time I'm in Paris.
Soon.
Looking forward, a little bit of market forecast, right? So the metaverse market is expected to get over 100 billion by 2028. What do you think is the biggest opportunity and risk for builders entering the metaverse space today?
So, well, it's something really interesting. Like between 2021, we had roughly 300 million users in the metaverse. Today is around 700 million if you combine like Roblox, Fortnite, and Sandbox. I guess we'll get 1 billion user before 2030, actually. And like metaverse is inevitable. Like it will become we might be already in the metaverse to some extent, but it will become part of like our habit. And why is that? Because all the brands are using virtual world and gaming to create more engaging experience to reach out to younger audience. This is what is now relevant culturally. This is the new social media where like you share brand value, you allow people to discover, and potentially you will drive new sales channels through that. The mistake would be to come with directly a sales strategy, opening a virtual shop and like trying to sell like goods. Like we've seen it didn't work for many reasons. People don't come to the games or metaverse to buy. The process to buy are less efficient than on Amazon, where in 2 seconds you can get your product almost to your door. And yeah. So people are coming in virtual world with the mindset of exploring, of discovering, and to learning about the brand and so on, socializing. And like that's other dynamics in place, such as like reputation, digital identity of avatar, your self-expression, how you dress your avatar. So the content that is actually the most sold in general in the virtual world is like skins for avatar, and then emotes like new dance and ways to express yourself. And as some platforms like Roblox are also now opening API for commerce, I'm sure that there will be creators that figure out like what's the best way to convert into like a proper sales channel. And it doesn't need to be like the top luxury brand of the world only that will benefit from that. I'm sure like native creator or digital creator will find ways to sell to their fans, to their community, like actual physical product that might like please the collector. Like we're all collector of, like, if I take Mario, we all love not just playing Mario on our Switch, but we have like figurines of Mario in Sandbox. Some of our creators are already making like a lot of lots of 3D figurines, 3D printed figurines of world. Like you don't see behind me, but a lot of things that like can appeal to an audience as well.
That's great. I mean, I think people come to the metaverse for experience and engagement, but maybe they'll find new ways to do commerce, but not in a traditional e-commerce, click and buy kind of way. So maybe as to wrap up, what would be, some key messages for DeFi and institutional audience here about the investment thesis for user-generated virtual worlds, and what should they watch for from the sandbox in 2025?
So, for me, like it's all about like the importance you see into like what digital economy and the creator economy mean, and it's going to impact. Like as this Gen Z is actually spending more time, 2 hours, 3 hours a day on average, into virtual world to connect, to socialize, to educate themselves, now to work and to earn a revenue eventually. All the revenue that comes from those activity online, whether they are about like streaming, about like creating, about selling digital goods and NFTs from your games, creating games that earn a revenue as well, it will translate at some point into like value that would flow back into the real world economy, your real bank account, and so on. So recognizing like that all the jobs that are derived from the creator economy is essential. I guess like providing like the financial rails for people to actually make a living, either working a job in the physical world or working a job online in a digital space, is essential. Like it's only going to be like a growing portion of our humanity that like make a revenue from digital activity. Where AI is going to accelerate that as well. I feel like people fear that AI will replace a lot of jobs. Yes, but it will create a lot of new jobs as well. And like how we are using that tool in digital space to interact and produce so much faster. We'll also have like agents that are like generating revenue for ourselves automatically, like all those virtual AI agent trading and like pushing and streaming all the time. And so I think like any financial institution who can bring the liquidity, can actually tokenize real world asset as well. And on the other side can like offer and recognize existing tokens like Sand or stable coins, etc., and like the value that comes from the creator economy behind, will attract that audience, will be a winner, and will develop like a growing financial system that benefit the whole world economy in general.
And I think that's the power of Web3, right? How do you combine, that engaging experience, but also, with ownership and the financial side of it? I think that's really unique. Well, thank you so much. I think that's all the time that we have. Thank you, Sebastian, for your very generous sharing. I think there's a many takeaway for the audience. I've certainly learned a lot. And thank you once again for joining this session on crafting virtual worlds with the one and only Sebastian from the Sandbox. Thank you, everyone.
Thank you. See you, everyone, in the metaverse. And thank you, Alan.
Bye-bye.
Everyone, thank you all for joining us. Very excited for a conversation today with Anna from Vana, talking about decentralized data, model ownership, and the future of decentralized AI. My name is Danny Starsuk. I'm a partner at Archetype. We're a early stage New York-based crypto VC where we focus a significant portion of our time on the future of AI. Anna, before we dive in, would you like to give a quick introduction to yourself and what you're building with Vana?
Yeah, I'm Anna, co-founder and CEO of Open Data Labs, which is the research and development company that originally created Vana. With Vana, we're building ways for users to pool their data to create AI that is collectively owned. Really focusing on that problem of private data. How do you verify it? How do you pull it together? And how do you make it accessible for AI training? Excited to dive in.
So let's get after it. Anna, let's start with an interesting first question. You've described data as the new oil in the AI race, yet most people can't monetize their personal data as individuals. Can you walk us through how Vana transforms this dynamic and why you believe we're at a pivotal moment for data ownership?
Yeah, so I think the phrase kind of data is the new oil is really kind of capturing this important thing that I think is often missed of like AI models are literally just a statistical representation of their training data, right? At the end of the day, an AI model is like literally just like take all the data and then you get these kind of model weights. And I think that it's really easy to kind of forget the fact that all of collective humanity has actually just helped teach all of the AI models that exist today, right? They're primarily trained on the public internet. Now that's kind of changing because we've run out of data from the public internet. It's around 15 trillion words, so we need somewhere to get more and more data. And what Vana's approach is it's really leveraging kind of individual data rights because each individual has full legal ownership of their data. You can go get your data from all these different platforms and allowing users to pool it together through different data DAOs. A bunch of different data DAOs on the network. There's like one that's focused on car data where you can join with your Tesla data. There's a Reddit one. There's a Twitter one kind of across the board. There's some health focused ones. And basically having users pool their data and making it available for AI training. There are a lot of things to get right about having people kind of own their data, right? Like working with data in any sort of financialized context, like you need to think about how you preserve the economic value of the data, right? Like if I sell you my data, how do I know that you haven't kind of taken a copy of it and resold it? And so we have kind of this built-in, almost like programmable privacy where you can allow for a specific operation to be able to run on the data.
And on that line, as an early initiative, your Reddit data DAO achieved remarkable success with something like 140,000 users joining in the first week, and even forced Reddit to address that and change their data policies. What does this tell us about user appetite for data ownership, and how did the success validate your thesis early on?
Yeah, I think that the idea of data ownership has kind of been around in like crypto or even outside of crypto and more of like federated context, think like Urbit, Solid Project for a long time. Like the idea of wanting to own your data is not new. Actually, I think it's kind of the original premise of the internet was that users would own their own data and actually physically, like people thought people would physically carry a device on them that contained all of their data, which I think now we rely mostly on the cloud, et cetera. But that's how people thought it would play out early on. But I think that users are really not willing to sacrifice convenience, right? Convenience is really important. And users don't really use products for security, right? You're not like, oh, I'm going to use this new product because it's very secure. You use a new product because you're like, oh, what's the thing I could do that I couldn't do before? And so in the context of Vana and the Reddit data DAO, what we saw is that when you give someone kind of ownership of something that they didn't even realize they had, right? Most people don't realize that they legally own all of their data. It's like this very 0 to 1 moment of like, oh, I didn't even realize I had this. And if you were a Reddit user with a lot of karma in kind of the very top 0.1%, et cetera, you could make like $300 or $400 for your data, right? And so that's actually very meaningful. And what we saw is that a lot of the users were actually new to crypto and they actually set up a new wallet and kind of, it was worth it for them to go and figure all of that out. The other thing I would say is that honestly, Reddit was just doing a lot of marketing essentially for in the sense of they were saying like, because they were doing their IPO, people saw that they were earning like $200 million selling data just for AI training, right? That's all user data. And so I think that because of some of that, people had become a lot more aware of the fact that their data is really valuable. And I think this AI wave has made it a lot more kind of top of mind, like where's this data actually coming from? And really just putting a price on data ownership.
On that broader point around the importance of educating people on this idea, most people assume, platforms own their data, but I think you've argued that users are actually the legal owners, something like a car in a parking lot. Can you explain this legal framework and how Vana enables users to reclaim ownership of data that's currently generating billions for tech giants?
Yeah, so a lot of people think about the data that they produce on the internet as belonging to the platform, right? So you're like, oh, my Facebook posts are Facebook's because they're called Facebook posts, right? Or my Reddit posts are Reddit's, or even like Telegram messages, 8sleep data. But if you look at the law, all of your data is yours, right? In the same way that when you put your car in a parking lot, the parking lot doesn't like randomly start owning your car just because you parked it there. Like when you put your data in a platform, it's still entirely legally yours. You check the terms of service box, which gives them permission to use your data to do things like operate the service. One is I just think that predominantly big tech probably doesn't want you to know that, right? Because they have like a very good business model of you not knowing that. And then I think there's kind of been this shift that's been happening, a lot of it related to data regulation, right? So GDPR, CCPA, there's actually new legislation out of Utah, which is kind of, I'd say like leading best in class, where it's the Digital Choice Act, where they require kind of full data interoperability. You can actually export your data and get API access to it. But even outside of Utah, you can pretty much always get your data within 30 days. And that includes all the data within a platform. So if you have like an Amazon Alexa, you can export every single audio recording they have for you on you for like a decade back. It's kind of a terrifying experience, right? Like across all of these different platforms. In some cases too, you can even get the AI labels that they've generated of you. So like Instagram, for example, you can generate not just your export, not just your posts and kind of your images. You can even see which AI labels they put on you for marketing purposes. And sometimes they're kind of offensive or interesting. So that's kind of a fun exercise as well. Yeah. And then in terms of kind of the legal framework that Vana operates around, I guess that if you think about kind of a centralized company, they don't necessarily have the right to go and get a user's data for them, right? The user as an individual has that right. So Vana is really designed to make the individual the data processor, right? In the same way that with Bitcoin, Bitcoin isn't your bank, you are your own bank, right? Because you control your keys. In the case of Vana, like Vana is not acting as a data processor, like actually the individual user is being their own data processor, right? And we call it kind of non-custodial data in the same way that you can have non-custodial wallets that allow you to kind of be your own bank. With Vana, you really are kind of in control of all your data at a cryptographic level. And that actually becomes pretty important. Like there are cases, the Reddit data policy you brought up, like they had kind of gone out following the Reddit data DAO and said that Vana was violating kind of the terms of their API policy, but actually because every user has legal data rights, it was able to stay up, right? Because every user has the legal right to actually go and get their data. And I think that this is a good example of why decentralization is actually quite important, right? You can't really do this in a centralized way. It has to be each individual user having the right to do this on their own through a decentralized platform. So that's really what we've designed around.
It's really helpful. And I think you're playing a critical role in terms of educating and empowering the market and users to take back control. On that broader point, you've stated before that whoever decides what goes into AI is essentially deciding the truth, and that it can be scary to have a single or a small group of entities controlling this. And so to combat that, you've announced partnerships like the one with Flower Labs to build the world's first user-owned AI model. How did these collaborations, in combination with Vana's data DAOs, advance decentralized AI? And ultimately, what does shared model ownership actually look like in practice?
Yeah, so kind of thinking about the role that AI models play in society and kind of the risks of having that be centralized. I think there are kind of two ways to look at the risk. One is kind of through this lens of like truth, where like increasingly people get their information from AI. And there was an example maybe a year or two back now where Google Bard released something where if you asked it about a historically accurate picture of like a medieval prince, it would show you like an Indian woman, right? And people were like, oh, it's this crazy wokeness of the 2020s. But really, like if there weren't another source of truth, people would just start believing that. Like that would just become truth, right? And so whoever's deciding like that training data that goes in is basically deciding truth for that AI model and therefore deciding truth for society. So it's very important kind of from a truth and knowledge perspective. And then also economically, right? Like I think OpenAI recently announced they're hitting like $10 billion in revenue. And that is a huge amount of economic concentration that comes from the fact that they have the best AI model because they trained on a lot of data. And so with the work that we're doing with Flower AI and Collective One, which is the first kind of user-owned foundation model. Foundation model means that it's a model trained from scratch, so kind of full pre-training. I'll note too, like if you asked someone 18 months ago, can you do full pre-training in a distributed way? People would have actually said no, right? So it's actually like a huge milestone that this is even possible. Flower was one of the first, I think like 12 to 18 months ago, they trained the first 1 billion parameter model of full pre-training in a distributed way. Collective One is 7 billion parameters trained on data from all across the different data DAOs on Vana, text-only data to start. But what it really creates is this path towards being able to create AI models that are owned by many people, right? So today, over 1 million users have contributed data to Vana across all the different data DAOs. One of our guiding kind of North Stars is getting to 100 million users, because that gets us to, we've estimated about 450 trillion tokens, to basically just a word. And that is a 30 times larger data set than any single AI company has, right? So our view is that being able to scale up this process and train better and better base models actually allows for an AI model that's collectively owned by everybody who's contributed data. And then you kind of end up with the best of both worlds, where I think right now a lot of people are scared of AI, right? And they're scared that it could take their jobs or that AI could automate them. But if you own the AI that you've helped to teach to do your job, then it's actually a good thing, right? And you can kind of have this win-win and really align incentives nicely. So yeah, that's with Collective One. 7 billion parameter trained on text data from across the network.
It's incredibly exciting. And to your point, yeah, a year and a half, 2 years ago, people would have not thought this was possible. And it, I think, speaks to both innovations that are happening at the model training layer, but obviously critically, the stuff you and your team are doing at the data layer. You previously mentioned the data wall problem affecting AI development, where companies like OpenAI and others have exhausted public internet data. And this is increasingly a well understood problem. How does Vana's approach to aggregating private data solve this scarcity issue? What makes private data more valuable? And how do you ultimately compete with tech giants like Google and Meta and Amazon, who have massive data advantages and resources?
Yeah, so I think the data wall, just to sort of lay out what that problem is, it's really this idea that we're kind of running out of data to train AI on. And if you look at these kind of scaling laws, generally the approach that AI researchers have taken is, if you want to make better AI, then kind of scale things up from a training perspective. So add more compute, add more data. Maybe you can innovate on the model architecture side so that you can scale that even faster. And as we've scaled up compute, we've actually started to run out of enough data to train on. So now kind of leading models trained on around 15 trillion tokens, which is the size of FineWeb. FineWeb is basically, if you take Common Crawl, which is a scrape of the whole public internet, and then you just take a high quality subset, remove duplicates, et cetera. One, it's like very impressive that we've trained AI on the whole public internet. Like, I think no human being has probably read the whole public internet. That's just a huge amount of information. But if we want to make better AI, we need somewhere to get more data. Something I'll mention too, the data wall is kind of both an issue of quantity. So that's kind of, you can measure that in tokens, 15 trillion tokens we've run out. I think it's also an issue of quality, where just the quality of data is extremely important. And I think that like DeepSeek is an example where they kind of overcame the data wall by starting with a really high quality, small amount of data. They actually hired a bunch of like math and computer science PhDs to just generate very, very high quality reasoning data. And then they used a synthetic data approach to scale that up. And so there's a lot of work in the synthetic data space right now, which is actually trying to scale up what's possible with the existing data that we have, right? But our view at Vana, so if you look at the whole public internet, it seems like so much, right? But it's actually a very small percent of the overall internet. It's kind of between like 0.1% to 4%. It's hard to get an exact estimate. You can also think about it as an individual user, like of the data you've generated today, how much of that is on the public internet? Probably not that much, right? For me, it's like, okay, I've been talking to chatbots, I've been writing in documents, like most of that is not in the public internet. And increasingly, a lot of it, is inside of these different walled gardens, or even inside of the different AI companies that offer kind of tools of you interacting with AI. And so the approach that we're taking is really allowing for that data, rather than it sitting inside of a walled garden, where often it kind of gets stuck, isn't available for AI training, making that available by having the individual user export their data from each of these platforms, export your ChatGPT data, export your Telegram data, and making that available for AI training. Often a question is sort of like, okay, say you could get 1% of all Reddit users. Why would someone buy data from the Reddit data DAO instead of for Reddit, right? Because Reddit necessarily has 100% of the data. And I think often implicit in that question, people are assuming that Reddit can do whatever they want with your data, right? Or Facebook can do whatever they want with your data. And that's actually not the case. Like there are cases where because of the terms of service and also because I honestly just like PR backlash if they were literally training on your private messages without, like, I think there would be some level of pushback. And so there's actually a lot of data sitting inside of big tech companies that they themselves can't even train on. My co-founder used to work in data sales, selling data to big tech companies. And there were cases where a big tech company was actually buying data of a messaging platform that they operate, right? But they can't actually access and legally train on that. So it's kind of these weird cases. The other thing I'd mention is the importance of cross-platform data. So say you want to buy, if you were buying Spotify data on the open data collection market, which is just like a very niche industry, but anyway, so that would cost you like around 30 cents. But if you're buying data on like, you need users' Spotify data and their fashion data and their demographic data, that would be like $25. And that's from like a Fortune 500 company that buys this data through Vana. And so what you notice there is that the data is like 100 times more valuable because it's this cross-platform data, right? Spotify can't sell Spotify and fashion data. They don't have fashion data, right? And so you actually have this like really unique power of a user to be able to kind of have this cross-platform data and build a better data set that you can get like anywhere else. And I think what's cool about that from an AI perspective, and one of the reasons that I got into kind of, because I was into like decentralization and then I was training different AI models, and I saw that a lot of my friends who were like doing great AI stuff were just going to go work at big tech companies because that's where the data was. And often the data sets that I wanted, like I couldn't even get, like even within a given company, like you couldn't get the cross-platform stuff. So yeah, that's kind of one of the unique things that's enabled through having this like user-owned data.
The point around just how much data sits behind closed walls is really remarkable. And I don't think it's necessarily intuitive to people. People think most of it's out in the open web. And, you know, the initial reaction to hitting those data walls was like, well, we'll just move into different modalities. We'll scrape video data and we'll go into audio and things like that, where you're making the really relevant point that like, actually there's an incredible universe of data that sits behind walled gardens and is represented by people's sovereign private data. And I think it's an incredibly interesting insight. I'm curious how you think about the need for post-processing work from Vana's side. Obviously, there's the increasing rumors around what Meta is now doing with Scale AI. Clearly, data is becoming the core battleground amongst these companies. And you're right to call out, it's not just about quantity of data, it's about quality of data as well. Is your view that there's just so much untapped data in those walled gardens, in the private repos of everyday users, that just unlocking that supply side is enough early on? Or are you also opinionated thinking towards how do we do things like, you know, the post-processing of data and really refining the quality as well?
Yeah, that's a great question. It's very important that the data is of high quality, right? And so if you don't have any sort of quality check and you're just like dealing with random dumps of data, that's very hard to work with. I will say that AI researchers are like surprisingly patient. Like if they can whittle it down to like 1% to 5% good data, that's actually fine as long as they can get to that. So there are kind of two layers this happens within Vana. The first is through proof of contribution. So when a user is contributing data to a data DAO, there's a quality check that runs on that that's kind of scoring it. And it can receive a score of 0 if it's kind of like full on rejected, or it can receive a score based on kind of how much it's actually adding to the data set overall. And that can check things like, oh, is this account sufficiently old? Does it contain enough data? Sometimes there's an LLM that's even checking the quality of the data. But then there's also, okay, and then as you're adding it in, there's also this refinements piece of Vana. So if there are developers who built like a data DAO on Vana, you've probably seen this refinements piece. Basically what it's doing is after the proof of contribution check, which is checking quality, it's actually structuring the data in a SQL format. If you have video or audio data, then that is just like a link to that. But the SQL query basically allows you to granularly grant access to the data and communicate what the structure and shape of the data is. So that's kind of how it works today. But then there's sometimes work on top of that. So this is like a little bit more technical on the AI side, but I mentioned earlier you have Common Crawl, kind of this massive scrape of the whole public internet. But most people don't train on Common Crawl; they train on Fine Web. And so Fine Web is kind of a cleaned version of Common Crawl. And there's also kind of like some, I don't know what the right word, it's kind of like this massaging that happens where you're like trying to make sure that you're properly representing different parts of the data. And what we're seeing today, we're actually seeing this with like training Collective One and kind of with other AI models, is that there's kind of this whole new work related to post-processing when you're working with private user-owned data that you have to do, right? Where you're trying to figure out how do you properly like represent the right demographics, who is undersampled, who is oversampled, and all of that work. And so I actually think there's a ton of like new research related to this. Colin Raffel at the Vector Institute is a professor who has been doing a lot of cool research related to this. So I think there's a lot going on within academia trying to sort this out. We see it kind of Vana at the protocol level. Our job is to really enable this infrastructure so that data can be programmable, so that you can have these different kind of refinements and post-processing. But that's an area where I'm seeing a lot of interesting work coming out.
It's a really, really helpful overview, and it's clear just how thoughtful and remarkably technically competent I think you and your team have been in this approach. So it's fascinating to hear about that. You mentioned briefly about how proof of contribution works, but obviously the technical stack that you've re-architected from the ground up is an incredibly complex ecosystem. Today, Vana operates as an EVM-compatible layer 1 blockchain with something like 16 independent data DAOs operational. Why did you choose to build dedicated infrastructure rather than using existing blockchains and stacks that you could have pulled off the shelf?
Yeah. So one of the interesting things about Vana is that we're really designed to work with like private user-owned data. And there are actually a lot of regulatory constraints that come with that too, right? So often a trade-off that many teams make today is to like make the trade-off of, okay, let's get better performance in exchange for centralization, right? So for example, in L2, much better performance, but much more centralized. You have kind of a centralized sequencer. We actually can't make those trade-offs in the context of Vana, because if you have that centralization, then that would actually get regulated as like a data processor under GDPR. And then that would require giving users like the right to delete specific records that live on the chain, right? And that is, I guess, very hard to do in a blockchain context, right? And that's one specific example, right? But like basically when you're trying to modify blockchains, which are really more designed for like public financial transactions, and instead use it to essentially store this like global state of permissions around private data, there are a variety of modifications where you're like, okay, I need this to be sufficiently decentralized. I need this to be optimized for private data. But you can borrow a lot from, I think, what Ethereum has really pioneered, right? So fully EVM compatible. We have the VRC20 token standard, which is basically a standard for data tokens. And then there's another set of validators, kind of data validators in the network, which operate on these trusted execution environments. And that's actually where the operations on private data happen. So we kind of have this like dual validator system where you have what looks like kind of a traditional L1 validator in an EVM context, and then a data validator, which is running the operations based on the permissions that are set out on chain.
Got it. And so that's, I think, ties into how you all think about the importance of ensuring user privacy while still, enabling training and sort of different operational processes on top of private data. How do you think about the need to keep user data private post-training and sort of like when these models are actually being deployed? I mean, is it more just as soon as it's been used to kind of deploy and train the model, backtracking to an individual's model's piece of data is incredibly difficult, or are there deeper complexities and layers that you all have built into it?
Yeah, so I guess on the data privacy side, I think just maybe one fundamental question is like, why is it important to keep data private? Like, what is the ultimate goal you're trying to achieve? And I think it's kind of twofold. One is like, as a user, I guess I don't want some of my data to be public, right? Like if I add my messages, I just like don't want those to be public. And the other is more economic actually, right? Which is basically like, if you make something public, it becomes very hard to charge money for it, right? And so all the data DAOs kind of focus on private data. Our view is kind of if the data is publicly available, it kind of has like somewhat limited, there's just a ceiling to how much we can make sure that a user gets paid for it. And then from a training perspective, so like honestly, it kind of depends on the model and the architecture. Like there's a certain, and maybe there's like a certain class, I think it's a 3D model where people have proven that you can like exactly reverse engineer the data just from the model weights, right? And so it's not necessarily the case that if you're training an AI model and then you take those weights, you still need to make sure that you can't reverse engineer the data from those weights. And so the way it operates right now on Vana is that the data DAOs actually have to approve the code that runs on their data, right? And so it actually today is like somewhat manual of people going and inspecting, and I think provide like us helping to provide guidance in the ecosystem of like, okay, yeah, we think this is privacy preserving or not, but it's actually quite manual right now. I think over time it will get kind of more and more automatic in terms of how to evaluate that. And there are different techniques, like you can have kind of differential privacy and stuff like there are techniques, but often the problem is that some of those techniques really trade off against performance. And in this AI race right now, like you can't necessarily take a 100x performance hit. Otherwise your model is going to be like, I don't know, like Llama 2, like it's just going to be like so far behind. And so what you need is an environment where you actually can be performant at the frontier and still get the privacy guarantees needed.
That's helpful. It's always interesting how much consideration you all are putting into giving participants in the ecosystem autonomy and decision-making choice in the different aspects of the network. And it brings to mind an interesting question, which is how do you think about the trade-off and the value proposition to your users between profit and ownership and perhaps ideology? And what I mean by that is, your work with different decentralized model training companies is fantastic because, to your point, they're training things from the ground up where users have ownership and they can have more governance, right? But there might be a scenario where some of the leading model companies recognize the incredible work that you're doing in unlocking this crucial new source of data and offer a much more attractive profit sharing agreement and sort of business arrangement. Have you thought about the possibility and sort of that side of the equation where people might want to also sell into the for-profit centralized model companies?
Yeah, and I think too, like right now, like the Tesla, the car data DAO, for example, they sell to just like normal car battery companies. It's not like there's kind of because I think that it's actually quite important to be pretty tactical from a commercial perspective, right? Like at the end of the day, if a user isn't actually getting anything for their data, like then you kind of fit, like they're not really owning their data, right? So that driving that commercial piece is really important. That said, there are trade-offs, right? So if you're kind of trying to build this self-sovereign AI, but then all of the data just gets sold to centralized companies, that's kind of this hard trade-off to consider. To date, what we found, so one of the models that was trained on the Reddit data, it was trained by like an ex-Google Brain ML engineer who kind of just wanted to train he kind of did some, he trained a leading shit posting model, which I think is kind of, it understands humor. It's just trained on Reddit data. But I actually think that, if you look at the landscape right now, so compared to 2 years, like 2 years ago, really the only model training getting done was in like frontier labs. And I think that started to shift a little bit. There's actually, I think, somewhat of a big community that emerged around when Stable Diffusion came out, around like fine-tuning models. And then now we have this whole new kind of role, which is almost like this AI entrepreneur or like data entrepreneur. And in the long run, like kind of over like a 3 to 5 to 10 year time horizon, I think that the majority of the kind of activity on the network will come from AI models that are trained in this decentralized way and that actually are owned by these kind of new developers who usually wouldn't be able to buy data or compute in the way that they need to compete at the frontier. But because they can do it in a user-owned way, where they're giving the users ownership of the AI model in exchange for their data, it sort of unlocks these new possibilities. But I think it is important to just kind of be tactical, ensure that kind of over a short kind of 1 to 2 year time horizon, there are kind of meaningful opportunities. And I think another aspect of decentralization is like, so the team of people who build data DAOs on Vana full-time is actually bigger than Open Data Labs plus the Vana Foundation, which are kind of two of the entities who are contributing to Vana. And a lot of them, like we just kicked off Vana Academy last week, which is a program to teach people about how to build different data businesses, get them up to speed on all things Vana and user-owned data. And there was someone there who was like a a quantum researcher, and they were telling me, they're like, I'm going to start a quantum data DAO. Like, this is the exact data that's needed for quantum research. And I was like, wow, I have like no idea what any of this quantum data stuff means, right? But what we've set up is a way for somebody to be able to bring that expertise in, right? And in the same way, the guy who's running DLP Labs, which is the car data DAO, like great enterprise sales guy, like so good at selling data, right? And so kind of creating this environment where people can bring those different skill sets in and pair it with the infrastructure to kind of broadly advance self-sovereign data.
Makes a ton of sense. And it's incredibly exciting to hear about how dynamic and diverse and interesting the ecosystem of contributors and DAOs has become atop the network in the earliest days. Switching gears a little bit here, following some of the major funding that I think you all have received from groups like Paradigm and Coinbase Ventures, the VANA token is now live, having launched through Binance and is now trading very actively. How do VANA's tokenomics incentivize data contribution, and what role does the token ultimately play in the governance of these decentralized data cooperatives?
Yeah, so Vana kind of has this like dual token system where you have the Vana native token, and then you have like these data set specific tokens following the VRC20 standard. So kind of similar to how Ethereum has kind of ETH, the native asset, and then different ERC20 tokens on top. Vana has basically like Vana as a native asset, and then all of these different data tokens. To incentivize data coming into the network for kind of the top DLPs who meet kind of the different protocol standards set out, DLPs, which is kind of a more technical term for data DAO, they can basically earn for onboarding data into the network that's useful. Useful is measured through metrics like how much is the data actually being accessed and kind of being earned, and then how many people are contributing to the data set. And then that reward goes to buying their data token and then is paired with Vana and put into a DEX to ensure that there's kind of liquidity on that data token. And really what the goal of these data tokens is to do is like tokenize data as this asset class, right? Increasingly, a lot of companies, like really so much of their like value and importance comes from their data set, right? How much of Tesla's market cap comes from the fact that they have all of these Teslas collecting data all over, right? And what would it look like if you could actually trade the data set separately from the company entity, right? And so we think that increasingly this like data as an asset is this really important primitive in this AI native world for people to be able to build different financial products, whether it's being able to just take out a loan against your data, right? Data really as collateral, or being able to kind of earn like passive yield on top of that data. And then, yeah, so Vana kind of as an L1 kind of traditional transaction fees both for like any sort of trade of like a data token and for any compute that kind of runs on the network. And then there's also built into the data access layer. So when you're buying data, 80% of that happens in the data token, and then 20% of that happens in Vana, and that's all burned. The data DAOs right now are kind of doing that migration this quarter. Something I'll note too is that a lot of companies have no idea what a data DAO is or why cryptocurrency could have something to do with them needing to get data. And so there's a company called TensorSource, which kind of helps to abstract a lot of that away for more of like a Web2 data buyer. So they can just think, okay, I pay in USD and then I get this data. And TensorSource kind of deals with a lot of that abstraction.
It's a very, very elegant system. I think it's really well thought out, where you've given the participants and the DAOs themselves the flexibility to create their own economic models that adapt to the types of data, the types of channels, and the user bases that they're working with and selling into, while still maintaining, I think, a cohesive whole that's centered on the Vana, L1 and ultimately, your base network. So I think a lot of credit is due there, and it was really well thought out. Your goal, you mentioned earlier, to onboard 100 million users and aggregate the world's largest trading data set is an incredibly ambitious and exciting challenge, but also outcome. What's the general roadmap to achieve this? And maybe more importantly, what are some of the major obstacles that you anticipate as we make progress on that roadmap?
Yeah, I mean, the most obvious thing is like we don't even have 100 million crypto users right now, right? Like right? There actually aren't even 100 million users in crypto, probably, of like daily crypto projects truly on chain. And so like one thing is like that probably means that we're going to do a lot of that onboarding to crypto just as Vana, and someone's first experience of crypto is going to be contributing their data to a data DAO, right? And that's also a good way for them to get on board, right? Because they don't necessarily have to start with capital. Their data is actually their capital to come in. I think that there are actually a lot of product details that are like really important to getting right, to bringing on kind of a large scale user base, like the success. So the car one has around 10,000 users. The Reddit Data DAO is one of the largest ones with several 100,000 users. And I think what those have done really well is actually just built a great consumer product that is inherently viral, right? And that is a high quality product where when the marginal user uses it, they tell like strictly then greater, like more than one person about it. And then it just kind of grows exponentially. So I think that a lot of it is actually just really just building good consumer product experiences, which can be hard in crypto today, right? Because you have a wallet that you need to set up, et cetera. And so we're trying to make that easier and easier, kind of abstract it away more and more. How can you have gasless transactions? How can you hide some of the wallet components while still keeping users in full control? So yeah, those are some of the things I would mention. The other thing I'd mention is kind of the regulatory piece. And there are kind of two kinds of regulation. We have to think about both crypto regulation and data regulation. Especially on the data regulation side, I think that has actually mostly been a tailwind that has been quite helpful as regulation has gotten better and better. But I mean, if you just look at Vana, it does kind of threaten some of the business models of some of the big tech companies today, right? And so I think that is a headwind that we just kind of have to expect in the long run. And then, I mean, the other thing that I actually think is constraining crypto generally, but kind of we experience day to day is like really bringing great builders in, right? And I think that a lot of people, they might perceive crypto as like just NFTs and meme coins, right? But like crypto is so much more. It's like a new way of building like technology in a way that's kind of fully self-sovereign and kind of unlocks all these different kinds of things that you just couldn't build in a centralized context. I think self-sovereignty is kind of the really interesting property there. And then this kind of programmable composability. So I think that inviting new talent in to really drive forward. I mean, we're just so early in terms of crypto adoption. Like, I feel like it's kind of, we'll look back on it in like 10 years and be like, wow, they were like, I can't believe that worked, you know, of like just the stage of crypto in the industry today. Yeah, so I'd say like those are some of the main things. It's kind of like on the just pure data contributor side, how do you get to 100 million? How do you build great consumer products that bring people in? Some kind of headwinds related to, yeah, if you kind of are challenging a business model that is working very well right now within big tech, obviously that could create some headwinds. And then kind of thinking about like, how do you bring in the best builders, right? And that's part of what we're doing with Vana Academy, really getting people up to speed on kind of what's a wallet, you know, what does it mean to build data DAO, and kind of going through that and bringing in really a commercial lens too, of like, how do you make sure you collect a valuable data set that you can actually sell? And I think sometimes that can be missing to some extent in crypto today.
I think the market commentary is spot on, and you know, you're clearly well apprised of the different challenges and opportunities that are ahead. So we're all excited for the next few months and years for Vana. Speaking of, you've shared your wish list, I think, previously of data DAOs that you'd like to see. You obviously have an incredibly diverse ecosystem already building atop Vana across different use cases and channels and technologies. What types of data cooperatives are you most excited to see emerge in the coming months and years, and how might those reshape entire industries?
Yeah, a couple categories I'm really excited about right now. I think robotics, healthcare, and bio. So bio, kind of research, et cetera. So with robotics, so much of robotics just in Web2 across the board is constrained by data. Like, I was talking to someone who has a robotics company, and they actually bought a cleaning company so they could make the cleaners wear video cameras to get training data. Right? Like, that is crazy, right? And so like, I think that robotics is like very constrained on the data side. And there are a couple of interesting projects kind of working towards this on Vana. The healthcare space, so much of healthcare is extremely regulated. It's really hard to get the training data that you need, and that's very constraining. So I think there's a huge amount of opportunity there, from like longevity biohacking stuff to actually like training kind of better models for personalized medicine, et cetera. And then on the bio side, I think that this is kind of earlier, like it's earlier stage, kind of more conceptual, I'd say, actually, just across the industry. But I think that there's so much scientific progress that's going to get discovered by AIs, right? Like AIs are actually going to be doing so much scientific progress. And a lot of the information to help them do that scientific progress needs to be collected from the real world, whether it is like a researcher contributing their notes and stuff of how they actually figured something out, and also what didn't work, right? Not just the papers that were published, but the papers that weren't published. And then also having like good flywheels of actually getting ground truth data. I was talking to like a bio ML researcher who was telling me like they couldn't train on just bio publications because actually a lot of bio publications are wrong and have like incorrect information. So they need better ground truth data, right? So that's kind of this interesting thing of like, okay, where do you actually get that data? Where does it come from? And then the other thing is like, I mean, we're still not at 450 trillion tokens of text from 100 million users, right? So actually just some straight up like main social media data DAO or kind of any text-based data source, Google Docs, email, Twitch, Discord, a lot of those actually aren't created yet. And so I think there's a ton of opportunity there too, that I'm excited about.
Those are all really, really cool frontiers. And I think it leads to the inevitable next question, which is for our audience of builders and investors, what opportunities do you see in the data DAO ecosystem? How can people get involved? What should they know about, particularly the accelerator program that you're running? And what's next for Vanna beyond that in terms of product launches, partnerships, or milestones that you'd like to share with the REDeFiNE Tomorrow audience?
Yeah, so I think that if you are a builder, like one, just what an amazing time to be alive because of what's going on in AI and crypto, like it's the frontier. Like it is this crazy moment. Like I just like, so just kind of embracing the fact that everything is moving so quickly and we're at the beginning of this exponential, right, as an industry. And so I think what I would really encourage builders to do is like, one, be willing to take kind of like this asymmetric bet of like actually have an opinionated view on like, hey, this is a data source I think is going to be really important, or this is a part of the stack that I think is going to be really important. Tactically, I think like starting a data DAO, whether you already have kind of a project that has some aspect of users contributing data, or you're starting something from scratch. If you want to get ideas, there's like, yeah, I wrote a wish list for the holidays of data DAOs I want to see in 2025. That's like an interesting starting point if you want to check that out. The other thing is if you're coming from an AI perspective and you just want to train better AI models, like your dream data set might be available on Vana today. Right. So being able to access this next level data is really a differentiator, right? So many of the AI companies today, what they're kind of thinking is like, how do I get data that somebody else doesn't have, right? Like the video companies, they're kind of like, okay, what do we think they're collecting? And then like, how do I get what they don't have, right? So someone was asking us for FaceTime recordings and we were like, we don't know if we can get you that right now, right? But like, that's kind of like, yeah, so there might be a data set that actually gives you like this huge edge as a model builder. Then the other thing is if you're coming more from a financial context, you can build really interesting kind of DeFi applications on top of data as an asset class, right? You can build a lending protocol where data is the collateral. So I think that's this really interesting frontier. But yeah, if you want to get involved, Vana Academy is kind of a great program, so you can apply to the next batch of that. We also have kind of a builder-only Discord if you want to kind of dive deep in there. And then I think that there are, yeah, if you want to join like an early stage team building on Vana in some way, whether it's a data DAO or someone training frontier models, there's a huge amount of opportunity, right? And so I think just coming in general within this kind of decentralized AI space, there is just an abundance of like greenfield space to play, right? Like you could even build kind of some people doing like encrypted vector embeddings across all the different data DAOs, right? Like kind of when you have this totally new data stack of like, how do you work with data? Okay, here's a totally new way of interacting with it. There's just a huge amount of opportunity. So yeah, I think just kind of like, yeah, diving in is a good way to start, whether it's Vana Academy or in the docs. You can just launch a data DAO fully permissionlessly. I used to know everyone building a data DAO. Now I don't, but that's really cool because I like look on mainnet and I'm like, oh wow, someone's like.
Awesome. Anna, thank you so much. There's so many incredibly exciting ways to get involved. Gets me excited. I'm sure the audience will be as well. Thank you for your time today. And yeah, wishing you the best of the rest of your afternoon.
Yeah, thanks so much for hosting.
Hi everyone, and welcome to Search Meets Crypto Kaito's AI Knowledge Engine session. My name is Pan, Investment Manager at SCB 10X, and I'm thrilled to be your moderator for this session today. Before we dive into our interesting discussion, please join me to welcome Yu Hu, CEO and co-founder of Kaito AI. Hi, Yu.
Hello, everyone. Very nice to be here today.
Thank you so much, Yu, for joining us again and as a speaker for our REDeFiNE Tomorrow event. I'll turn to you for a brief introduction to yourself and Kaito AI.
Yep. And hello, everyone. My name is Yuhu. I'm the founder of Kaito AI. I've been in the space for roughly 3 years, and prior to that, I spent roughly 10 years in traditional finance. Most recently, I was a trader at a hedge fund. Kaito is building a info finance network, and some of the people know about Kaito through Yaps, but at the same time, also built one of the most widely used AI search engine / intelligence platform in crypto, which is called Kaito Pro. Happy to talk about both. Happy to talk about some of the journey, and very excited to talk about, obviously some of the future stuff that we're building as well.
Awesome. To kick off our discussion, I'd like to start with your transition from TradFi, like traditional finance, to Web3 world. I realized that you spent almost a decade at Citadel before founding Kaito. What was the specific moment and realization that made you decide to leave TradFi world and build an AI search engine for crypto?
Yeah, so almost a decade in traditional finance, but roughly 5 years at Citadel, but still pretty long time there. So I guess when I was at Citadel, I was kind of for trading equities. So I was trading kind of European and US equities, learning about companies, understanding the investment thesis, and trying to capture asymmetric risk reward. I was trying to do the same on the side with crypto. So I started trading crypto, and I very quickly realized that crypto information is just all over the place, right? So you have everything is on Twitter, but at the same time, like you have to monitor like Discord, Telegram, governance forum, podcast, all that kind of stuff. And it was very, very overwhelming for me. At the same time, one thing that was very, very different for crypto versus traditional finance was in traditional finance, especially a hedge fund, one of the most common strategy is mean reversion, right? So you do whatever the analysis, you figure out the fundamental value, and then when prices are kind of diverting from the fundamental, you basically long and short the stock. And over time, obviously, will converge if the thesis is correct. But in crypto, the market is very, very retail and sentiment driven. At the same time, if you like anyone who's trying to deploy kind of a mean reversion strategy can essentially get burned very, very badly if people lose sight of the kind of the momentum side of things, right? Sentiment, momentum, and retail interest, all that kind of stuff. So at the time, I desperately needed a tool or kind of an index for me to understand, hey, like what's the mind share, what's the sentiment, what's the kind of the momentum for any particular stock or token. So that kind of formed the backbone of the reason why I started Kaito was initially trying to build a tool that was helpful and useful for myself and indexing all the kind of various different data sources, but at the same time trying to distill signal from all the noise, right? Trying to understand mindshare, trying to understand momentum, sentiment, all this kind of stuff.
Right. And compared to the tools in like TradFi, I believe that there are like a lot of amazing tools that you can use and get your data that useful for example, like for your trade, right? But for crypto, back in the day, there was none, almost like zero tools that you can go and search. Like even like you compare with Google or Bloomberg, right? Back then there are no data available for crypto.
Yep.
So can you walk us through what specific gaps that you identified that existing platform like Google or Bloomberg were not addressing?
Yeah. So I mean, in traditional finance, it's already kind of a highly mature and is well developed, right? So everyone would essentially, every trader would essentially have, have a Bloomberg. A lot of the people will have like Thomson Reuters or AlphaSense, or many of the other kind of different tool sets that can, cover a lot of the data sets. Really, some of the, a lot of the information that's poorly indexed by, general search engines such as Google. So stuff like, if you want to find, SEC filings, if you want to find, transcript of a particular earnings, certain data set, stuff like that, it's just very, very difficult or just basically not available on Google. It was available on Bloomberg and many of the other specialized data platforms. So that was the power of these, basically, data, powerhouse and platforms. And in crypto, by the time that I was kind of trading heavily, I realized that the on-chain space is relatively well indexed. So you have a lot of the players who are basically doing on-chain analytics, portfolio tracking, fund flow, tracking, all that kind of stuff. But the informational space is very, very, very poorly indexed, right? So there's nobody tracking all the um, like all the, signals from socials, tweets, Twitter, Firecaster, Discord, Telegram is like, it's so fragmented. At the same time, people are manually tracking all the governance forum proposals, votings, and every single ones are listening to all the podcast without even having access to any transcript, stuff like that. It was very, very primitive in terms of the research process. So I knew at the time that there was a gap in terms of just in general, how do you synthesize all the information flow side of things rather than just the on-chain transaction side of things.
Right. And as you know, the theme of this year, Redefine Tomorrow, is building through cycles. It's something that we at SCB 10X admire, like founders who believe in longevity and build a long-term solution to thrive in this industry. And you found Kaito in 2021 and have now lived through like multiple crypto cycles. How has building this like through ups and downs influenced like your product strategy over the long term?
Yeah, I think it's like from a fundamental perspective is not a big change versus whether we're kind of in the bull market or in the bear market, in terms of like for us in particular. But I think that um, it just I think it's really about the mindset of the builders. So as you as we are, heavily focused on the fundamental, the utility and the actual adoption of the software, of the solutions that we're building, then it doesn't really matter that much in terms of whether it's kind of a very, very hype-driven bull market or kind of a mid-cycle or kind of a bear market. There's always going to be kind of a new use cases that we need to adopt, and there always going to be kind of a new challenges that we need to tackle. So simple example was that we started in early 2022, and at the time was literally, second week of we started, it was a lunar crash, and then it's the three arrows, and then it was basically FTX and all that kind of stuff. It didn't really impact us at all because we're kind of building a fundamental solution which is trying to solve the information fragmentation problem. And it's a pain point that's going to be through cycle, right? So it's not like, for example, you're building kind of for an NFT platform that all of a sudden kind of the end market has changed massively. And maybe for some of the people who are building, meme coin trading bots, stuff like that. And then, people constantly worry whether meme coins are still going to be a net cycle play, stuff like that. But for us, it's very much the same problem they're trying to solve, and the problem is kind of evergreen. And as builder, we just have to have the right mindset in terms of we're not shifting too much, we're not chasing some of the some of the hype stuff. For example, a couple months ago, back in November, there was a huge hype in terms of just entertainment type of AI agents, right? So like people posting on X, all that kind of stuff. Our assessment at the time was this has provided not much utility. So although that we had one of the best data sets in the space, we didn't kind of carved out significant development time to essentially to be chasing some of those hypes. Instead, we basically focused on launching Yaps, which then became a much more long-lasting and enduring business that we have, right? So then, even after kind of some of the entertainment AI agent hype died down, Yaps sustained, and then it's been driving significant business volume for us. So these are some of the examples, and it says very much kind of to how we approach various different kind of opportunities slash distractions, how we stay true to the core problems trying to solve, how we stay true to some of the core capabilities that we have. But yeah, so that would be my take.
Right. And you mentioned about the meme-driven momentum, like narratives in crypto, right? And a lot of entertain agent. We're seeing a prediction that like AI agents will deliver true and tangible utility beyond just meme and something that is not very highly intense in terms of utility.
Yep.
So do you believe that like Kaito will shape into the same position that you want to focus on utility and provide a solution that useful for the user in the crypto space?
Yeah, 100%. AI agents will be huge and it will be dominating, basically both internal workflow as well as external user interface. And I can't, speak to all the, various different stuff that we're doing, but it's revolutionizing how things are being done internally, but also it's gonna be kind of a whole new kind of a user interface in terms of how people are interacting with information, data, actions, all that kind of stuff. So I completely see that coming. A simple example, even just kind of a building search engine back in the day, you need huge amount of user data to essentially trying to gather user data to optimize click-through rate, all that kind of stuff. Nowadays, you can do this iteratively with AI agents, right? So not every company is going to be talking about that, but it's fundamentally changing how technology is being built. At the same time, like if you think about the future of user interface and UX, nowadays you already have loads of very good performing AI agents, but still kind of at a relatively early stage, right? I would say that can do very, systematic stuff for people. And I think that in the future it's gonna be like, all these kind of different agents that can solve very, very tangible problems, which means real utilities, right? So, one of the problems that we're kind of thinking about internally is, can you build an AI agent that can basically explain all the price move for every single, token, market, token, on-chain analytics, all that kind of stuff. And stuff like this, historically, like back in the day when I was a Citadel, I was probably spent at least on a daily basis 20% of the time thinking about why such a stock is up 5% versus, another stock is down 3%. And you do a bunch of, different analytics to try to understand what happened. But imagine that you just have like one AI agent that can essentially automate that process. Will be a huge unlock to kind of a real-time analytics. Just one simple example. People kind of doing all sorts of different stuff. And in the future, these things will be the norm. And then it will be kind of AI agents tapping into your personalized behaviors, and then
maybe some of the, private data, stuff like that, that can really be very, very personalized. Recommending tokens, recommending actions, stuff like that. It's gonna get very, very real.
Definitely, I think like the space of the data in crypto space, there are a lot of things that you can navigate, right? And then when you have the AI agent to help you navigate on this kind of information that pretty overwhelmed, and then you have a solution like Kaito that integrate like the AI engine as well, like to help develop like the solution. It would be much easier for user to get into the crypto and utilize the data to their benefit, right?
Yep.
And let's get into the technology, which is what makes Kaito so powerful. And you said that Google was no longer relevant for crypto information. So what makes crypto information so fundamentally different that it requires a completely specialized search approach?
Yeah, I think inherently is very similar to kind of finance in general. It's just that the majority of the information doesn't live on um, the kind of the open web, right? So if you think about what Google effectively indexes, Google indexes all the open web, but doesn't touch on any of the social media, doesn't touch on some of the semi-public information sources such as Discord, Telegram, all that kind of stuff. Majority of the like governance forums is being poorly indexed. You can rarely search anything on Google in terms of like governance proposals and transcript. Obviously, they don't have the domain knowledge in terms of understanding like which podcasts are crypto related and high quality, etc. All that kind of stuff. And obviously, Google doesn't have access to all the social media. And all of these are extremely, extremely important. But even within that, even if everyone, for example, is looking at Twitter or Farcaster, Discord, all that kind of stuff, there's so much going on, and it actually requires significant domain adaptation to essentially understand who is more reputable, who is less reputable, what is higher trust, as more trustworthy sources, all that kind of stuff. So that actually requires significant domain knowledge to really drill down into kind of the quality of the data, the structure of the data, all that kind of stuff. Hence why, a vertical search engine makes a perfect sense, and also vertical adaptation makes perfect sense in terms of helping people understand, what is signal, what is noise. A lot of the stuff that we started doing, right? So like smart follow-up, as an example, was because everyone can essentially bot number followers. It just makes the whole metric very, very low signal. Stuff like Yaps is also kind of a quantifying attention, quantifying, influence for every single account. And Mindshare is, for example, distilling all these, structurally distilling the attention of any particular project, any particular narrative, stuff like that. These are all very, very concrete examples in terms of how there are stuff that a general search engine would just never be able to do, either from a data sourcing perspective, but also from a domain knowledge perspective.
Yeah, you touched on a bit on the index data that you have to create it from like X, Discord, government forum, or even podcast, Firecaster, right? So you have built Kaito as a multi-platform nature for crypto. And these source of information are extremely difficult to tap into and difficult to build a product on. So when you were building Kaito from this source of data, what were the biggest technical challenges you face in, when you're building this capability?
Yeah, it's quite a lot. I mean, it's obviously from the whole process perspective, you have data indexing, ingestion, pipeline, and we do everything on a real-time basis, right? So thinking about kind of a real-time database, but also, domain knowledge. At the same time, you're thinking about scalability. And scalability is a huge thing because
just because of the sheer amount of data that we index on a real-time basis. It's, we index thousands of different discords, so many, Twitter accounts, all these governance forums are completely discrete, all that kind of stuff. And then now we're kind of tapping into, TikTok, Instagram, there's a whole new domain of information that we need to tap into, unique challenges in terms of how we think about reputation. Like in crypto, on crypto Twitter, it's still relatively easy to assess reputation, right? So like who follows who, the historical track record of each of the particular account, all that kind of stuff. But then when it gets like Instagram, when it gets like TikTok, this is like order of magnitude much, much more difficult. And that presents itself with unique challenges. And at the same time, like if you think about, TikTok and some of the, video content, stuff like that, like majority of the Twitter, X content is still text-based. But when it gets like TikTok, Instagram, all this kind of stuff is like images, is, video, and it's sometimes a combination of both, right? So all that kind of stuff. So it's much more tricky than I would say kind of a text-based platform as well.
That really impressive, when the way that you build Kaito and make it works. So you touched on a little bit on AI. So we just want to talk about AI and LLM a little bit. That like when it comes to LLMs, the model can hallucinate, right? And in the fast moving crypto data that you created from many sources. So misinformation can be catastrophe for for crypto users, right? Especially when they use the data for a signal for trading. So how do you ensure that your AI provides like accurate, trustworthy information and avoid these pitfalls to the crypto users?
Yeah, this is really kind of a multi-layer approach. The first layer is, so fundamentally, LLMs always subject to hallucination risk. Even, for example, Perplexity, at times would essentially, very frequently kind of hallucinates as well. But obviously, there are various different ways to essentially, kind of not prevent it, but essentially reduce the frequency of those things happen from happening. One of the most important stuff is providing context, right? So instead of just like directly asking LLM for the answer, which basically means that A, it's very static based on when the LLM was trained, and which would essentially determine the knowledge cutoff date. Which essentially means that, for example, if you ask some of the questions, then they will give you historical answers, which are basically factually just inaccurate. At the same time, you would essentially try to make up some numbers because they're basically just no context. So one of the most important techniques of reducing kind of a hallucination risk is basically providing context. And that's kind of combining a real-time search engine together with the capabilities of LLM. So obviously, you have a lot of the very, very mature search engine platforms, or even like Grok, for example, nowadays, is combining that search together with the underlying LLM to essentially provide you with an answer that you can reference, right? So they will tell you everything, and then these are the sources, etc., all that kind of stuff. So this will massively reduce the hallucination risk. Still not 100%, but it will essentially get to, relatively good state. At the same time, like it has a lot of other ways. For example, make everything kind of in a more structural way. If people are asking, if like for example, right now you're asking Grok, like what's the price of Ethereum, stuff like that. And it's almost always better if the platform indexes a structured data set. because then it doesn't rely on real-time discussions of the price, but actually you can just retrieve the price directly, right? So then, it basically comes to, multi-agent framework, then whether you can, basically structurally index a lot of the, data sets so that you know the answers for sure rather than relying on, other references and proxies. So a lot of the kind of different ways to essentially tackle that. But obviously at the same time, it's, there's a lot of different techniques that you can use in terms of so cross-checking and prompting, all that kind of stuff to essentially reduce the risk of hallucination.
Right. And so when it comes to crypto, we touched on a little bit on hallucination on AI part, which is kind of concerning a little bit, and is related to the next discussion that I want to talk about is the security.
Yep.
So the security is absolutely the main priority and concern for the user, right?
Yep.
And in March, both of your personal and company social media accounts were compromised.
Yep.
And in what you call a sophisticated social engineering attack. Can you share a little bit on detail on this incident and what did you learn from it?
Yeah, so we've done a fair amount of investigation into it. It was actually so what happened was, so both of my account and the company account were basically tweeting out something uh, without us authorizing the tweet. But actually, the account was never kind of logged in by any other person. We also had cold wallet 2FA enabled, and there was no new active session. There's no new device that ever logged in to either my account or the company account. So, which leaves, basically some of the people are suspecting, maybe it's from the platform itself, stuff like that. We don't know. Like there's never going to be any answer, provided there. But we've seen time and time again, it was like, Hyperliquid, for example, got hacked actually 2 times. One time was kind of the labs, the main account. The other time was the foundation account. The DB, kind of a tier 10K Twitter account, was basically the biggest news account, was also hacked. And it was kind of the exact same thing as what we went through. Basically, they had cold wallet, 2FA, and stuff like that. And both times actually it was the same wallet that front ran the trade. So in our case, there was a particular wallet that was actually linked to the tier 10K hack. They basically received the funds from that and then open a massive short on Kaito, on Hyperliquid right before the compromised tweet, and obviously profited from market panic. And we've seen more and more of these happening, and whether it's good or bad, but nowadays, you can basically open very, very sizable positions on Hyperliquid on these things, which also enabled people directly profiting in a very anonymized way. And so there has been kind of acceleration in terms of, all these kind of different hacks and stuff happening. There's a ton of kind of Telegram hacks that people sending fake Zoom links. Some of my friends even fell victim of those attacks and stuff like that. And I think it's only accelerating in terms of that trend. And I think that security is hugely important in our space because in a decentralized network, and obviously, if something happens on Ethereum, then there's no way to essentially revert to it, right? So, money lost is money lost. And this is asymmetric reward for the hackers to essentially do, some of the bad things. And I think that as an industry, we need to continue to be placing huge emphasis on stuff like this and then collectively, figure out solutions that enhance some of the security measures.
How has you incorporate that incident to your platform security? Have you changed any security in terms of the infrastructure behind the Kaito AI platform?
Yeah, so we do a lot of those. We work with a lot of the white hats in terms of enhancing the security of the platform, obviously doing regular audits, and anything that basically alerts us from any security vulnerability that we place, the highest kind of priority. So it remains to be, one of the most important things. And, there's a lot of the stuff we're always being, doing, at the highest standard, right? So for example, um, we did a full Discord audit, right? Very few people actually do that, but we essentially do a full Discord audit. Not just kind of me, but actually every single team member would essentially have 2FA for Telegram, 2FA for their Twitter account, and all the kind of associated social media accounts. So we and I think that in the space, because the stakes are very high, right? So any compromised tweet can essentially generate so much influence. These things have to be taken into account in a very serious way.
Good to hear that like we kind of ensure that we have more security from the Kaito, and user can be more reliable to
Yep.
the platform. And now I want to shift our focus to the future and your long-term vision. So Kaito token launched on a lot of mainstream exchanges in February, and you describe it as a foundation of an AI-driven info finance network. So this coin, like the term of the info finance, can you explain what does it mean, and how tokenization enhance your search platform?
Yeah. So tokenization has two major benefits in our particular case. So first things first, if I share some of the stats of the Yaps platform, it becomes relatively clear. So overall, we have roughly 1 million of registered users, but people, if you count the number of accounts that have ever gained any Yaps, is only around 20 to 30,000, which is roughly 2 to 3% of the entire network. As a matter of fact, the majority of the users are not content creators. Majority of the users are content consumers. If you build an info-fight network that only benefits content creators, then you're basically benefiting a very, very small minority of the group. But actually, in our thesis, info-fight network should be basically benefiting every market participant. And a lot of that has to be the actual users, the actual content consumers. And the tokenization can essentially much broaden the platform reach from just rewarding the top content creators to actually every single one of the users who are holding the Kaito token. That's number one. So people will essentially have a much more decentralized, a much kind of a broader distribution in terms of the beneficiaries. Number two is the actual usage of the token. So a lot of the stuff that we're currently doing is providing basically utility to the token, but also designing some of the mechanism that can actually use the token to essentially power some of the InfoFi thesis. As one of the examples, one of the newer mechanism that, basically we're thinking is people are basically pledging the tokens to various different kind of reward pools, right? And so through the market mechanism, you can actually see which reward pool is more popular, and then you can calculate the market cap of the reward pool. You can basically, using a market mechanism to essentially, direct our incentives. We don't have to make our decisions ourselves. to essentially decide, hey, like which reward pool is better, which reward pool is kind of less popular. We can essentially leverage the market dynamics, and that market dynamic is basically supported by utility and the usage of the token, stuff like that. These things just weren't available before we launched the token, and nowadays with the token out, we can essentially design loads of interesting and innovative kind of a mechanism to essentially utilize it.
Right. I think that creating a new, token economy and info finance that people can get access to and, create a pool that provide the incentive on the providing the data and get the insight of the data. That's a fascinating concept, and I kind of believe that the industry can move forward on that direction, that people can be part of the information providing insights. And yeah, I think I want to bring in the investor perspective. So Kaito had raised 10 million, right? And the valuation is around 90 million.
Yep.
So I think this is like reflect on your long-term vision that people trust in Kaito, and they put a lot of trust and investment into the Kaito. So but the recent research suggests that in the broader market, AI effort is like taking precedent over the Web3 kind of momentum on the investment landscape. And as a founder building at the nexus of both like AI and Web3, how do you position Kaito and the value proposition to the investment community in this landscape?
Yeah, and it's a good question. When we first started, we were kind of an AI company, but back in the day, AI wasn't a buzzword. Actually, one of the reasons why Kaito is called Kaito is because it has AI in that. But like back in the day, like in our first pitch deck, nobody really cared whether it was AI company. It was like early 2022, and only later that year, ChatGPT obviously got launched. Then all of a sudden, people were like massively hyping up all the AI stuff. And then when we kind of raised the second round, then a lot of the discussion were kind of focused on how scalable, like what utility, and what's the kind of a real AI tech that's in that. And I think that nowadays we position, or we think about narrative less, because it's already kind of a public company, and it has like a working product, it has real revenues, it has real users. We're much more focused on solving real problems that we're facing, as opposed to kind of just shaping the narrative and position ourselves in front of a kind of an investor community. But that being said, we do talk to kind of liquid investors very frequently, and there needs to be kind of a coherent and attractive sort of a long-term story that is at play there. And that is what we believe, kind of the InfoFi network, right? So, and I think that it's still a very, very new and nascent concept. Not many people have done a ton of work trying to understand what it really entails. And very few people, for example, will be associating Polymarket with InfoFi, but actually they were the pioneer. And I think Vitalik, for example, wrote a main piece on that. First coining the word of information finance, and it was basically once you financialize the information, it provides a signal, and that is probably the closest source of truth, as opposed to kind of doing any sort of pools and stuff. And I think that a lot of the stuff that we're going to be building down the line would essentially also be doing that, right? So we talked about kind of three major pillars, and one of them is kind of similar to the concept of information, financialized information providing the closest source of truth, which is
going to be tied to a new product that we're going to be launching, a new mechanism that we're going to be launching in Q3. But, and I think that once people spend more time trying to understand what the concept and the fundamental layers of InfoFi, that over time, there's going to be a lot more adoption, a lot more innovations that happen across the space. We're actually already seeing a lot of that. And there's also kind of a common misconception in terms of what InfoFi really is. Some people just thinking that, okay, InfoFi is like, incentivizing information, which is not always the case. And some people associate InfoFi with noise, which is actually the complete opposite. But I think that we're opening up completely new primitives, right? So think about, in the future, people can trade trends, people can trade the popularity of a particular singer, sentiment of a president, stuff like that. It really kind of opens up new primitives in terms of how we interact with information, how information is being monetized, how content and engagement even is being monetized within the attention economy. So those are some of the stuff that's very, very exciting.
That definitely very, very exciting, and we're in a very good time to explore and see how things develop in the AI and crypto space, especially in the info finance. I think like the value from the data is going to be much like variable, and you can monetize on that, like as you mentioned. I think that's something that I personally I like to see how it goes from here in 2 or 3 years from now, and I'm
Yep.
rooting to for the crypto space and info finance space to grow a lot more from this.
Yep.
And at the beginning, you mentioned on Kaito Pro. Can you give us a little bit on context? What is Kaito Pro and how many teams have you been support, and the pricing that you offer to the users?
Yeah, so I mean, Kaiser Pro has been basically adopted and used by a majority of the crypto teams, and basically kind of a few different categories. One is project teams who are using Kaiser Pro to essentially track the mindshare of a particular project, sentiment of a particular project, running basically doing strategic analysis on competitors, just major narratives in the space, all that kind of stuff. And that's kind of a one category. Another category is all the funds, liquid funds and VCs. A lot of the people can kind of been using Kaito Pro. And these kind of two are the kind of the major categories. Obviously, there's individual traders, there are other marketing firms and stuff like that, or regulators, governments, for example, kind of using Kaito Pro. But those are kind of the smaller subset. And so currently we have roughly 700 different teams using that, and people paying either kind of a monthly fee or annual fee. And that's kind of the state of Kaito Pro. And we also provide some of the API solutions to either project teams and some of the other developers to essentially tap into some of the data solutions that we have across all the social platforms and governance forums and sentiment index, all that kind of stuff.
And given that you offer the subscription model for users to subscribe and get into the data, access to the data, how do you balance like the democratizing access to the crypto information with the building a sustainable business model?
Yeah, it's very important. I think that it's about segmentation. So Kaito Pro is specifically targeting the professional and premium users in the space. So it doesn't really have like a free plan, doesn't really have like an entry level tiering. So that's very different. So people are essentially paying $10,000 a year to essentially access the product. But at the same time, we have Kaito Yaps.
which is completely free to use, tackling a completely different, segment of the market and solutions as well, right? So it's like, tokenizing, quantifying attention for, various different kind of, mindshare metrics, pre-TG arena, all that kind of stuff. So the two products are completely isolated from each other. And in fact, that even for Kaito Pro, if you allow kind of a retail participant to essentially use Kaito Pro, they will be finding that very, very overwhelming. And, majority of the people just aren't familiar enough or aren't willing to spend enough time knowing about a tool that is for professional use. Majority of the people want insights instantly. They want to be tracking stuff in a much more just straightforward way, right? So I want to see, hey, the mindshare of this particular account, whether that's higher, lower, all that kind of stuff. So that's how we segment both, and that's how we ensure that we have both sustainability, which is the revenue generating side of the business, but also has the distribution and a lot of the kind of newer stuff that we're doing.
All right. I think our time comes down to the very end of the session. So don't forget to check out Kaito AI and Kaito Yaps. So thank you so much, you, for coming and
Thank you
joining
for
us for
having
the
me.
session. Hopefully we see each other next year.
Yep, sounds
Thank
good.
you.
Thank you very much. Thank you.
Hello, hi Fiona.
Hi, Kuntong. How are you doing?
I'm very good. How are you?
Great today. Happy to be speaking with you.
Yeah. First of all, thank you so much for coming to the REDeFiNE tomorrow 2025. So for all the audience, so my name is Kawiwood Tempuapat. I'm CEO of SCB 10X, and today I have a pleasure to introduce and be a moderator in this session with Fiona Murray, Managing Director of APAC of Ripple. So very welcome.
Thank you so much, and I'm really excited to be speaking with you and to your audience as well.
All right, maybe let's get started. Maybe we talk about the adoption. So we are going to talk about the topics of global payments or Ripple's real world adoption. So I would love to hear more about the adoption. So Fiona, you've been at Ripple for over 5 years, from London, leading APAC operation. What does the real world adoption actually look like today for Ripple's payment solution, and how has that evolved since you first joined the company?
Yeah, absolutely. So it's actually been about just over 7 years that I've been with Ripple. And in that time, we've moved from being a very ambitious payment company, exploring the use of digital assets in cross-border payments, to now we're a one-stop shop for digital asset infrastructure. And what that means is we have cornerstones of payments, of digital asset custody, of tokenization, of stable coins. So really, if you're entering the space of moving value or interacting with digital assets, we have you covered. And so your question of what does real world adoption look like for us is a really fantastic one. It's one that we've been thinking about all along. And that adoption is really about solving real problems that exist in the world and that exist in financial services. So, if I just take a step back and look at what we've achieved in that time, Ripple as an organization with one-stop shop infrastructure is stronger than it's ever been. So on the payment side, we've processed over $70 billion worth of payments. Much of that is settled through XRP or stable coins or fiat currency as well. And on the custody side, we service some of the world's largest custodian banks like HSBC, BBVA, SocGen Forge, as they look to keep digital assets safe for their customers who are tokenizing real world assets themselves. And so, all of this speaks to adoption and utility are really what we're in the game for. I'll mention one last thing, and that's we also this year announced the acquisition of Hidden Road. Hidden Road is a crypto and traditional prime brokerage, and this marks, the acquisition is about 1.25 billion US dollars. So we're really excited about one of the largest deals in the digital asset space, and that will really focus on bringing liquidity to the market and new use cases so that we can really move things forward for real world adoption.
So the APAC region is experiencing explosive growth right now in the digital payments, and with the real-time payment volumes reach 2.4 trillion US dollar by 2025. How's Ripple position yourself to capture these opportunities, and what makes APAC different from other markets?
Yeah, APAC is home for me. So I love talking about our region and I love talking about the innovation here. I really think that what makes APAC stand out is that innovation. The level of entrepreneurship that's in our region is, it's in our blood. So it's fantastic to see some of the innovation. I completely agree with you when it comes to digital payments. You see some of the I don't know that it's even called innovation anymore. It's just adopted as standard. So we have QR payments, we have digital wallets, we have cross-border government and interbank collaboration. So it's amazing to me, though it feels normal, that I can go to Bangkok and I can use my Singapore banking app to pay for the MRT. These are not standard in most of the world. So that's the foundation layer that we have: innovation and ease of use for the average user, which is an amazing platform to stand on. If I look at the other side of why is all of this possible, most of the time it's because we have very forward-thinking regulators in our region, and this has really impacted Ripple and the work that my team does. So we chose to be based in Singapore because we saw a very clear regulatory framework for both payments and for digital assets. And in 2023, we became licensed by MAS, who've been a wonderful partner for the industry in setting clear foundational rules and structure so that we can keep ourselves and really the industry safe with trusted partners to operate with. So I think those are really what set APAC apart. And you can see that in practice, because when it comes to Ripple, on the payment side, again, many of our payments settle through digital assets. What we found is that the growth in APAC has been unparalleled. So despite running a global payments network, being headquartered in San Francisco in the US, around 50% of our global payments volume is attributed to APAC. And again, that's just an example of that innovation and that foundation of a strong regulatory framework coming together.
Yeah, I tend to agree, because I think sitting here in Thailand, SCB, I think we're one of the big customers for Ripple, like since like 7 years ago, I think. And then now actually here in the US. And I think digital payment in APAC is very big right now. So yeah, agree. And so you mentioned that the bulk of innovation in Ripple's business was happening in Singapore, in Thailand, not in the US. Like, can you walk us through some of the specific partnerships or implementation that kind of demonstrate this innovation advantage in Asia?
Yeah, absolutely. So on top of that 50% volume that we're seeing through APAC in our global payment network, I think the innovation is really demonstrated through some of the use cases that we're pioneering out here, building and are actually live. So I'll take stablecoin as an example. Ripple launched RLUSD at the end of last year, and that was in response to a lot of the market call that we see. So, we have been asked to build out collections capability for stablecoins so that payments companies and enterprises can reach new markets and can reach new merchants, so that they can gain global access to supply chains. And I'll give you a real world example. we're working with a trading company based in Hong Kong. And they came to us and they said, we have this challenge. We're operating, we sell services around the world, and we see that LATAM is a large market. Brazil is a very, very large market for us. But for some reason, the neighboring countries don't have the same demand, or we're not processing anything for the neighboring countries. And so when we looked into that problem statement together with them, we found that the neighboring countries, several of them had demand for their goods. However, they couldn't pay them. And this is something that happened last year, not decades ago. So in today's system, there are still enterprises, there are still financial institutions that have poor access to global financial systems and currencies and trade currencies. And so what we did together was we explored, okay, if they have access to US dollar stablecoin, would you accept that? And actually Ripple stepped in to provide that bridge of accepting the US dollar backed stablecoin on behalf of our trading company and running that conversion into US dollars so that they could pay their suppliers downstream across Asia Pacific. And that kind of use case is real, it's live, it helps to bridge countries so that they're closer together and really benefit organizations as well as individuals to reach, the whole world, because paying is the first step to being able to access services or goods in other jurisdictions. I'll mention as well on the custody side that we see this innovation taking place in real time. So several of our clients are the world's largest custodians, as I mentioned. Many of them are moving into providing digital asset custody for tokenization. So tokenization of money market funds, of gold, of bonds, and there's so many benefits that come with that. Tokenization is one example. That's what HSBC is doing and building on our platform. There's BDAX in Korea. BDAX is a crypto native custodian. So they're there and they're ready to really build out this institutional adoption and provide safe spaces for institutions to move into tokenization or into interacting with digital assets. The other example here in our region is DBS. DBS were a pioneer in their space. Singapore's largest bank, one of the largest banks in Southeast Asia, and they launched a digital asset exchange. So their customers, their institutional customers, can buy and hold crypto with them. And these are all great examples of what we see in our region.
Cool. So I think I want to expand a little bit more on the stable coin. So the recent launch of the Ripple stable coin, backed by the USD, is a significant expansion beyond just XRP. Can you talk a bit about the rationale behind it, and then how that complement the existing infrastructure and what's that mean for adoption in APAC?
Yeah, absolutely. When we looked at our interaction with institutions and regulated entities, we often adapt our strategy to the demand that we see and to what the requests that we get in from our institutional client base. And RLUSD, our US dollar backed stablecoin, is no exception to that. So we launched RLUSD at the end of last year. We have now surpassed $300 million of market cap. So we're pretty happy with the speed of adoption and the growth that we're seeing. We launched RLUSD out of a New York trust company charter that gives us bank grade oversight, and really that speaks to we have a compliance first mindset as an organization, as many of the regulated financial institutions that we work with have as well. So we're able to have that trust base and really, launch products and services from the highest test of regulatory oversight. RLUSD is recently been listed on many global exchanges, including Kraken and Gemini, BitGet in Asia Pacific, and that response was particularly to the use cases and the demand that we see in institutions. So we have a clear use case in payments. I mentioned over $70 billion of flows that we service through our global payment network. we are already starting to use RLUSD in our own payment network. We see the use case of using stablecoin as a store of value. Again, that use case that I mentioned in Hong Kong, a lot of those other countries and enterprises in other countries want access to a better store of value than what they have available to them traditionally. And then finally, one last use case that I'm really excited about, like why we launched RLUSD, is this whole world of collateral. And with our acquisition of Hidden Road last year cleared over $3 trillion. They're going to be using RLUSD for collateral in lending. And this is another game-changing step forward for the industry. So we're really excited about what's to come.
Yeah. We are very excited for the use case and the adoption of the RLUSD. I think our theme for the summit is building through cycles. You know that we've been through many cycles and very look up to Ripple's. You've been navigating this multiple crypto market cycles, regulatory uncertainties, and now we're seeing a renewed institutional interest. And what are some of the framework and the discussion internally, like how are you building a sustainable business through these volatile periods?
Yeah, I have seen a lot of change over the last 7 years. We have had ups and downs. The market has had ups and downs. And one word that really comes to mind when building a sustainable business in such a fast-moving environment is resilience. I think that's probably very, very common across the financial sector that has been impacted by many external shocks recently. Resilience is top of mind, and the way that we stay resilient at Ripple is to focus on utility. So really, as we started talking about at the top of our session, how can we build to solve real world problems? And in our case, does blockchain help us? If it does, that's what we lean into. So that utility is what helps us build for the institutions that we work with, because I mentioned that they need trust as a foundation. And that trust comes with solving problems, focusing on bringing efficiencies and doing things differently to open up new opportunities for them. When we were sued by the SEC for allegedly providing unregistered securities, it was a very big blow to us, and it shook the whole industry. And what we did was, we came together as a team. We knew that we were on the right side of history, and we prepared to fight. We prepared to fight because we knew that the institutions that we work with were calling for our technology. They were calling for trusted counterparties in this space, and that it was up to us together to provide access to this new digital asset class that consumers, that institutions were calling for. And so, that resilience really took us through that period of time. That focus on utility helped keep our strength up and to operate together as a team. And luckily for us, it wasn't. Not all of us are in the US, as I'm based here in Singapore. We had like-minded, forward-thinking regulators to rely on outside of the US, and institutions that were pioneers in this space that could see that the world would change. And so we stuck with that faith and are happy to be standing here today with you.
Yeah, the resilience, very important. I mean, congrats for that, right? And on XRP has been experienced a lot of price movements so far, reaching very high, above $3 in early 2025, before the correction. And how do you balance the excitement of the token itself and, the price appreciation, and also between that and, on the utility and balance that between that and the utility and the long-term adoption?
Yeah, that's a question that we get asked about a lot, but it's one that I have to say internally doesn't get much focus, and that's because number one for us is utility. So the market for crypto is very unstable, and often we're surprised by which way the market moves, or or some of the volatility, because we don't have an answer or a reason behind it. So what we do as an organization is yeah, we have some personal interest in watching this space and tracking the price of XRP, of Bitcoin, of Ethereum. However, what we do as an organization is really focus on what are the use cases of building on the XRP ledger. What are the use cases of using digital assets like XRP, like RLUSD in payment infrastructure? What are the capabilities or the transformation that can come when you adopt digital assets? And that means that we're pretty arm's length from any of the movement or volatility in the crypto world, because we're laser focused on utility for the institutions that we work with.
Yeah, definitely focusing on the use case and the utilities are something that Ripple's been doing. And but you know what? Actually, I think working at the corporates, I think the corporates get scared very easy with the market volatilities, right? How do you maintain momentum with your enterprise partnership? What are some of the strategies that work best? When you working with the traditional financial institutions when the market kind of negative.
Yeah, luckily things have moved on quite a lot. So in the time that I've been at Ripple, the starting point was you couldn't talk about digital assets openly. You couldn't talk about crypto. And some of that is because the regulatory landscape hadn't caught up to some of the thinking and the ideas that we had. Now, with the launch of DDEX by DBS, the world is a very different place. Again, SocGen, HSBC, there's a whole range of very, very large conservative organizations whose job is risk management, who are moving in this space that makes our life much easier. However, that focus on education, on working in partnership with policymakers and with regulated institutions is what we continue to do, and it is step by step, and sometimes it can feel very slow. But what we've been able to do is marry crypto natives who are less regulated, who are maybe a VASP versus a bank. There are different regimes out there that have different levels of risk tolerance, and so we get to work with both ends of the spectrum, which frankly helps us with the motivation and to keep going, because you can see those milestones, and then when one of the big guys steps in, you have very significant transformation. But it's everyone working together, moving forward, that helps us with that dialogue, that helps us show regulators that there's a safe way to operate. And really, it's not just us anymore. There's so many other organizations that are calling for further regulation, for regulatory frameworks that we can operate in, and that all keeps us going. So we're on the right path.
Yeah, definitely on the right path, right? And competition right now I think it's intensifying, with the CBDCs and other, payment solution like USDC, USDT. How do you position Ripple's solution going forward, when clients have much more alternative in terms of their solution payment?
Yeah. When I look at the options that are available, I see that as a positive reinforcement of our strategy. So the fact that there are other stable coins out there, the fact that there are now more payment companies that are addressing that bridging of digital assets and fiat currency, all of this is reinforcing that there's demand for what we're doing, and that's a great space to be in. If you look at things from a cross-border payments perspective, which is how we started, the world looks very different. Interoperability is actually something that matters a lot to cross-border payments. That example that we were talking about of being able to pay in Bangkok with my Singapore dollars, with my Singapore funds, with my Singapore app, that's interoperability. That serves the customer, and it embraces different networks, different currencies. And when I look across the digital asset space, that's what we're building. So we want to be able to have a multi-chain world. When we launched RLUSD, our stablecoin, we chose to do so on both the XRP ledger and on Ethereum, because there is an element of offering choice and interoperability when it comes to actual adoption and usage. Similarly, when we look across the custody solution that we have, we are enabling tokenization across multiple chains. We're enabling custody of digital assets, whether they're tokenized real world assets or whether they're crypto assets like Bitcoin. And that all fits together because we're building that foundation for financial market infrastructure. So we need to have interoperability and choice for our consumers.
Yeah, at SCB10X now, we are very deeply involved in the AI development, and there are so many things happening around blockchain and AI. How do you envision AI enhancing cross-border payments in the future? You see that kind of AI in the blockchain-based systems?
Yeah, I think it's there are some interesting parallels in that it's a nascent technology. There we can all speculate on which way the world is going to go and what will happen. What the reaction from regulators will be as the technology develops. What I'll say is I'm excited to see some aspects of AI around efficiency improvements, around agentic AI to help individuals and organizations navigate the system. I think there's a lot that remains to be seen and proven, and I'm sure we'll be seeing some interesting things come from the SCB group as well.
Yeah, I see there are a news around potential approval of XRP ETFs and the growing institutional interest. What infrastructure development are most critical for this to supporting next wave of this adoption?
Yeah, huge amount of activity in this space. So over the last few weeks alone, we've seen XRP futures ETFs go live on CME. In fact, it was Hidden Road that cleared the very first trade there. So we're proud parents on that front, and also live on NASDAQ on the volatility shares. So some really big players in this space. Right now, we are pending spot and futures ETF applications in the US from Franklin Templeton, from Grayscale, and from many others of that kind. Other XRP ETFs that exist today and are seeing traction and volume growing on them are Hashkey in APAC, Hashdex in Brazil, Virtune in the Nordics. So really a lot of activity, and we're really excited to see that activity. What it tells us about demand is probably more interesting than what it tells us about infrastructure. It says to us that institutional investors want to have that access to a diverse set of digital assets, assets in general, and to be able to include digital assets in their portfolio. And now what we're seeing is, particularly with the movement in the US, they have the regulatory clarity to do so. So as these really large guys move into this space, it opens up whole new markets to us. So that's something that we're keen to promote and to continue to see.
Yeah, as someone who's built the bridge between the traditional finance and the Web3, what's your advice for other companies, startup, trying to navigate this, trying to sell crypto solutions to traditional finance, as you mentioned? What are some of the challenges that you face, and how you overcome all of those? Any advice to share with the startup?
Yeah, absolutely. So my advice would be really to start with what problems are there and what can we solve? And some of it is going to be a journey. You won't have answers to everything day one, but really focusing on where can we improve the organization's lives, individuals' lives? How can we bring in technology to solve actual problems rather than technology for technology's sake? We see a fair amount of this noise in the digital asset space of crypto for crypto's sake. It has to be focused on utility, and that's the way that you last several cycles, and that's what gives you the right to be resilient. So I would advise startups to really start with what is the problem I'm solving, and if it doesn't work, it's okay. We move on and find another problem or another way to address it, and we've had to go through several iterations of that ourselves.
Yeah, definitely utility is key, and having resilience to go through all the cycles is very important for startup. And looking specifically at zooming in Southeast Asia, where Thailand, Singapore is right here, which market or use case that present the biggest opportunity for cross-border payment in the future, 2 or 3 years?
I'm really excited about the use of stablecoins in payments. I think that we've already seen, it's early days, but we've seen that the adoption is there, the demand is there, that globalization of supply chains is possible. You can start to look at, what are the benefits of being in APAC and what are the unique capabilities that we have? Actually, as I look across the countries, there are so many trading hubs. There are so many import and export hubs, Thailand, Hong Kong, Singapore, and the use of stable coins makes the flow of both goods, services, and of funds much, much easier. So I see that as the next frontier for digital payments, to embrace stablecoins in various guises. You can see a world where a multinational entity is able to move funds between its own subsidiaries in a moment. And what does that open up in terms of opportunity? We're often told about enterprises that have missed out on an FX opportunity, or that have missed out on a great deal to acquire something because their infrastructure that they use couldn't move fast enough. And so what we're seeing is the use of stable coins that are available 24/7, that could be used to settle on-chain transactions as well. So all that, the world of tokenization, if it's a tokenized money market fund or a tokenized bond, getting instant access to that 24/7 is all possible. And so that's the space that I think stable coins are really exciting for.
Yeah. Before we wrap up, so what should if in case our audience interest, right? What should be a place where our audience can just go and look at about Ripple's upcoming initiative, partnership, developments, where can people learn more and potentially getting involved?
Well, there are a couple of things. So actually, it's good timing. We have our XRPL summit that's going on June 10th to 12th. That's based here in Singapore. I'm hosting, so everybody is welcome. And that's where we've talked a little bit about startups. We talked about use cases. That's really a ground up approach to who's building on the XRP ledger. What are the use cases that it's not Ripple saying are interesting, but it's what the ecosystem and the community are saying are interesting. So that's a great place to start. Otherwise, come and talk to us, because we are a global organization. We're all around the world. Come have a look at our website, see some of the exciting things we're doing with partners like SCB and with others in the region. And we're always happy to share.
Yeah, thank you so much, Fiona. That's been very resourceful. You've been a good partner with Ripple, continue to do so. We have someone in our team at the event as well. So I believe the audience learned a lot about Ripple today and getting inspired. And thank you for all the advice.
Great. Well, thank you so much for having me. It's been a pleasure to share, and I'm looking forward to meeting your team members soon.
Yeah, thank you so much.
Hi, Griffin, and hello to our folks back home. I'm Michelle from SCB 10X, and today I'm really excited and honored to be interviewing Griffin, the CEO and co-founder of Holiday. Griffin, thank you for your time. There is so much I want to cover, so let's dive right in. Griffin, first off, can you introduce yourself and share with us your personal journey, how you got into the Web3 space and started Holiday?
Yeah, absolutely. And thank you for having me and hosting me today. I got my start in blockchain prior to going to university. I actually got in through an internship where I was doing software development. and my boss was actually really into crypto, and he said, Griffin, you're playing a lot of video games, so you should check out this thing called Bitcoin because it's internet money. And that was sort of my brief foray. But then I studied computer science at Stanford, so I got into embedded operating systems and really into systems development. And then as well, I did discrete math and cryptography. And I luckily took a class by a professor named Dan Bonnet, which is their blockchain class at university. And the first slide is crypto's the intersection of embedded systems, cryptography, and behavioral economics, the three things that I was passionate about at the time. And since then, I was naturally inclined to just jump right in. And I've been in love with the technology ever since.
And congrats on your Series A, by the way. You talked about your mission of pioneering the software era of blockchain. But can you take us back to when you first started Holiday? What was the initial mission then, and how has that mission and vision evolved and expanded today?
Yeah, so I mean, our mission originally at the company was to connect applications to on-chain commerce, and that's still very much a focus of ours, as well as creating these sort of software level abstractions to make building applications much easier. But the original impetus for the business was actually inspired by the early blockchain games that were being launched. We saw Axie Infinity become incredibly popular, and the thing that particularly fascinated me about Axie was you had real world economics happening in a virtual world. This also coincided with the movement for superstars to do concerts in virtual worlds. You have Ariana Grande doing a concert in Fortnite, right? So you have this dual trend of cultures happening in virtual spaces and economics is happening in virtual spaces. And our original mission for the company was to connect applications to these sort of virtual economic hubs via the blockchain. And so we originally started down that pathway and uncovered a lot of more structural problems with blockchain, such that it's incredibly hard to build any sort of blockchain service. But we're still very much focused on connecting applications to on-chain commerce and making it much easier to build on-chain applications in the first place.
Yeah, that takes me to my first question about your product roadmap. Talk to us about your initial product, Holiday Payments. That was actually how we discovered Holiday. And could you give the audience like an introduction about Holiday Payments and the problem statement that you are solving for?
Absolutely. So when you build a blockchain application, one of the first questions you have to answer is, how do my users get started? How do they spend their first dollar in my application? And the problem we're solving for is that accepting a payment as a blockchain application is very difficult and very fragmented. Users can have funds in a crypto wallet on a different chain, in a different currency. They can have their own local currency in a bank account. They can have crypto or their currency attached to a centralized exchange. So there are all these different methods and places where people store money and store some form of value. And for a developer who wants to accept the payment, prior to our product, they had to go out and integrate 10, 30, 50 components, build all of this plumbing to connect those sources of value to their application. And we saw this problem over and over and over again. We have a client, DeFi Kingdoms, who's on an Avalanche subnet, right? And they wanted their users to on-ramp to their chain. Well, they would have had to integrate the on-ramp, the bridges, the dexes, the different chains, all the intermediate routing layers. So doing this is incredibly expensive. And so what we did is we said, hey, we're going to integrate all of these different ways to pay. So centralized exchanges, on and off ramps, dexes, different blockchains, sources of tokens, and package that all into a cohesive checkout experience. And so what we let you do is we let you accept any form of payment in hours instead of spending years building out all of this plumbing infrastructure yourself.
Yeah. I feel like there are so many friction points onboarding, the average user onto Web3 that like when we saw what you were doing, it was like, wow, this is the overhaul that the Web3 space needed. Yeah. So one thing that really stood out for me when we first learned about you is that a lot of Web3 companies, they start out by focusing on crypto native users. And then they expand from there. They expand their market from there. But for Holiday, you took a different approach and you built for mainstream users from the get-go. Was there an internal debate about the initial traction versus market opportunity that you could be trading off? Like, what gave you the conviction that this is the time now for a solution like holiday payments?
Yeah, it's a great question. So we had early crypto native clients, and we found that their acute pain points were actually in attracting Web2 users. So, the crypto native market is relatively small on a number of users basis. And so when we talk to a lot of the crypto native applications, they have a loyal current user base, but they really want more net new people. And it turns out that most people in the world don't happen to have the token you want, and they don't have it in the place you want it to be, right? So they have to go through this complicated routing and execution process to get the value to your product or application. And so we saw this longer term opportunity. And I think this is really where we took the trade-off. We said, we want to build for where we think the market will be in 2, 3, 5 years, build for this large venture opportunity instead of going after the short-term market, because it's this recognition that you can't just build blockchain products in isolation right now, right? We're in this transitionary phase from incumbent financial systems to this new upgraded financial system. But people aren't just going to take all of their money and all of their value and instantly port it over. The analogy I like to give is, we moved from on-prem to the cloud. Most of software actually still runs on-prem. We didn't just give up all of our on-prem data centers and delete everything and instantly go to the cloud. There was this, and this is still actually ongoing, where you make them work together. Then you start migrating data to the cloud, and then you start building new applications on the cloud. So you need that interstitial layer that can talk to both the incumbent systems and the new systems. And so we saw a large opportunity to play that role. We're not just connecting you to all of DeFi and every single blockchain. We're connecting you to every centralized exchange. We're connecting you to every bank, to every traditional rail, so you can have every way to pay in your application.
Can you share with us your traction on holiday payments? I know you made a lot of traction with Web3 gaming companies, but what other verticals have you captured and seen a lot of growth in?
Yeah, no, so I have over 35 clients now on our payments product, and the customer segments vary. We have blockchain games is was our first passionate user segment. Now we're also seeing, broader just like ecosystems and people launching their own blockchains. One of our clients is Story Protocol. They created a new layer 1. You can either go out and build all this plumbing yourself, or you can use a unified checkout experience like Holiday to power onboarding instantly. We also power the checkout experience for ApeChain, which is built by, the creators of Bored Ape, and that's more of an NFT ecosystem project. Now we're also starting to see, a different client segment emerge, which is the universe of Web2 fintech, who now wants to build crypto products. So, sort of have these niche in crypto, more broad crypto companies, and now we're seeing even Web2 companies who want to deploy an application to 20 blockchains. And for that segment, it's really valuable to not have to rebuild all of this infrastructure for many different blockchains and virtual machines. For the fintech segment, we save them potentially 2 years of engineering time, and we give them a solution that works in a few hours.
I kind of want to zoom into the technology behind this. because you've abstracted away all the complexities by offering multi-hop, multi-sediment. But like underneath the hood, can you share with the audience a bit about your technology approach? Like what technology enabled you to, stitch together all these rails across these multiple networks and to do that at scale?
Yeah, that's a great question. And I think also, looking from a high level at our approach to technology on blockchain, we do not compromise on self-custody. We are 100% all in on building decentralized technology first. So we built this as a smart contract protocol. There's no, secret encrypted data off chain. There's no special hardware assumptions. This is all on-chain engines and on-chain smart contracts orchestrating these workflows. And what we did is we built a workflow engine that is a smart contract that lets you stitch together actions and steps across many different blockchains. So we deploy this engine to Base, Arbitrum, OP, Solana, all the different blockchains. And that exposes a high-level, low-code way to perform actions across these different computing environments. And the value is it's all self-custodial, it's all trustless, and it's seamless.
Can you talk a bit about hash time lock, the technology approach for that?
Yes. So we take advantage of the properties of hashes, and the property of hashing that we're using quite extensively is the fact that a hash is a commitment to a inputted data, right? A pre-image. And when you create a workflow, you commit to that workflow that's going to be done. And then we encode that in our workflow engine. And once that's committed to it, it cannot change. And so that's the really important property of our product is a user commits to this complicated multi-step intention or this workflow in sort of the way we like to refer to it. And then cryptographically, the engine enforces the rules that the user sets. And we use hashing among other cryptographic techniques to ensure that that is guaranteed as you go between chain to chain. And a time lock, all that means is if the workflow isn't done within a specific amount of time, the funds automatically get sent back to the originator of the workflow.
Okay. So it's like a sequence of if-and statements.
Exactly. You can do more complicated things too. We let you outsource complicated routing logic while also keeping very strict constraints, right? You could say, hey, swap from Ethereum to USDC. I want at least this price, but go find me the best route. You can do that because we can rigorously define the constraints in that step. But largely it is, it's like, do this, then do that. If this happens, do A. If that happens, do B. And you can create these large trees of actions. And that really saves you a tremendous amount of time from having to build this from a low level with Solidity and managing keys and relayers and all of that. The developer, all they see is that high level description.
Was that the core, was hash time lock the core reason why you were able to stitch all this together at scale? Or was there also like a combination of other approaches that you needed to, kind of interplay with hash time lock?
So it's certainly a combination of things. I think the time lock is just sort of like the escrow. And then hashing really is used for this idea of a global commitment, right? So a hash is going to be the same hash no matter what blockchain you're on. And that's why hashes are helpful in a cross-chain context, because you're committing to data universally if you're all sharing the hash function. And so that's like a key cryptographic primitive. And many people rely on hashes, right? Like a lot of the cryptographic schemes you'll see on layer ones rely on hashing somewhere or the other. But the real thing that enables this is the engine. We have hashing, we use cryptographic commitment schemes, but the engine is what allows you to define a workflow and then execute it without having to worry about all the complexity, the fault tolerance, the integrations, the routing, and these things that usually take many, many months to build yourself.
So I want to segue into your latest launch, the agentic workflow protocol. That was a product, I think, back when we were speaking, it wasn't live yet. So yeah, really excited by this new product. Tell us more about agentic workflow protocol and like what inspired this latest launch.
Yeah, so all we're really doing here is letting the world build and see the underlying technology that we use in our checkout product. So behind payments, and this is actually one thing that we realized when developing a payments product, all the work we were doing was integrating different protocols, integrating different blockchains, and then stitching actions together into a unified execution engine. And so we have this really powerful and productive workflow engine. And that's what the workflow protocol is. And we said, hey, we want the world to go build products on the workflow engine. There are many things you can do that are not payments. We're focused on payments because that's our go-to-market. It's a great product. It drives customer value. But there are many workflows that one might want to do that are not necessarily encompassed by holiday payments. Maybe you want, we don't support certain treasury management use cases directly in our payments product, but maybe you want to build that yourself with custom logic. You can do that. If you want to build sophisticated recurring actions or rebalancing workflows or fee collection workflows across many different blockchains where you don't want to have to build custom infrastructure every time, that's where we become very valuable. And then it's also this realization that, look, many people are building on-chain agents. Those agents need the arms and the legs to go do things. Right now, if you're building an agent, you have one choice, which is either it's going to form transactions itself and talk directly to all of these different components and manage that complexity, or it's going to write a smart contract just in time, or it will talk to a higher level set of tools. It's almost like MCP, where you can stitch together different protocols into sequences of actions. And that's exactly what we opened to the world. We said, hey, if you're building an AI product, build it on the workflow protocol and go from years to hours in development time. And that's really all we're saying is we have this great underlying technology. We think people should build other products on it.
Was this like pre-planned when you were working on holiday payments that okay, once we prove this out, we're going to flip it and we're going to open it up to protocols? Or was it like you worked on holiday payments and you realized that, the value underneath the hood is so valuable? This is a bigger market opportunity.
It's definitely the second, where we were building payments. We were building to the need. And we noticed as we were building it that we spent 95% of our time on this fundamental, I'll call it a computing problem, which is we spent all of our time integrating components. So there's this integration component. Then there's this component of composing different applications. Different DEXs have different interfaces, different lending protocols, different bridges have different data formats. So it's not just integrating all these components, it's unifying their data formats into one backbone service. Then it's also executing reliably across all of these different components. And if you have 100 components, well, reliability actually becomes a very challenging thing to scale. And so we started working on that problem. And once we built all that, we said, well, that's a pretty general purpose tool. It's integrate, it's compose, and it's automate reliably. You can build a payments product with that technology, but you can also build many other things. And so we're still very focused on payments, but we also would love to encourage developers to build new products that are adjacent to payments that add value to applications.
Yeah, and I feel like your market opportunity just grew exponentially. Yeah.
Right. There are a million different workflows, and we would like to power all of them and make your life easier.
So with whenever we come, AI agents is, now really gaining a lot of momentum, but I think a broad concern that enterprises generally have with AI is around, the safety, the risk aspects about these systems, right? Like, how can I trust an AI to manage and move my user assets, especially on chain? So how does your workflow protocol safeguard or address these hurdles?
Yeah, and this was actually a serendipitous, consequence that their protocol is actually perfectly designed for this use case, which is, in building payments, we built the workflow protocol such that the workflow can only do what the user wants, and the user sets guardrails, right? You can say, you can only spend this amount, you can only spend this asset, you can't convert for less than this exchange rate. So what we let you do and how this makes AI safe is the workflow protocol lets you set the walls, the boundaries of what can be done. And then the AI within those boundaries can chain actions together, but only if those actions satisfy the higher level constraints. So you get the best of both worlds here. You get sort of a rigorous attestation that what I want is either going to get done or it won't happen at all. And then when things start to get automated, you have this fuzzy system, which is an AI. So if it makes a mistake, it just won't get accepted on chain. And maybe the AI can retry and it can find clever solutions within these higher level Lego pieces. But the workflow engine, having this built in, is actually what makes this safe. But the alternative, right, is if an AI is writing smart contracts, well, smart contracts don't have those guardrails built in, right? It's actually quite the opposite. Like, you need to audit your smart contracts. Tiny mistake in a smart contract can result in a catastrophic exploit. Workflow engine is for higher level actions. It doesn't give you the flexibility of Solidity. But for most people who want to chain together business logic, they don't even want the lower level flexibility. They want to go from bridge to DEX to bridge to yield protocol. They want to do it on a compounding basis. It's much more secure and it's much safer.
And for Web3 companies and developers that are interested in working with you, can you talk broadly about your pricing model for holiday payments and also for the agentic workflow protocol?
Yeah, I mean, our business model for our payments product is quite simple. We're a B2B company. We work with all the way from SMBs to enterprise businesses. So we also build sort of boutique offerings based off of the needs of the customer. So we're hands-on. So we come up with a package that meets your needs. But generally, it's the combination of a platform fee and a share of the GMV on a sort of per payment basis when we're talking about payments. And then when it comes to workflows, it's a pay-as-you-go model, right? A workflow costs some amount of computation. There's some complexity in carrying that out. It's almost like paying gas on Ethereum, right? You pay for the compute you use. If you're using Amazon, you pay for the compute you use. If you build a complicated workflow, you pay for the compute you use.
And what's the status of the agentic workflow protocol? Is it like still in private beta, or like is it live now?
So the underlying technology is live, and that's been live for as long as we've had payments. And the underlying workflow engine is battle tested in production with large clients. Letting people build custom workflows, we're working directly with businesses right now with design partners. And the main reason we're doing that is we want to provide a hands-on experience when we're unbundling this technology from the primary product, and then work towards a standard set of tooling for building workflows as they're unbundled from this unified product experience. So we don't want to go get ahead of ourselves and give people the low-level workflow without the adequate tooling. So we're finding those visionary clients and partners who really want this underlying technology, who are willing to be partners with us and develop a sort of emergent developer platform.
And like with the momentum from TradFi, with institutional crypto adoption, in these last 2 years, has that impacted the trajectory of each of your product suites?
It has certainly. I mean, we see a lot of interest from TradFi. We see a lot of interest from Web2 fintechs, and it's primarily along the angle of, hey, I want to offer a financial service. I see there's 20 different blockchains. There's all of these different products and services. Where do I get started? How do I get all this expertise and talent at my company? And my competitors have been out for a year, so I really need to move quickly. That's where we become perfect, because our platform is really, you can think of it almost as a control tower over the different products and services that are offered on chain. We let you integrate everything with one integration, and we let you build your business logic and your workflows with one integration. And so if you need payments as an enterprise, you can use payments. If you need something more custom, you can use our underlying workflow engine. And oftentimes people use both, right? You initially buy payments, and then you want to add something custom on top, and that's a pathway that we really like at the company, actually.
Oh, I wanted to rewind a bit. So, when you were building holiday payments, right? How long did it take for you to get that checkout experience that you wanted? Because I recalled reading your blog about how you lost the deal because back then you couldn't do recurring payments, So
Yes.
how was the development time? Like, how long did you spend before, you had all the composability, all the functionality that that made you ready to ship? Yeah.
Yeah, so it certainly went in stages, and we're not done. And so this is the complexity of the, even when you talk about just checkout, just payments in my application, well, there are a lot of countries in the world. There are a lot of local payment methods. There's a lot of centralized exchanges. There are a lot of DEXs, a lot of blockchains, a lot of virtual machines. The list goes on. And we're still actually building out that core suite of tools and payment methods. It's been over 2 years, and we've raised $26 million, and we have experts in the field in San Francisco and New York City, which are sort of focus points for this kind of talent. It's a really hard problem. And so if you're doing this from scratch, you've got, a 2-year timeline, and you're spending between, $5 to $15 million to build this out in a scalable, repeatable way. And that's sort of what we say to people. It's like, if you're not in the business of software maintenance and payments plumbing, you really should not be building this yourself. You should be focusing on your business logic and your application. And we've got years of work to do, and that's why we're still growing the team and growing how much we can deploy.
Who do you see as your biggest competitors today? And what do you think is the moat of your business?
So I still will sort of take the perspective that from a competition standpoint, in this stage of the market, it's sort of like the YC advice, which is, oftentimes it's not competitors who kill a startup. It's the fact that the startup just doesn't find customers. And I think blockchain is there as a whole, where it's the more important thing is connecting to where people are and is getting the users onboarded in the first place. So the competition is, I don't want to change anything, and I'm just going to use my Visa card. I'm not going to go on chain at all because I have no reason to use on-chain products. And so we're trying to blur that barrier between the on-chain experience and the off-chain experience. And our moat is, one is the breadth of the integrations and the reliability of everything we're building, right? It's this sort of recursive process where the more customers we have, the more feedback we get, the more integrations we do, the more revenue we have, the more we can grow the team. So we just sort of reach an economy of scale. And the second thing is, we're a computing platform. People are going to start building packages, standard libraries. You can connect to every application. Like, every integration we build makes every other integration more valuable. So you get this flywheel effect around the protocol as it scales. But we're still just very focused on understanding the customer. I think at the end of the day, we're in service of the customer, and our job is to understand and deeply understand the pain points of those in the market. And our real edge will be us being customer obsessed consistently, growing our revenue, growing our margins, and then scaling.
5 years from now, like, what do you think when someone makes their first like blockchain transaction? What do you think the experience will look like? How do you think that users will be interacting with Web3 infrastructure?
Yeah, I think your first transaction in 5 years, there's a good chance it'll be a one-click process or sort of a face scan through Face ID with your current digital wallet. So I don't think the way people are going to pay or where they're going to store their value, I don't think that will change dramatically. But what I do think will happen is that all of those current distribution channels will integrate stable coins in the backend. We'll connect to blockchain just enough to be the perfect gateway to crypto. An example would be like, maybe you bank with Bank of America. And in the future, all it takes to buy in is scan, click approve in my Bank of America app. I have a stable coin. It hits a holiday workflow. It buys the asset you want. It just all happens instantly. You don't need to re-KYC. You don't need to go through a 15, 20-minute onboarding process, have a 30% chance you're going to get denied. It'll just all work through this synergy between the existing rails and the new rails. And I think that's going to take many years to iron out.
Yeah, true. Because like right now, like our digital assets and our fiat is completely separate. Yeah. I kind of want to circle back a bit to you because you have such a deep breadth and depth in both AI and blockchain. Can you share with us like what do you like most and least about characteristics of Web3 and what you like most and least about AI? And like how has that kind of shaped your approach to developing a Web3 product?
Yeah, that's a very good question. Well, I think immediately what comes to mind in the relation of AI and Web3 and how Web3 views AI, I do think there's this false dichotomy between Web3 and AI. Web3 and blockchain is one of the few industries who treats Web3 X AI as its own thing. Like most areas of software, just like, yep, AI is like compute, we'll put it in. It's not like software X AI is its own category of SaaS. If you use a CRM, they all have AI now. There's not like CRM X AI. And I think this sort of hesitance to include AI or to resegment it in this way is not super productive. And in the sense that I think it's almost led blockchain to fall a little bit behind the incumbent SaaS industry. Because my concern is that in 5 years, when all of traditional SaaS has all the agentic tooling you'd expect, that crypto feels like 2017 SaaS, where it's like, it's really good, it's refined, the user experiences are great, but they're not agentic because we had this sort of like, oh, you need to be a crypto AI business. You can't just be a crypto business that uses AI. And I think the proper way to think about AI is it's like networking, it's like storage, it's like compute. Name a single application today that doesn't have networking, storage, or compute. It's very few. Most applications connect to the internet. And intelligence is one of those things where I think you can apply it almost everywhere. And maybe there are different user experiences that put it up front in the same way that, a network first streaming app, right, is sort of really relying on the networking component. But I don't think there needs to be as much of a like, oh, this is Web3, oh, that's AI. These are two different things. AI is sort of a super cycle technology that will impact every technological discipline, including Web3. And I think one of the things about Web3 that I think is challenging is that building decentralized technology is very hard. And it's one of those things where we believe in a positive externality. That's the way I like to frame it. Like decentralized technology has a positive externality. And it's almost on the role of government to incentivize decentralization because the market equilibrium is not necessarily decentralization because it's so much harder to build truly decentralized products. And it's hard for people to tell the difference between a centralized and a decentralized product. Sometimes centralized products actually have better user experiences than decentralized products. But we've also seen how that can go wrong in the past. And I think the challenge is going to be aligning enough stakeholders and enough national governments to bridge the gap and say, no, we believe in decentralization, but if and only if these things are truly decentralized. And that's just a different sort of problem space than traditional technology. It's almost like it's almost a social coordination problem more so than it is a technological problem.
I think you kind of addressed that, but like, what changes do you want to see for the Web3 ecosystem?
I think one of the most important things, and I think this is happening right now in the US, is market structure regulation. I think it's time that the industry get regulated. I think that'll be very positive for the industry. I actually think it'll incentivize the right things we want for those exact reasons I was describing. And I think the most critical thing in my mind is, do we define decentralization well in market structure, in just the different global regulations? Because this technology has the power to do a lot of good in the world, to open access, to give people sovereignty, but we have to protect and incentivize its development. And this is happening right now. I mean, we have the Clarity Act in the House. You know, the Genius Act is making progress in the US Congress. You know, you have MICA in Europe, and that's super encouraging because that also unlocks the rest of the world and the rest of regulated industry, where there's a lot of users and a lot of people and a lot of capital that can finally come in as well. So this sort of takes us from niche to mainstream if these laws are written correctly.
What's next for Holiday in terms of your strategic priorities for this year and maybe, you know, the medium term?
Yeah, we are incredibly focused on making payments the best way to check out on blockchain. So for any app that's on a layer 2, any app that's accepting crypto payments, we want to make this the best way to check out. And then we're also building and making the workflow engine more robust. And it's also my opinion that if you don't have a top-notch application, it's hard to build a top-notch protocol, because to learn how to build a great protocol, you need to have a lot of users on your application. So these two things are very synergistic. The better our product does, the better the protocol is. And so for where we are very focused on the customer, making our customers happy, making their users happy with a great checkout experience. And that's going to be our focus for the next year.
What has been the most and least rewarding about being, you know, a startup founder?
Yeah, well, I think the most rewarding element is just sort of the act of creation. I think that's very, it is the way we have structured our civilization, where you can organize and actually create things. Like a company is the way you build things in real life, and that's the structure we have aligned on. You know, there are other vehicles, right? You know, maybe like a 501c4 and these different, but they're all sort of broadly like human organizations, and that's how humans build things. And you know, I have opinions, and I would love to see them reflected in reality. And I think this is the way you do it. And I think that's a very exciting and rewarding process. I think the downside is that it's excruciatingly difficult to do that, because there's a lot of just entropy in the world. What can't go wrong will go wrong. And so if you're starting a company, get ready for that. And then there's resistance, right? You know, you hear no a lot of the time. And so you just have to be incredibly persistent, and that's difficult to hear no. but I've been doing this for 3 years, so I'm used to it now.
Mm-hmm. And is this your first like company as a founder?
So I actually prior to Halliday, I worked on an ed tech business and tried to sell large risk-averse universities new AI-based tooling. But this is my first venture-backed company, yes.
Okay. Like, because the theme of REDeFiNE this year is like building through cycles. So could you, well, like, what suggestions would you give founders on building a sustainable business and product proposition that, you know, will truly scale and be, you know, how do you say, not sensitive to, you know, up cycles and down cycles. Yeah, not vulnerable to, you know, the ups and downs of the crypto market volatility. Yeah.
Yeah, that's a great question because I do think the greatest risk in the crypto market, especially for a founder, is not necessarily to get distracted in a bear market. You don't have the luxury to be distracted in a bear market. Like you got to execute or you're going out of business. I think one of the challenges is actually staying focused in a bull market. I think, you know, and this is maybe unique to crypto where, you know, people sometimes they lose sight of the customer in a bull market. And at the end of the day, customer pays the bills. And if you don't make customers happy, you're probably not going to have a sustainable, successful long-term business. And I think the most important thing is just to, and it's not exactly controversial advice. It's like, this is what Paul Graham has always said. It's listen to your customers, build what they want, rinse, repeat. But you know, I think this is a classic mistake to make is like, oh, it's a bull market, ignore your customers, you know, chase a narrative. But there are a lot of, you know, I've been through a few cycles now, and I know a lot of businesses have done that and they no longer exist. And a lot of businesses who've been silent and just executed and shipped value to their clients. And those businesses have become very successful.
Is there anything that we should be expecting from Holiday? Any new product launches, partnerships you would like to share for those interested in working with you? Like, could you, you know, let the audience know how they could reach you?
Yeah. We're actually releasing a new version of our payments product and our checkout experience very soon. And that's very exciting. That comes with a whole slew of new features and enhancements, better pricing, user experience, reliability, new payment methods. And it's really just going to be a massive unlock as we scale that from, you know, 10 to 100. And then, yeah, if you want to, you know, people want to get in touch, you know, either go to our website and you can book a call there at Halliday, HALLIDAY.xyz, or feel free to email me directly at Griffin, GRIFFIN, at halliday.xyz as well.
Thank you so much, Griffin. It's a pleasure. It's been so much fun. Thank you for your time and thank you.
Thank you so much. Yeah, it was a pleasure to be here.
Thank you.
Hi, hello everyone. Thanks for joining into our session today on the intersection of AI and Web3. My name is Narong. I'm a technical specialist at SCB 10X, where I see technical side of our investment. Here I have Sean with me today. A bit of background with Sean. Sean has been in the AI space for a long time, from Stanford Lab to Allen Institute for AI to Snap. He is currently an associate professor at the University of Southern California in CS department. He is also currently a CEO and co-founder of Sahara AI, where he focuses on decentralization of AI ecosystem. Hi, Sean. Thanks for joining today.
Hi, Narom. Great to be here. Thanks for inviting me.
Yeah. So let's warm up everything and discuss about AI in general first before we dive into Web3. How about that? So you mentioned before that one day AI might replace many parts of our work. So let's unpack that discussion a little bit more. How could this be a threat to knowledge worker? What do you think?
Right. I think today's main issues with AI industry is everything is been pretty much centralized. And what that means can be break down into three dimensions, right? As you guys know, AI developments involve three main pieces: the data, the model, and the compute. And we can see right now the success of big companies like Google, Meta, and OpenAI are being able to really centralizing all these three dimensions really well. They are able to hire the best talents over the world, all of the great graduate PhD students, and then just like trying to do all of the frontier research for them. They're able to build huge data centers, consolidate all of the GPU resource and compute to create huge computing power that continuously able to proceed on the scaling law. They're able to use the best data service provider out there for players like Scale AI to just pay for the data sets. And because of they control all of these three dimensions, they are able to really dominate the ownership and the contribution attribution and also the pay rate for all these three dimensions, right? They take all these three resources to build the best application out there. They're charging the application users, they get the revenue. Now they can take this revenue to say, hey, I want to pay this amount of money for the compute power that I'm using, and I want to pay people by this salary rate, and I want to pay the data service provider by this. They basically give one-time cost to all these three types of providers and take all of the ownerships of whatever being generated out there. And I think that's a really intransparent and sort of unfair economic relationships between the whole ecosystem participants. As you can tell, the data providers doesn't really own the data set they are continuously given to this AI model, which are improving the AI model day by day. And the model developers are also not taking any shares of those models being built within those companies. So at the end of the day, the companies control all of the ownership and everything, while the upstream contributors are just left out of the economy. And as this whole relationship proceed, what we'll be seeing is all of the application gateway companies like Google, Meta, OpenAI, they control the whole economic sort of bottleneck, while the other people are getting left out of being in a fair sort of economic relationship. I think that's really concerning to this industry, and therefore we really need to look for ways of disrupting these paradigms, and in order to giving back the control of data, of model, giving people ownership, especially using blockchain to power this kind of ownership and attributions to be auditable, transparent, and fair.
Yeah, that's an interesting point. Talking about the ownership, you see, now we have like a open source model that everyone can own, and then we have like a proprietary model, like a commercial model that, like big tech company is owning. How do you see the tension between like the open source model and the commercial model owned by these big techs? And then how do you see the decentralization of this model can help, with the ecosystem?
Yeah, I think open source models are always great to exist regardless of what the commercial companies are doing, because number one, they are advancing science, right? Because of the open source of these models, every researchers and students can look into the recipe and the data and the model parameters of the best models, at least like the tier one models out there, so they can keep investigating new problems, new research challenges on top of the best models out there and keep advancing the frontier. Otherwise, if they only study models that are like 1 or 2 years old, all of the findings and results might not be relevant to the research frontier. So I think that's always important to keep an open science, open community to researcher. But I think this is also very disruptive to the commercial companies because commercial companies can charge an unfair sort of a rate of those models through API calls, right? For example, when there's no models is comparably good and open source compared to GPT 3.5 back then or ChatGPT back then, ChatGPT, they can charge a much larger margin to the users because they have no other options they can choose from. But now if there are some models that are 90% close to ChatGPT, but it's like 100 times cheaper or even free out there, this is basically very disruptive to the economic sort of business models for those companies. And I think that's healthier to make the entire sort of foundational model space more sort of friendly and more fair in terms of charging people. But I do want to distinguish on the concept of open source model versus decentralized model. Open source model has the benefit of supporting open science, but the bottleneck is it doesn't really benefit the contributors economically, right? If I'm a researcher and I open source everything, I'm doing basically nonprofit contributions to the society, but it doesn't really help bootstrap my personal sort of commercialization or monetizations of my knowledge and expertise. Versus decentralizations in AI, in my opinion, is not always meaning to decentralize all of the physical aspects or the traditional recipe of how AI was built, right? We are not trying to say, hey, compute has to be decentralized or the model development has to be decentralized. I think the first touching point for decentralization of AI is to decentralize the economic relationship, the governance of AI assets, right? For example, models should still be built using centralized data centers. Models should still be built by the best model developers, the talents out there, and models should still be powered by the data sets, the high quality data sets and most valuable data sets that are created by different domain experts. But a model should be seen as a shared assets by all of these participants in the process of development, right? Today, if you contribute your data sets in building a model that I'm the model developers, I rather see the relationship of the ownership on this model as you taking maybe 30-40% of this model's ownership. I'm taking the rest of the 60%. Or I can even give out another 10% of the model revenue share to the compute providers. So all of us three parties become the co-owners of these assets. And once I start monetizing these models or agents, all of us will continuously get revenue shares down the road as protected or guaranteed by the smart contract of revenue sharing mechanisms I deploy on the blockchain. I think that's a much more fair and sort of trustless protocols for decentralizing AI, starting with decentralizing the governance of these AI assets.
Yeah, I have a question on decentralizing, like the data curation part. Like, how do we make sure that everyone that is contributing to the data set that is being used to train the model, contributing on the high quality data that is suitable for model training?
I think data is a very tangible space for decentralization because if you're looking at how data works for AI today, it's already very much distributed and decentralized, right? Everyone is writing their social media contents on Twitter, Reddit, everyone contributing to Wikipedia. And all these are already been proven to be super useful resources for powering the foundational model back in like a year ago. And now I think the next important trend for pushing this foundational model to be more powerful is really on customizations and personalizations, right? Meaning that the way I'm using models like GPT will be following my personal preference, my tone, my language, my cultural background, which looks very different from your way of using your model. And in that process, I basically talk to my model every day, all of the conversation being stored on the so-called memory or the history of these applications. and my feedback to those models are also saved in a way to improve the model. And this is a very continuous process to the point that my model in a year will be very much familiarized with who I am and what kind of jobs I'm doing, the people I'm interacting with, the type of questions I often ask. At that point, I think these personalizations is essentially powered by very personal usage data and conversation data and my connections to other personal applications like my Twitter accounts and so on. And these are very much needed to be protected, both in the privacy protection purpose as well as the values of this personal data, right? So I think down the road, it's not just about a population of data service providers trying to create a data set that is useful for AI developments, that kind of decentralization, but also about every single user who are using AI application, the generated user data and conversations and all sort of data connections to the model need to be protected and need to be actually attributed if the model owners or the model developers are using this data to improve the model, then they need to really give back the sort of revenue shares to those data providers they are leveraging and to create a more like a fair and open up the economic sort of mechanisms to every people who are not just just like feeding data, but also like talking or using these AI apps.
Yeah, as yourself, since yourself as you are in academia and then you are a professor, right? And you used to be a researcher. Since you have been in the academia space for so long, how does the conversation around AI and data ownership evolve over time? Like, do people aware about this more? Is there more talking point about this?
Yeah, actually, this is a long lasting topic in research community. There's many ways of people calling it. Some people calling it data pricing. Some people call it data provenance, ownerships, or some other different terminologies. But they are all pointing to the same thing. Basically, like if my data is valuable for the model in doing some task, then how should I trace that contributions of the data in the model's behavior, and how should I price that contributions to the model's behavior, right? Let's say today, if you ask GPT a question, and you're paying like a $1 to get the answer of that questions from GPT, that $1 might be actually attributing back to dozens of users who provided data points to GPT's training process that are influential on this particular answer or response the models are given, right? If I'm asking about sort of a celebrity sort of kind of the albums or their records in the past 1 year, then only the data points that are related to this particular celebrity will be useful. So it's only a subset of many of the data points being used to train the model will be relevant. And the providers of those training data points should be attributed for the revenues this model is making. This is called data attribution problem, and it's been a very important and timely problems. But the challenge of all these data attributions and ownership problem is that in order to calculate such contributions at the real time is very costly, it's very expensive. The cost to do that is multiple times of the cost to generate such an answer to your question. So in order to do real-time contribution attribution, it's still very, we're still looking at much more efficient algorithms and approaches that can make this sub-linear to the cost of doing the actual model inference, for example. So therefore, I think everyone want to achieve that goal of like understanding who own the data sets, how much I should pay to that data set, based on the specific usage of the model that are building on those data. But we are still a few steps, maybe a couple years away from doing this entirely in an algorithm driven way and in an automatic way. Yeah.
Yeah, that compensation is one thing that we have to figure out, right? Another thing that I have a question is regarding like the portion of ownership. Like you see, sometimes if we have different contributor, certain contributor may contribute more data, like a larger chunk of data, and they have a higher ownership of the model, and then they become a whale of the model. I mean, how do we, keep out of this kind of problem, like everyone get a fair share of ownership of the model?
Yes, that's a great question. Which goes back to my answer just now, right? So data attribution is not a global problem. It's not like a global problem. By that I don't mean like if I have 1,000 data points and you have 100 data points, it doesn't necessarily mean I I always contribute 10 times as much as you. It really depending on the concrete queries or the questions the model is answering, right? Let's say I'm an expert on AI, you're an expert on some other subject like biology, and we contribute different amount of data to the model's training. But when the model is answering questions about biology, it's more likely your data points are being helpful and useful, empowering the model's reasoning process. So you should get more revenue shares when the model is answering biology questions, right? Versus if the model is answering AI questions, I got more share. So it's a what we call it is a conditional attribution based on the actual query the model being asked. And I think that's a much more fair compensation strategy than a so-called global static participation and proportional contribution.
So I believe there are certain way of identifying this at the moment, right? So there is no concrete way, like one way to do it, but people are still figuring out how to do it, right?
Yeah, like I share, I think there are already some general principles of how to do this in this so-called conditional attribution, but the algorithm is very time-consuming to run. It's too expensive, so that people are not willing to run this kind of attribution methods. Let's say if you originally pay $1 for the model to answer a question, now you need to pay $10 to get that attribution being done. Still not in a usable and economically sort of an adoptable stage. But if it's lower the cost by 100 times, I believe everyone is willing to start using this technique.
What do you see is a bottleneck that needs to be solved in order to make it, usable?
Yeah, it's mainly on how to make the computation of this attribution I mentioned to be very efficient and low
Algorithm, right?
cost. Yes, the algorithm for doing that.
Okay, yeah. So, yeah, I believe you are wearing two hats at the moment, one as an academia and one as an entrepreneur, right? As an entrepreneur, Sahara AI just raised $43 million from major investors like Pantera, Binance Lab, and us, SCB 10X. So, can you walk our listener through like specifically what kind of problem you are trying to solve?
Yes. I think the core problem we are trying to solve here is to really build an ecosystem for an AI-driven future. And what that means, let me just expand on a little bit more on that is an AI-driven future doesn't just means AI being more capable, being more competent, but also means every person, every individual is power to create content and applications to monetize themselves in a much more efficient way. If you imagine in the internet generation, when we start having internet, it's because we have some network protocols and some web browsers that everyone can use. But back then, internet is not that exciting, but it really get exciting once everyone start using these tools like browser and the DNS and all these internet protocol to create content, post it online, and use that to exchange ideas, to communicate ideas, to become much more creative and connected with the rest of the world, right? And then the internet become really exciting. And I think now an AI-driven future is in a similar stage. We start having tools powered by AI that can help us to create content and sort of exchange ideas. It's in a much efficient way. Think about video generations can done in a couple minutes. Image generation can done in even seconds. And I can write a huge article based on my personal data within just a minute versus I need to probably spend hours in the past. So the time cost for you to present your idea to use leveraging your knowledge expertise, it's in a very different scale today. So think about AI as the new internet protocol as a toolkit, right? So what we are lacking in the new AI-driven future is the infrastructure to protect people's ownerships and sort of the governance mechanisms around these user-generated contents done by the AI, right? Let's say if I make an application today, how should I tell this application is developed by myself plus using another 10 people's data sets plus using another provider's GPU compute? And how can I trace these contributions and ownerships using blockchains rather than just putting everything in a centralized cloud server that is potentially will be hacked, will be modified halfway, right? Or being interpreted by the owner in many different ways. How can I make the whole thing 100% objectives and sort of transparent? So that's the core problem Sahara AI is tackling. We basically want to become the infrastructure platform for such an AI-driven future to power all of the content generators, application generators, to protect their ownership, to monetize themselves in a much fair and trustless way.
Yeah, I think you have already worked with multiple major big tech like Microsoft or Amazon. What kind of problem are you currently trying to help them solve at the moment?
Right. Sahara AI start launching their first milestone products, which sits on our application layer. This product is called Data Service Platform, right? And just to give a quick overview, another two main flagship products we have on our application layer is AI Developer Platform, which is also just live two weeks ago with ability to allow people upload data sets and register ownership over those data sets on chain. And then we also have an AI marketplace, which is coming up later this month. So Data Service Platform is our first flagship product, and we actually went to market focusing on serving some enterprise clients like Microsoft and Amazon back in 2023. And back then, we focusing on enterprise clients for a few reasons. Number one is we need to first validate our technologies for collecting high quality data sets is ready. So we look for the most challenging use cases in the industry back then. For example, with Microsoft, we work on math problems that are presented in a multimodal form, right? Both charts, images, tables, and questions asking those charts and images about math-related knowledge. With Amazon, we work on a lot of very well-known language model labeling and refinement problem, like red teaming, like writing in complex prompts, and so on. So through working on these most representative data use cases across different verticals, across different modality, we understand what the product's supposed to be looking like in order to serve these most timely and important data needs. So then we start refreshing and sort of upgrading our data service platform over the past year and so, and we then launched an on-chain version of this data service platform in December last year. So it's about half a year ago. And this version of the platform, we opened up to a wide list of 200,000 of users in the past few months and launched 3 seasons of user campaigns to allow them to earn our incentives like Sahara points and then work on very important and challenging data projects that are either published by our enterprise partners or published by other AI developers things across audios, videos, images, annotating data points for more useful prompts, red teaming the models, collecting data sets. All these are basically powered by the real business usage and bringing revenues to the protocols. And on just the data forms, we already accumulate millions of sort of revenues in the past year and so of the go-to-market. And we are actually going to open up this data service platform to public down this month, so that everyone can come to work on data projects they have expertise. And in about 2 months, we actually will launch a very important features to allow anyone to launch data projects in a self-serving way. Right now, the data projects still need to go through our account managers to publish. But then when you have the self-serving features, everyone can publish their data projects. And we'll basically close the loop of both the supply side and demand side, empowering a sort of open economies around data.
Yeah, I have a few questions. Can you elaborate for our listener a little bit, like what's the difference between Sahara data platform and the traditional data platform like Scale AI that
Yes.
also do the data labeling, what's the main difference? Yeah.
Yeah, I think the main difference is the concept of thinking about this as an open marketplace versus a black box process. Right? Scale AI is a black box process where they charge your data needs for a certain price, and how exactly that price got broken down in terms of how much is the margin belongs to Sahara, belongs to Scale AI, how much is the cost they're paying to the labelers is very unclear. No, there's no such data available. In fact, as we have done some investigations there, we figure out they probably will have 200 to 500 sort of a margin sometimes on some of the projects they are working for the clients, right? And then they are paying basic very little, even like just minimum wage for their employees who are the labelers that sit in the office in different parts of the world. So this is a very unfair economic relationship and business model for the data providers. Versus for Sahara AI, we make it an open marketplace. And the difference is very easy to tell through the business model. So the project was published by the demand side, which are these AI developers and business. They're paying a certain, they are willing to pay, say, $1,000 for these data sets. And these $1,000 will be published along with the project, and the data service provider on the platform will see these like in the marketplace, and then they will come to subscribe to pass the exam to work on these data projects. And once they finish this data project, they get paid based on the rate the publisher posted. And we are just taking transaction-based platform fee in the middle with a transparent rate, 5 to 10%, depending on the rareness of finding the labelers or the speed that we can fill up the demand side. So it's turning into a very transparent business model. It's totally transaction based flat platform fee, and trying to really become more like sort of the intermediate infrastructure provider of this whole data management process, rather than become the sort of the owner of the data set and try to resell these data sets to different enterprise.
Yeah, I think the data curation part will still be there, but the current trend, if everyone is following AI now, is like synthetic data. So there's like the data labeling, curation. I believe they're still there no matter what, but synthetic data is also on the rise. So what do you see the synthetic data and synergy with Sahara AI, with the data platform? How do you like help with the synthetic data direction?
Yeah, great question. We are embracing the trend of synthetic data, right? So we are creating this hybrid workflow where it's not just purely human collecting and labeling data, but it's actually human working with AI to create and curate and label data, right? Say if the task is to find high quality responses for some questions this model is asking, In the past, we will ask human to write this response from scratch based on a question. But today, human can become just the moderator to look at the response generated by the state-of-the-art AI, and then they start modifying that responses based on their thinking, right? Or they can look at multiple responses come from multiple top-tier models and then try to consolidate the answer to the best form. So this is just one very little example of how a hybrid mechanisms work between a human AI collaboration, and we are embracing this trend. So even though synthesized data will be useful, they still need humans monitoring and sort of a moderation. And I think that's where humans still become valuable in terms of like keeping an eye on this synthesized data generation process.
Yeah, so human in the loop is the way to go, right?
It's still the way to go for sure, especially for high stake application, right? You don't want the response from AI is totally just like without any human sort of interventions or monitoring.
Yeah, on this point, I want to touch on further notion on the, safety and bias. If we don't have the human in the loop at all, right, we would have a problem of maybe safety is lacking or there is a bias in the data. How do you think the platform could encourage the worker, to curate a very good set of data like low bias and then adhere to safety standard with the content moderation standard as well?
Totally. I think safety and fair are kind of like a very related, but still different concepts, right? In order to really have a fair data collections, the distribution of the contributors or the labelers are very important, right? How do you find people who are truly comprehensively representing the human population, right? Say, even if you look for an English audios collections of certain content, do you want to only collect these people from the North America, or do you want to really like include all of the English speaking countries over the globe, right? That's a very important design choice. So that design choice need to be really powered by the platforms such as Sahara AI that connect you to a huge network of this data service provider over the globe. You need to be able to find all of the people, all of the English speaking countries on our platform. So then you can really create a distribution that is really fair. So that's one part that we are trying to do in terms of ensure a fair and unbiased data collection and labeling. And then secondary is about safety, right? Like how would you protect attackers who are maliciously want to inject some bad data points into your data sets and trying to basically what we call poison your data sets to poison the model behavior. And we have a very thorough array of mechanisms for quality assurance to detect these bad performers and actors real time, right? For example, we have pre-task exam that can filter out people who doesn't have the right expertise or the right attitude on working on the task. We have what we call honeypot questions hidden in the process of annotation that can tag and flag out problematic actors, and we can ban them temporarily or even permanently from the platform. We also have very strong consensus mechanisms among the reviewers of those data points to make sure that multiple people looking at the data points to ensure they do agree on whether this data points is high quality or not. So then you have basically another layer of security on whether the data points looks okay to you. And we also like what I suggested earlier, putting AI in the loop, right? So if it's a human collaborating with AI to do the data point, so the AI here can also play a role of safeguarding on the data set quality and also on the potential malicious behaviors of this of a model potentially will have based on the data point. So all these add up together will basically create a safer workflows for building the data sets.
Yeah, we have touched a lot on the data side. Can we move a little bit on the model side? Yeah, what do you think is the bottleneck now that prevent enterprise moving from centralized model to decentralized model, and how can we overcome that bottleneck?
Yeah, I think the first question actually is what is a decentralized model, right? I mean, we actually don't see a decentralized model being defined and adopted commonly in today's especially industry setting. I think the reason is mostly because decentralized model, meaning that you split the model parameters over a bunch of different nodes and then trying to do inference in a distributed manner. This kind of paradigm still doesn't proven to be as effective to the centralized model, where you just place a huge model on a data center. Physically, the model is just located in that couple nodes that are connected within the server rack, and that's proven to be the most powerful, efficient way. So I think this is still mostly about compute infrastructure, the efficiency, and also the sort of the cost effectiveness of the inference on the model. Yeah.
So the model would be a bit difficult to
Yeah.
pick apart and then distribute it all over the place. Yeah.
Yeah. But I just want to quickly add on. We do see trends of agents being kind of distributed over different nodes, right? For example, if an agent today is built in a retrieval augmented manner, where there's a foundational model like DeepSeek is sitting on one data center, and the retrieval augmented data sets, which belongs to myself, is sitting on my personal computers or data centers, then there'll need to be communication between my database and the DeepSeek model in the data center. And that communication potentially could also be having high latency depending on the network situation between us. But there's some research work that's trying to make this whole communication more efficient and low latent, and with a low latency. So I personally believe that's also an important directions to go.
Yeah, since you already touched the agent things, and as we know, the agent market is exploding this year, right? How does Sahara envision the agent in the short term and the long term? And then how does the decentralization help this in the short and long term?
Yes. I think agent is a perfect example of a very, what we call a very compositional and complex AI assets, right? Building an agent these days definitely require models, maybe even multiple models that are interacting with each other within the agent. But the agent also require a lot of valuable data to power itself, right? It need to have access to your personal working history, the memory of your workflow. You need to connect to your business database, or you need to connect to the public social media channels or news agencies in order to create well-informed decisions. It also need to connect to many of the APIs. For example, we are building trading agents internally to power some of the ecosystem application. The trading agent need to connect to all of the APIs of the centralized exchange and decentralized exchanges, right? Being able to check your wallet balance, being able to swap tokens, being able to make multiple open positions based on the strategy it infers. And they need to basically both think and reasons using lots of data sources. Some are personal, some are public. They also need to take actions to execute the actions by giving them tools and giving them access to those applications where they will interact. And all this then involves all sort of ownership problems, right? If an agent is using your tool in order to draw a good decision, and they need to execute on some other people's application to get the actions going, then there's a very complex relationship between all of the three parties. Who is getting what kind of economic incentives in answering every single queries the user have. And I think going back to my problem, right? Even though the agent is built in a decentralized way, but we can And even the agents have a lot of physical infrastructure coming together in a centralized way. The ownership, the governance, the economic attributions should be done in a decentralized way and should be done in a trustless way, driven by the smart contract protocols that understand who has done what and how much they should benefit, right? So I think that's like how we view the agent building should go down the road.
Yeah. I think we have touched quite a few points on the data points, on the compute, and on the agents. What do you think is the most promising application of AI and Web3 in the short and long term?
Yeah. I think my answer to this is very straightforward. I think trading and financial applications should still be the killer application verticals for Web3 AI. Because number one, I think the majority of the retail users in the Web3 space are still very trading and finance driven, right? They look for the upside of investing into Web3 assets, tokens mostly. They look for yield opportunities to do yield farming. They need basically much more simple way to get to work on tradings and yield farmings over the Web3 space. And the user experiences today is still very complex and challenging. With AI, like I said, it might really close the gap of how you trade and how you do yield farming in the Web3 space. It also makes it much easier for you to create content and applications that allow others to do a much more streamlined trading experiences. So this is both open up the opportunity for developers and open up the opportunity for the retail users to really enjoy the power of AI. And I believe that's really an important vertical.
Yeah, thank you so much. Before we're wrapping up, can you let our listener know like what's next for Sahara AI, any upcoming product or partnership, anything?
Yes, we just launched our AI developer platforms 2 weeks ago. We have a data upload and registration user journey open up, which is the phase 1 of the AI developer platform. And we already accumulated 1.5 million of data sets registered on chain with about close to 100K daily active users on our platform. So coming down, we have another 2 phases for the AI developer platform. The second phase will be actually allow you to use our agent builder to produce your personal agents while also protect your ownership of that agents as well as the data set used to build that agents through our agent registration process, which is an on-chain registration. And that is actually to be opened up on 24th of this month. So, and that's gonna be launched together with our AI marketplace, which allow you to browse and discover all of the data sets and models that are useful for you to build an agent. So this is a one big milestone for us towards like creating a decentralized governance and sort of a monetization process for building agents. So please stay tuned. We'll have a lot of exciting product launch down this month.
Sure, we'll keep monitoring your Twitter account and then see what's coming next. Yeah, I think we are running out of time. Thank you so much, Sean, for sharing with us today.
Thank you, Naram, for having me. Excited to be talking about all these very interesting and important problems with the audience.
Yeah, see you next time.
Thank you. See you guys.
Nice to meet you. Today, we are going to talk about real-world adoption in the Solana ecosystem. Let me introduce myself first. My name is Ryan. I'm one of the co-founder and partner in Hashed. I'm based in Singapore and I'm looking for the good opportunity around the APAC region. Lou, can you introduce yourself?
Yeah, happy to. First of all, thank you, Ryan, for taking the time. I really appreciate it. I know you're very, very busy these days. Also want to thank SCB 10X for hosting, and we're really looking forward to this conversation today. My name is Lou, and I'm with the Solana Foundation. I'm looking after Asia. A lot of things I do for the foundation is business development, partnerships, and regulatory related. I'm very excited for this conversation.
Yeah, sure. Yeah, today we are going to talk about what really you are doing in Singapore with multiple partnership and regulatory reason of like the government. And can you share like your personal story? You worked in the JP Morgan and moved to the Fireblocks, and now you moved to Solana Foundation. And you already experienced like a traditional finance and crypto. So can you explain your perspective of like how we can build a sustainable blockchain ecosystem?
Yeah, happy to. And again, some of this is, I would say, from the Solana perspective, and some of it is definitely from my personal experience. So I will caveat that in the beginning. But yes, my background was classically trained in finance. So my background, studied finance in college in the United States, worked on Wall Street. And so I actually started my career right before the Great Financial Crisis. So I think having lived through the Great Financial Crisis actually on Wall Street at an investment bank doing IBD, kind of really opened my eyes to sometimes the fragility of how fragile the overall financial system was. I spent about 8 years in traditional finance, and then I was in tech in Silicon Valley for another 8 years before joining Fireblocks. So I think like having the ability to jump between capital markets, technology, and then now I would say digital assets like infrastructure has really supported me quite well being at Solana. Because Solana is kind of very open ecosystem where we work with a lot of financial institutions, payment companies, banks, but also games, DeFi project, and a lot of entrepreneurial startup related items as well. So.
Mhm. Yeah, you just mentioned like the traditional finance have a fragile environment, and blockchain also just the nascent environment, and also like there's a bull market and bear market cycle like it happen every 2 to 4 years. And like how do you think about like the vulnerability of a blockchain like a process? Solana is obviously very strong, robust projects. But in terms of like the projects, there are many volatilities in the market. So how do you judge which project survive in the volatile market, and what is the reason they can survive?
Yes. Man, that's a very good question, but it's also very difficult, I would say. So I think in general, I think there's a difference between early stage projects and later stage projects. So for early stage project, I still subscribe to the YC mentality of being very agile and being able to pivot quickly in I would say down market and to always check your fundamental thesis, right? In a bear market. So for example, Athena's team built something fantastic during a bear market, right? And even a lot of projects, for example, Jupiter also had to go through a very difficult bear market as well. So I think checking your fundamental thesis, and if you still believe in it, then staying committed to it and really grinding during the bear market because in that moment you'll have much less competition, much less noise. And if you have the right people around you and you've actually picked the right market, then you will have a much higher probability of being successful when the market returns, right? I think for large players who already have certain type of product market fit, um, I think, in traditional industries, I would say that they could potentially think about more optimization but for us, I think in our industry, because it moves so fast and it's still very frontier technology, I think they should also kind of double check their foundational thesis as well. Maybe perhaps a little bit less so because they potentially are, revenue generating and cash flow generating businesses, right? So for example, like Jupiter's size at this point, like how they make decisions is probably very different than where they were when they were smaller, right? So they potentially have to think about like at a certain size, they have to consider like the innovator's dilemma issue as well, right? It's like, do you disrupt yourself, right? Or do you continue to kind of build the way you're building today? And I think for them, to their credit, is that they're really thinking ahead, right?
Yeah, definitely I resonating like the market is too fast and project somehow like some projects they're always adapting the new condition and new market opportunity. But like I think at Eastern Solana, like OL1, they kept what they have to do and they deliver like the product to the market right at the right time. And I think eventually they can survive. And the next question would be now I believe we are in the bull market, but a mini bull market, I'll say. But yeah, I think the many project they have to put a lot of effort for making good ecosystem in the bull market, and and then like you said, after in the middle bear market, they have to endure that season. So in this bull market, what's your focus? What you will focus on, like, Solana ecosystem?
Hmm. I think for Solana, from our perspective, is the North Star for us is internet capital markets. For us, we really do believe that from the way that we built the technology, or the founders have built the technology and the team have built this technology, and kind of our foundational, like kind of our go-to-market, our business development is really all coalesces around this concept of internet capital markets. So for example, in addition to just bringing more and more stable coins onto Solana, driving circulation, we also work with large payment companies such as Visa, WorldPay, PayPal. And obviously, we work with large institutions such as BlackRock, Franklin Templeton. But our newest push would be to bring on more equities as well on chain. In addition to that, even doing on-chain IPOs. So we're working with Superstate quite closely to kind of achieve those outcomes. And we really believe that, and one of the thesis for Solana blockchain is being a all-purpose L1 is the fact that we believe liquidity begets liquidity. And so we believe you need to have cash, digital cash, you need to have the assets across different risk profiles, different durations, and different return profiles to be able to actually build a network effect and to create a healthy digital ecosystem. So internet capital markets is our North Star today.
Yeah, the very exciting days that you're walking with Wall Street like mega players like a BlackRock or Franklin Templeton, and definitely given your background, you must conversate with a bunch of institutional players. And how do you feel like no, I mean what's your main reaction when you come to them and you want to onboard them to the Solana? Then some of them will be very conservative, some will be very excited, and once they were very conservative, then what aspect weigh on to persuade them?
Yep. So I think, at the end of the day, we stand on the shoulder of giants. So, and also, I think just macro, right? So I do think that, candidly, the Bitcoin price will drive more attention, right? So taking advantage of those opportunities to have the conversations But more importantly, I think having the conversations with the right people within these very large and complicated organizations, right, is actually the key. Um, and and it kind of goes back to just the traditional like startup adoption curve. You have the early adopters and the late adopters and the laggards, right? So across those three cohorts, I think a lot of it is a team's ability. And I'm not speaking from the foundation, but as a project, for example, do you have the understanding of identifying these early adopters within an organization? The ability to go do kind of like stakeholder mapping within an HSBC or a Standard Chartered, right? Or a BlackRock. And then do you have the credibility and the actual knowledge base to be able to, educate them on like how this technology works in a way that they can understand, right? So I think that what I'm seeing, at least especially during this cycle, is that I think overall general knowledge from the teams that we've talked to is actually much higher now. So I've seen people who I met last cycle have actually entered into some of these traditional finance organizations. So even at BlackRock, I've met people who previously worked at Consensus, right? Now that our industry has matured, I've seen ex-Fireblocks people, ex-Circle people working in banks as well. So those are champions that you can leverage and who can not just us, talking to them, but they can actually educate internally. So I've seen that work really, really well, especially the last year or so.
Yeah, I'm very bullish on institutional growth and adoption. And like you said, actually, last week the Korea also changed a lot because new government came out with a new election, new president, and one of our colleagues joined to Korean government as a head of policy. So I think even not only institution but also like a government also changed a lot. Already U.S. hired like a David Sachs and all the like a pro crypto people to the
Yes.
government as a very important role, and that drive other governments move forward for crypto friendly policies. Yeah, very exciting days. And
Yes.
recently R3 was made a partnership with Solana. And I saw this name like 8 years ago, 9 years ago. And they've been doing it really great for like adopting institutional market.
Yeah.
What is the meaning of this partnership, and what kind of collaboration we can expect from this relationship?
Yeah, that's a great question. Number one, I would definitely say that it will be a very close relationship, right? We're very excited with the team to be working with this team. We have a tremendous amount of respect for them. And I've had a chance to actually meet them recently in the past couple of weeks in New York, or like the management team, the broader management team. So I'll take a step back and kind of describe kind of what we've seen historically speaking from like the adoption from the traditional finance teams, especially I would say exchanges or banks. So when I was previous at Fireblocks, what we typically see in terms of the deployment from the bank side is that they will really start with a closed environment, permission environment, and then they will just run tests in the beginning. Even though I would say some bank champions would say that, oh, we should only use permission environments, and because we have, large distribution, we're a bank, people will come to us. I do say that for most projects in those environments, if not all, have really not taken off because there was a lack of liquidity. And then probably after about a year or so of testing in that kind of closed environment, they will move to kind of Ethereum L1, right? And then after deploying the Ethereum L1 environment, they've kind of then also realized that to be able to scale is also quite challenging as well, whether it's from the settlement time or the gas fees, for example. And then now, kind of literally as we speak today, most of the financial institutions that we speak with, and we probably speak with all the major players, they want to work with us and want to build on top of Solana, but for them, they also still kind of have to go through that process internally, whereas like you start with they want to start with something that's kind of permissioned where it feels safe because they are a bank, so it's completely understandable, right? But they also want to have a path to a permissionless environment that's like a high throughput, high performing environment. And what we've seen in kind of the conversations we've had with R3 is like that's kind of what we're able to deliver the best of both worlds, right? As of today, I think on R3 alone, there's over $10 billion worth of assets, right? And they have a consortium of banks that have actually invested in R3, and they have amazing partnerships globally. So I think a lot of the partnership that we say is like we can kind of help them on the permissionless side and join forces to kind of make that transition for these large financial institutions. It's just a much more streamlined experience, right? Because the ultimate goal for them, especially a lot of the teams that are working on digital assets, whether it's like stable coins and or tokenized assets, they do want to have a path to deployment onto permissionless environments as an option, right? And instead of having to build it out every single time, we can provide that experience end to end with our three's partnership.
No, certain question, but what is the biggest challenge when you adapt to the bank? For example, like I think like money laundering issue or KYC, they'll be quite important for them. But permissionless environment, maybe KYC is not mandatory. So like some of the points there'll be a little bit conflict. So what's your concern and like how you fix it?
Yes. I think there's like multiple stages to getting adopted by a particular bank. One is there's like across, I would say, at least three verticals I can think of. The first one is the technology side. The second side is the compliance and KYC side security, and the third side is a business case, right? So typically you have to, and the business case means that you have to have a sponsor that potentially owns their own P&L, which is very important within a bank. So a lot of times you have to run these three conversations in parallel. That's ideal, right? So, and at different banks, you'll get kind of blocked by one of those three different or a combination of those paths. So, for example, certain banks may not have the IT team that can actually deploy a particular chain or particular feature that is needed, right? So then the blocker there is how are they going to go hire additional engineering resources, or do they need to kind of reallocate existing engineering resources to build out a tokenization engine, for example, right? The other times we've seen, and thankfully we were able to kind of pass all these hurdles within this bank. So I'm speaking from really painful experiences. But the second one could be the fact that they don't really have their compliance and blockchain assessment criteria set up. So it's very ad hoc. So basically, there's a lot of times you can be spent working with the bank's internal teams to help them build out a rubric of how do you evaluate a safe, right, and performant chain. So sometimes some banks have that already and they're ready to go. And then if you kind of fill it out and then they'll give you a feedback on it. Others, they don't even have that. So that could be actually the blocker, right? And the third one that we've seen is quite common is basically finding a sponsor from the business side. So you need kind of a business champion to kind of push a particular use case that he or she is interested in exploring. Because within a business unit, there's definitely opportunity costs, right, to launching these new verticals in digital assets. So the ability to kind of really understand from that stakeholder's point of view of why they're doing this, how they're doing it, and the trade-offs that they're making in very quantifiable metrics is quite important. Because once you do that, you're able to kind of help that person kind of get buy-in from the teams that he or she needs for this project to be successful. So I think across those three dimensions are potential blockers that you would see within a bank.
Wow, this would be a very good tip. even for SCB as well.
Yeah.
Also, no, the question be the BlackRock is coming in. They already made a video fund, Solana, and actually BlackRock is very, very active for bringing liquidity to on-chain. So especially, I think of course the regulation is ready, and the RWA sector is getting booming. So how do you set the goal and strategy to bring liquidity through this kind of hedge funds? And also maybe APEC region, are you talking with any this kind of hedge fund to bring more liquidity and assets, nice assets?
Yeah, it's a great question. Definitely we do, right? I think at this point, in Asia, we are talking to a lot of large institutions, right? Even sovereign wealth funds across different jurisdictions. So I think there is appetite to do so. And I think how or why we believe that Solana is relatively uniquely positioned for this is because our core thesis is the fact that, kind of as I touched upon a little bit earlier, is we truly believe that you have to have money and assets live in the same environment, right? Because if our North Star is internet capital markets, then you need to have DVP and PVP, for example, be completely available and as frictionless as possible within one ecosystem. And so that's why we believe, versus some of our peers, the fact that because of their structure, they kind of fragment liquidity, right? And basically you have to bridge down into main chain and then up to another chain. It creates a lot of friction, and not only that, potential attack vectors for the bridges, right? We don't believe that that's probably the ideal structure. We do believe that the whole point of having a permissionless environment is that you allow a compliant but the free flow of capital and assets, right? And so right now, most of the money market funds, et cetera, are not really, I would say, high velocity. Or they're basically achieving high velocity within permissionless environments. But we do believe that eventually they will. And then that's kind of where I think Solana will really shine. When the assets and money really start to move, I think just based on numbers on chain, we typically do more transactions than most chains combined, right, on a daily basis. And so in terms of trading volumes, et cetera, there's no, I would say, stronger place than Solana, historically speaking, right? We're not talking about test environments, but actual live transactions. And so we're quite confident that our ability for our technology to kind of manage those type of executions that's needed to really complement, Web2 traditional finance experiences, right? And so, yeah, we welcome more and more. We're working with a lot of different asset managers, and there would be quite a strong pipeline of new issuers coming to Solana very soon.
Definitely. I think recently the treasury Nasdaq listed companies are getting very popular. That's more like a price of accumulating the asset, but the ecosystem wise, so many stablecoin projects, decentralized stablecoin projects, bringing a liquidity to the ecosystem, like DeFiNE or this kind of yield bearing stablecoin projects are connected to Wall Street channel, and there can be a good bridge between a compliant company and a permissionless ecosystem. Yeah, my next question is as a APEC lead. So obviously you're talking with many countries around Asia market. So obviously the US is leading this trend or institutional play.
Yes.
But Asia also some of the countries are still very conservative. Some countries are quite active. Actually, Korea is getting quite aggressive for this institutional adoption. So I'm curious, your perspective, which country is leading this trend, and what kind of effort you're putting recently?
Yes, no, it's a great question. I think, the short answer is I'll be candid, like every region we're very, very interested in because we feel like, as you mentioned, the US is leading, but downstream consequence of that is that it has the attention of pretty much every regulator, every fund manager across every jurisdiction, right? So, I think the reality of the situation is just that a lot of it still depends on the regulatory side, right? I think in terms of the actual participants, like the stablecoin issuers, payment companies, right, asset managers and banks, they all want to do something, but they have to have the clarity from the regulators to say, clearly black and white, I can do this and I cannot do this, or they're not going to be able to get internal approval to move forward, right? So then how does that map to the geography of Asia? I think I'll leave Korea to you at the end for this conversation. But from what I've seen from Hong Kong's regulators, we're quite impressed with their ability to, especially from the sandbox and the stablecoin side. We're quite excited by what they're doing there, right? So I think that's absolutely heading in the right direction. Even the Japan regulations have really opened up, allowing USDC to be used as a form of payment in Japan. So I think these are fantastic signs, and that we're going to be investing quite a bit across these regions, including Korea. And then within Southeast Asia, we are definitely focused on the Philippines, Indonesia, and Thailand. I was in Vietnam last week. So we're meeting with large institutions, investment firms, and also the regulators as well. So I think across these jurisdictions, to us is we're open to we're seeing great progress across all these jurisdictions, but I also feel like to me the opportunity will really come once they kind of announce, hey, here's the stablecoin bill, and it's passed, and it's kind of has buy-in from, I would say, the participants, right, within the ecosystem. But as of this point, I think our focus is kind of across those countries, and then obviously Australia at the as well.
Yeah, sure. Yeah, maybe I can add some context about Korean market
Yes,
because
please. Yes.
yeah, already Korean market is very strong for the retail and they didn't stop any exchanges like China. China like 2018 they stopped all the exchanges and then they left like OKX Finance, everyone left. So now they're like stopped. But Korea, accumulating the ecosystem last 8 years. And now the new government announced like they're going to lead all the regulation, crypto-friendly regulation, starting from stablecoin and BTP ETF, institutional adoption, and even they want to go further. That like kind of issuing just an idea about issuing like digital ID to the foreigners and they can register and enter the Korean crypto exchanges and making more Korea to become a crypto hub in the world.
Mhm.
So for that, they do whatever they need, and especially all the banks are preparing, of course, like onboarding crypto treasury and off-ramp on off-ramp, and eventually, they will introduce more product. At the same time, like you mentioned, Japan already announced like a Web3 initiative 2 years ago, and SMBC or NTT Docomo or like MUFG, they're all like traditional finance. They're all preparing like crypto services for retail and institutions, and maybe like the other side would be the Middle East and Abu Dhabi are also very, very active for crypto adoption. Especially, they are bringing like a lot of crypto founders, and also institutions are preparing to establish the entity in Abu Dhabi. So I think the leading financial hub or leading tech hub, they're preparing this trend earlier than any other countries. I'm
Yeah.
pretty bullish about it.
Yeah. Do you feel like I'll ask you one question? Do you
Yep.
feel like in Korean, as on the institutional side, do you feel like there are more? I've had a feeling that they're also open to going outside of Korea too for these institutions, right? Not only like I would say bringing existing Korean institutional assets or money on chain, but potentially inviting overseas, obviously like I would say regulated, reputable assets, bringing inside to Korea. Or like and then going out again in the Middle East,
Mm,
set VAR and stuff like that, right? It's like a both ways are open to, right?
yeah. So I think the government is very, very rational. They already knew USDT is listed on Opbit.
Right.
So Korean government is very regulating quite toughly about FX market. So, but already, the people are trading USDT. That means that can influence to FX market.
Mm.
So they recognize it, and they will not, no, going back. They will adapt,
Mm.
new environment and regulation from this current status.
Mm.
So that means like, bringing more assets to Korean market, obviously, sure. And if the Korean assets are attractive enough in the outside of Korea,
Yeah.
then they will bring out, and there'll be a multilateral. So yeah, I think it's an obvious way they have to go.
Yeah. That's fantastic. I'm super excited for Korea.
Yeah, sure. And you mentioned like, payment and like,
Mm.
asset manager and like, of course, a lot of like use cases will come up. Especially in APAC region, what is the most excited use cases from your perspective?
Yeah. I think definitely the payment side. So for example, we have a partnership with Visa, WorldPay, and local, I would say even regional, like Unicorn PSPs. So I guess like okay, the way that we kind of typically look at the different players, you have on-off ramps. Um, you have on-off ramps that have done really well, right? And I think they will continue to be successful. And then number two, you kind of have the actual third-party payout the payment companies, and then you have the card issuers as well. And then you can cut it across another dimension, which is the size. So you do have large players like WorldPay. In the middle, as I mentioned, you have regional, I would say unicorns who are like, uh, be careful here with names, but like, let's say the D-Locals of the world and Nueves, right? Um, Actually, Nueve is pretty large as well. And then you have, I would say, bottoms up payments players. So teams such as like Reap out of Hong Kong, REDeFiNE, across those three dimensions, including also the what's it called, including also the on-off ramps, we're just seeing explosive growth, especially with the crypto native layer. Um, the numbers are pretty much like going vertical. I'm sure you've seen some of your portfolio companies on that side, right? I think the larger, I would say, global international players, they are ready to move into this space. And I think they have the right, and for the last 2 or 3 years, for I think the ones who are forward thinking, they actually have built out the right infrastructure to do so. So now it's more about driving kind of the adoption and kind of going to their merchant side, to their customer side to say, hey, this product is available. And then the one that I've always found more interesting is kind of the regional unicorns, the PSPs. And I think some of them had, I don't want to speak for them, but I think some of them had some issues with banking rails in the last couple of years. If they wanted so basically they couldn't really start the stablecoin business, which is completely understandable, right? But now they're able to actually have these conversations related to, launching a stablecoin side business, and still receiving bank support as well. So I'm really keen to kind of have educate them on kind of what we're seeing and what it takes to kind of build out that business. But we're pretty confident that that's going to happen, and some of it's already happening. So that's kind of how we see the world from the payment side in Asia. Um, and And then the second side, the money market side. And so to me, the clear use cases, and I think this one is also championed by OKX and Standard Chartered, which is a collateralization, right, of assets, of tokenized assets specifically. And then also the ability to use it for borrow lend as well, right? So those are the kind of the two use cases that we're seeing. So most recently, it's already been announced, but like Apollo ACRED was previously launched in Solana, but now through Securitize, it's also available in Drift and Camino on Solana as well. So the ability to actually engage with it within a DeFi environment is something that we're also very excited about. And we're actually going to we're working on with a couple of players within Asia to kind of replicate those type of use cases. And so that will allow the assets, as I kind of mentioned, where they're not just sitting static, right, sitting around, but they're actually being used in the in financial markets.
Mm-hmm. Yeah. First, like, you just mentioned about like a payment, and I'm usually like a crypto is used for the cross-border payment because like, Swift is too complicated and expensive, slow. And if you use a blockchain, right away you can send the money to the other side of the earth. But if you think about like a national payment service, for example, Korea, China, Singapore, like
Yeah.
their national payment service is already very, very efficient. So like blockchain somehow like they need to pay a gas fee, and like sometimes it takes more time if you use like depending on the blockchain the spec is all different. So how's the Solana positioned in the national payment service?
Yeah, within country, I do think it's more challenging because especially the products are quite robust, right? So I do think that, and I'm not just saying this for Solana, but I think in general, it's just like how do you compete against a different dimension, which is are you able to provide different services, different products that doesn't exist within their own closed ecosystem, right? So are you able to bring something overseas, for example, like for example, Apollo ACRED, right? Into this user's experience. Yeah. And I think that taking a step back, the way that we look at the world is that historically speaking, your payments experience as an end user and your investment experience as an end user is typically divided, right? Typically separated. But I think with our current, with our ecosystem, the technology that we're available, you're really able to combine the two. And I think some of the Chinese apps, super apps, have done some of it, but I don't think it's done to a point where it's I would say like a perfect experience. So I still think that there's room in terms of offering a true experience where, if you do have idle cash somewhere, it shouldn't literally, there's no reason it should be ever sitting into a checking account. It should be automatically swept into like a money market fund or something like that to generate yield. So I think there's still a lot of optimization that can happen that really can't, that can, I think those are type of optimizations that people would do when you have a permissionless environment, and the composability of payments and DeFi are kind of open and allow for people to experiment. Right. So that's kind of some of the things that we would be very interested in to supporting as well.
Yeah. I mean, like definitely DeFi and money market sides also they'll be very attractive for the user, and eventually people have a huge motivation to move their like the traditional bank account to the Solana wallet, etc. And my next question is quite related to this. So TradFi and DeFi is getting converging, especially in the New York. All the like traditional finance guys are coming out and they're building a CDFi again. So previously many CDFi collapsed in the last cycle, but now regulation is ready, and obviously like to bring like a more liquidity from the traditional finance. And there's a quite obvious direction to build the regulatory regulated environment, you have to make the CDFI type of product. So what's your view on like, there'll be a DeFi and there'll be a CDFI, like how much like a market will be divided, how much market share will be formulated, and what's the Solana's position? Solana position support more DeFi side or CDFI side, or making a balance? Yeah, just definitely.
No, I think so. I think like we will definitely work with everybody. I know it's a very, I would say, a very political answer, like a polished answer, but it's like we will work with anybody. But I think we have responsibility to do at least two things. These are two things top of mind. Number one is to drive mainstream adoption. So if our end goal is to drive mainstream adoption, we have to work with the centralized entities and try to move them towards more and more up into the DeFi ecosystem, right? At the same time, I think it's also the Solana ecosystem, different projects. And so it's not just the foundation, right? Is to push the boundaries of like technology, right? We should be on the frontier of new use cases. So specific examples I'll give you, right? Number one is kind of on-chain IPOs, right? So again, we're working with Superstate to push this I would say this a new vertical, right? It really hasn't been done before, like especially with within kind of this regulatory framework. But that's kind of what we're very interested in. Again, our North Star is internet capital markets. So I do think it's kind of Solana's ecosystem's responsibility to kind of be at the vanguard of that. At the same time, we're also working with Visa. We're also working with, Franklin Templeton, BlackRock to try to help the mass adoption side. So we actually do have to work on both sides. Now, in terms of specifically what is the right balance in terms of how much centralized something is and how less something centralized is, I think it's, I think the true answer really is like a lot of it's just regulatory dependent, right? I think like ideally we actually see experiments. It's like a spectrum. Ideally we see experiments, and I think that's the beauty of Solana ecosystem is just that the foundation itself, a lot of times we don't know everything that's happening. People just build on Solana and then somehow I find out about it like a month later, right? But it's like the ability to have the spectrum of different entrepreneurs trying different things of different flavor of decentralization or centralization is something I think only bottoms up experimentation will be allowed to find product market fit. I think it's our job to work with the regulators to actually build a hospitable environment and a clear set of rules and regulations where the entrepreneurs can actually find out what they can and cannot build. But in our mind, we do believe that, the ultimate goal is that we do believe, truly in DeFi, and we believe that there's the value proposition of decentralized finance in a compliant manner is something that we're obviously pushing for.
Yeah, it's exciting. I mean, internet capital market is very like tempting work, and eventually like I'll see the converging like DeFi market and traditional market. It's a really huge market.
Yeah, absolutely. I mean, at the end of the day, it's like I just think that maybe it's pretty obvious to me, but it's just like everything else in your world is 24/7. It's on the internet, right? And at some point, the capital markets will come as well, right? It has to meet the needs of the lifestyle, the experience, and the needs of the end users. And so demand side will actually pull this into reality.
Yeah, my last question will be for the audience here, like there'll be some institutions, some retail, some traders. So how they engage with Solana ecosystem? Anything you want to share to the audience?
Yeah, please go. I think if you're a founder, feel free to look up Super Team, Solana Super Team. I think we have them in like over 20 countries. So these are, teams that are ecosystem teams that are really there to kind of help you walk through what it takes to build, help you potentially fundraise, give you direction in terms of go to market, even help you find co-founders. And they've been, wildly successful and have are just really nice people that can kind of help you along the journey of building out Solana. And also feel free to go to Ryan for investment.
Thank you for the advertisement of the test. Yeah. Yeah. Thank you today, Lou. This is my last comment, and thank you for having us at CP Tennis. Yeah.
Thank you.
Thank
And
you.
next time I will ask questions to you, Ryan. Looking
Sure.
forward to it. Thank you.
Okay. Thank you.
That concludes REDeFiNE Tomorrow 2025. Thanks to all our speakers, moderators, and viewers across the globe who joined us over the past 2 days. If you missed a session, don't worry. Replays will be available on SCB10X, YouTube, and Facebook. We would love your feedback. A QR code will appear shortly so you can share your thoughts. To stay up to date on everything SCB10X, follow us online at scb10x.com and on our social channels. Until next time, thank you and สวัสดีครับ